on Tasty Live. I'm Glenn Freiberger, and joined with me, the maestro,
How are
Pete
you, my
Momat.
friend?
I'm
It's
doing
so
all right.
good to close out the week with you.
Well, thank you. I'm honored to be here. It's
Yeah.
always fun.
Again, we know not to intrude on Frank's spa day. So Fridays are usually spa days.
Right.
We get some visibility around. Usually when he surfaces, he's got those sandals on with the little Kleenex between the toes
Yeah.
as
and,
the pedicure dries. But
and the little heater under his desk. Yeah.
yeah, so
It's a whole operation, so it's better that takes place at home than right here. So
yeah,
it's a win-win for everyone.
I think it would be a disturbing visual for so many reasons. But no, it's great to have you back on again. You're a good sport for jumping on twice. Bridget is international as we
She
speak,
is,
so
yeah.
she will be back next week, which is exciting. But we got Friday. You've already started your Friday, I'm sure,
Yeah.
last night. So run us through what a
Well, last night, a lot of fun. Thursday night, always a good time. Went to a darts bar.
darts bar.
With Frank, actually, and a couple other coworkers. Very nice dart board. Very high tech. It's cork, but they have like game features.
Oh, so it does
Yes,
the scoring
it
for
does the scoring.
But
It
is
has
it
game
real
modes.
cork or is it because I've got one of those that's got like the little spindly things where you.
No, yeah, it's real.
It's
good.
real.
They're very nice boards.
Okay.
I wasn't at my best, but I beat Frank one time. There's a mode where it's like survival. You have a number and you try and kill other people's numbers. So that's a
That's
fun
fun.
one. And the best part is they have like a camera. I didn't know this. They have a camera on the participants, and when you like win a game, it'll instant replay. And one of our coworkers, Rob, hits it, turns around, looks at me, and stares me down. That was pretty funny. And then the next one, I hit it to equalize, go to overtime, and I gave him a nice finger point. So all good fun. But yeah, pretty cool place right there on the lake, on the river, on Wacker.
Oh, okay, fantastic! Look at you. Okay, so you warmed up with some darts, some coworker bonding.
Yep.
And
And then I
now
went
we move
home.
into, and again, we're curious to see how girlfriend, not girlfriend, maybe yes, maybe no. Where does
Definitely
Ani
yes.
fit into this dynamic?
I actually-
or again,
I
we
actually
can call
did.
her. We've got Racer X for Bridge. We can call this Racer Y. So Racer Y.
Yeah, Racer Y is great. I actually did see her directly thereafter to pick up an air mattress. We've got 3 gentlemen staying at my place this weekend, and while we have a lot of bunk beds already, we did need reinforcements, extra air mattress. So that'll be good. Should be a fun weekend. Got a couple my friends in town, and then one of my own friends as well.
And the agenda is, see, this is the problem. We would actually have an agenda. You guys, I am guessing it's all to be worked out.
Absolutely, yeah. Unfortunately, sometimes people look to me for a plan.
There's usually one guy,
I
but
have
again,
no plan.
You've got 7 guys, no one willing to commit to concept.
Exactly.
Which is utterly amazing to me. It's just
yeah, we do have Friday or Saturday. We have a fundraising dinner for a local youth sports nonprofit.
is that
so
supposed to
that'll be
make me
fun.
feel better about it because it's a charity event?
Yes.
Okay, that's
It'll
right.
work.
So you'll go to that hungover. How hungover will you be?
It's at night. I should be good by then.
Oh, is that it?
Yeah, it's
you've
at
got
6, so
Now-
we've got the whole day.
And do you guys actually take advantage of that mobile truck that comes by and gives you the IVs afterwards and stuff like that? Is that part of is that the only thing you can book appropriately, like at 3 a.m.? Does that work?
I'm hoping they have one of these at this sports facility we're going to. They're supposed to be showing us all these state-of-the-art stuff they're giving these children. So maybe they get IVs too.
Okay, I don't know.
I'll try it.
So, all right, Friday, Saturday, you're all set. Sunday, rest and recovery.
The Lord's Day, yes, of course.
Oh, my God.
Probably a lot of football.
You're like Al Pacino in The Devil's Advocate. I'm sure when you go in and put your finger in the water, it boils. But
Yeah.
very good.
Yeah,
All right, so
nothing
no
much
plans, 8 guys out on the town. This isn't going to end poorly. What's the over-under on back at the cave Saturday night / Sunday morning? Is it 3 a.m., 4 a.m.? What's What are you willing?
Two's a good time. No one. There's no chance that we all make it back at the same time.
Of course not.
Yeah, it'll be very
Because like the
staggered.
Marines, you have it's different than the Marines. You are willing to leave a man behind. Okay.
for the greater good.
Okay.
Yes. But yeah, luckily we leave our door unlocked all the time.
Which is always, that's, again, out of all
Hopefully
the things
no
you
one
should
knows
share,
where I live.
it's a relatively safe audience here, but yeah, that would be one.
Yeah. So yeah.
I will be posting his address after the show. So anybody who wants to know where you
Come
can get
right
a
in.
recently used air mattress, this would be the spot to stop by.
What do you got this weekend?
Not a lot.
No travel. That's a good thing.
No,
There we go.
no
That's a win.
travel.
Congratulations on wrapping up the Tasty Live
Yeah,
event tour.
it was a great
tour.
It was a great tour. It was really fun to go out and meet with everybody, and excited about. Tom's already planning next year, and hopefully we can be part of that. And
Nice.
you and I hit a couple of cities together, which was really fun.
Oh, yeah.
And it's so great to level set with everybody because you really get that feedback. This being a relatively new product offering, a lot of people are like, don't quite understand it yet, but it's interesting, and that
For
it
sure.
really speaks to the pain points around product adoption, and something we're going to continue to work on is making the reason why you would look to bring FX into your portfolio and how best to engage with it are all going to be things we're going to continue to deliver through the platform, through the content that Glenn helps drive so much of, and through engagement in events like that. So that'll be fun, and you'll see this guy's face both in person and on air more and more often.
There you go. I don't know if that's a win, but I'll take it. Or a pro for the audience.
It's
but
a win.
hope
Now,
so.
does Racer Y tune in and watch you on occasion?
On occasion, only when I bring up that, I might have said something.
So it's not a positive critique. It's more of a negative critique.
Well, I always have positive things to say about her, and that's the important part. Right?
Look at you. Wow. Just
But it is early.
stacking sandbags. Well done.
Even my mother will only watch the replay
And
because it's quite early. She's on Eastern time, too, so it's a little later. But
and now, how does Racer Y figure into this whole weekend of guy stuff? Does she just kind of take the sideline, or is there a cameo appearance? What works with that?
there will be some cameo appearances.
okay.
I hope.
Okay. Again, unscheduled, unplanned.
Right.
All right, unscheduled, unplanned. Let's take a look at the markets because we certainly,
Great week.
Yeah.
Exciting week.
Election, we saw the dollar scream. Yesterday was taking a lot off the table with Euro up a big chunk, Aussie leading the rally higher. So Aussie actually, we got to a point where we were past where we were, what we had given back in the election. So Aussie not hit as hard as Euro and some of the other, Sterling, some of the other pieces. Bouncing back to levels above where we were post-election, which is interesting. And we talked about this on Wednesday. It's interesting it's not down as much. Is this a little bit of, what is it? Is it China? Is it gold? Is it flight to quality? And again, it's always an amalgam of all of them.
For sure.
But I think we're seeing a little bit of that play through of, and this is an interesting point because sometimes you look at it and say, well, Aussie's only down 80, Euro's down 250. That's disconnected. I should buy Euro and sell Aussie. In moves like this, you kind of take the momentum and the fact that this hasn't released as much as there are a confluence of reasons. One being that
100%.
we're at the low end of the range.
Yeah.
And
going
we
all the
didn't
way
take
back.
out that range. So the challenge to being in a new level, which Euro clearly was, is not here. So we've actually seen this go out the day yesterday, right on its highs, well through those levels, but give back a little bit of gas this morning. Now, we've gone through an election, Fed announcement, pretty much as predicted. They raised rates. Not a lot out of the press conference. A lot of questions. Again, these guys all asking, are you going to stay or are you going to go to Powell? And
Love it.
I mean, what do they think he's going to say? Well, I'm done with this. I don't like the guy. No, he's going to.
Maybe one day he'll crack. Maybe someone from Reuters will finally say the magic words.
And it's so funny. You know what? I don't watch those things because they're frustrating to listen to. But just looking at some of the highlights, it was like 6 guys asking the same question, expecting a different answer. It's like move on to something that's actually relevant within.
Or that he'll answer, like
Right.
give a good answer for, yeah.
Right. And I mean, the takeaway was the Deets cut is still in play, which actually I think is probably the one thing that added a little bit of lift to us
Yeah.
post FOMC announcement, which is 1 o'clock our time in Chicago. We saw that play through, but that given back a little bit today. So it'll be interesting. We've got Canadian unemployment at 7:30. So if you're trading dollar CAD, that's one you want to watch. And we'll walk through what the numbers are in a little bit. But dollar CAD.
Yeah, right here around this 139. I mean, it has been, this has been one of those crazy weeks where you're always watching the prices as they're printing. And you're saying, wow, this is really low, this is really high. And then you look on a Friday, and you're like, wow, it actually kind of day in, day out held this range.
Yeah.
And we're really sticking to this 139. So yeah, we'll excited to see. Unemployment has been really bad in Canada.
Right.
Expecting to just get a little lift off of, still in the 6% range. But do you think, I mean, this Canadian dollar's been beat up pretty bad lately. Do you think maybe this is the straw that finally, if it's good news, maybe it sends a little strength back into the Canadian dollar?
We'll see. The initial reaction will be a little bit of Canadian dollar strength, dollar Canada weakness. Whether or not it holds,
Yeah.
we'll see. Oil keeps creeping up, which isn't helping Canada. This is when we have dollar moves. It tends to be that Canada kind of attaches itself to the dollar and just follows that to a more muted reaction, and that's
Right.
what we've seen here. This is the one unique driver to Canada that may break us out and get a little bit of a stickier move. So you'll be mindful of looking at that number and seeing how the market reacts to it. I've got to imagine Friday we're going to see a little bit of exhaustion. So I don't think we'll necessarily see as much back and forth. I think this is one where people are going to kind of look for some initial moves in the morning. And I imagine by the afternoon, it may thin out a little bit. So what are we looking for? Any change? Little bump up in the unemployment rate itself to 6.6%. But the one thing they look at is the participation rate right below it. No, I'm sorry, employment change, Glenn. I'm sorry. So, and this is one so they forecast 25,000 in jobs growth. Previous was 47.67, but I think they were looking for a much bigger number. And they
Okay.
continue to see smaller numbers on that. So it'll be.
And they won't have a hurricane affect their numbers, right?
Right.
Do they have any labor strikes?
I don't think so.
All right.
So
So we should get a true number, truer.
right, and this is it seems their employment situation is slowing down a little bit more than the U.S.'s. So it'll be interesting to see if we get a little bit of outperformance, because the number each time has, as it's underperformed, dollar Canada has rallied, Canada has weakened a little bit. So it'll be interesting to see if we get something, if we get a print above 50 to 60, you got to expect dollar Canada to the initial reaction 7:30 will be a break. Whether or not it holds or not will be interesting to tell. Because if it sticks, maybe there is a little bit more work to be done
Yeah.
on the downside. But if there are buyers just waiting to buy dollar Canada down there, you'll see us back to unchanged by 9 o'clock. And that would lead me to think there may be a little bit more work to be done on the upside of dollar Canada. So this is one that will be just really specific to Canada and really won't lend to any of the other pairs. So if you're looking for some back and forth, again, take the scalping range we had. Do you remember what the Canada number was?
In the 30s.
Right. I would
Similar,
I
yeah.
would double it for this and look on either side of 60 bips to see if there's something interesting to trade here.
Do you think there's any interest here in this cross? We've got Australian dollar, Canadian dollar. Is that a place to look?
You know,
I haven't pulled this up, but
you could
similar
a little bit.
moves.
Can we tighten it up just a little bit? Roll the other way, my friend.
oh,
There we go.
interesting.
Yeah, I think what this is telling you is what's driven this is the Aussie moves.
Yeah.
Both up and down. So that continues to be the case. Aussie over the last couple of days outperforming Canada to a dramatic degree. I think this will drive the Aussie Canada cross because of Canada, but we're really kind of back into the higher end of a congestive range here. So I don't necessarily see this being the play if you're looking
Okay.
to trade the binary event.
Stick to dollar CAD.
Yeah, and this will be interesting because if we do get the higher number and we get a trade down north of 138 and a half, that would show that we're challenging the bottom lows we saw. If it stays there, chances are they'll do a little bit more damage to it. So in other words, they'll get a little bit more Canada strength. But if you start to see immediately that get bought up, I think it's going to have a problem since we're up right near the highs right now. It's going to be harder to say I want to be short dollar Canada because we're at the extreme. Because this is one where the tape action will actually kind of give you a clue as to are there people willing to buy any dip here?
Yeah.
And if there are at the upper end of the range, you want to be mindful of possibly leaning into that dip a little bit. But let's take a look at Euro because that was certainly the outperformer, and it's given traders exactly what they want: big moves, and both ways. So you've been able to trade both sides of this market, from the short side, from the long side. We ended up on Tuesday. At one point we were down almost close to 300 pips. So, but right now we're kind of in a little bit of that congestion phase, but a very different chart. Now remember, when we looked at Aussie, we had where you see that those three big spikes out. That was the market coming very quickly to aware that
Yeah.
soon-to-be President Trump was going to take office, and Vice President Harris was not. Have we bounced off those lows, sub 107? Absolutely. But not to the extent, think about that Aussie chart had taken back all of its break
Right.
and is trading higher. So Euro is still, and I think this is why this will become an interesting trade. Right now, what this is showing me is the market's trying to figure out. Some guys are looking for bottoms here. That a 250 point break was a really interesting level, considering we breached 112 60 days ago.
Yeah.
This is a big move. That's 5% in FX. In the matter, on average, we move about 3% a year over the last 30 years. 5% in 60 days is a big move. Will be interesting to see if we kind of fade back to the lower end of this range. In other words, the best they could get out of this was yesterday, a little bit above 108. And do we fishtail a 107 and a half, which is 107.70, which is where we are right now? There's cases to be made for both, and interest rates will play into that discussion a little bit. Bonds were higher yesterday, which helped the dollar bid a little bit. Bonds continue to rally a little bit today.
Yeah.
So that you would think should be a little bit Euro bullish, Aussie bullish, dollar yen bearish. But we'll see if that plays through, because we had the low put in. We had a solid day yesterday. It's Friday. It will be interesting to see. I think one of the good things the election did is, well, not only did it give us some volatility in trade, but it took uncertainty off the table.
Right.
Now, we don't know what is going to change, and we won't know until January. And depending on how they still haven't settled who actually is going to be in control of the House. And you'll get it if the Republicans control the House, the Senate, and the presidency. They're going to have a lot of power to
Right.
impact change quicker. They don't control the House. They still have an ability to impact change, but it's going to be a slower pace. But the markets tend to digest that very quickly. So it'll be interesting to see if we actually get some clarity on that. But removing that is kind of a good thing for traders, because I don't have this random event hanging over
Right.
my head. So I think you'll get a little bit more clarity, a little bit more comfortability. And again, this is up to every trader how you manage weekend risk, because one of the great things with FX, you're at it, you can get at it 24 hours a day. So that
Definitely.
means you can manage your positions when you want to. You can use a stop if you're so inclined. So that's great. You have 2 days of event risk where you can't get at the market, not till Sunday at 3 o'clock our time, 4 o'clock Eastern time. So you want to be mindful that you've got a little bit of, non-access risk.
Right.
But there's less random binary events. There's always things that can happen over the weekend, but there's less of it, which should give everybody a little bit more comfort of, I can keep my ideas in place and I don't have to disassemble them. Now, every trader should go through that exercise Friday and think about, am I comfortable holding this in to the weekend? And are there things out there that could disrupt it? There's always the unknown, and there are things like some of the geopolitical events in Ukraine and the Middle East that are happening. Do they have a direct dollar impact? Not as much as some things like crude and other markets, but removing that uncertainty is a good thing because it kind of we get past the election noise. Whatever policies will come out will be the policies, but we'll get a little bit more elasticity back into the market, and I think that is a really good thing.
Yeah.
So,
curious.
what is your focus going into the end of the week?
Well, yeah, I'm actually a little curious what your thoughts are on one of these events. We've got Chinese inflation data.
Sunday night, right?
Yeah. This looks like it's today.
Oh, is it today?
Yeah.
Okay.
Which makes it interesting. And the only reason why I bring it up, I wouldn't normally look right to Chinese inflation, but we did see, of course, a lot of trading activity in the Australian dollar.
Right.
But yesterday or Wednesday night, I think it was, their export data really gave a lot of strength to this Australian dollar. So maybe there's a chance people are looking, do you think, a little closer at this Chinese data?
Could be. And you make a great point that, again, that tie into to China, it tends to show up at certain times and doesn't.
Right.
Now, when the market's bullish, anything bullish out of China helps.
Yeah.
Anything bearish out of China doesn't. So it really kind of, it reinforces structure that there is a little bullishness at the low end of the range here in Aussie. So it's good you brought that up. It'll be something interesting to see because it does come through our time zone. Michigan sentiment, the market reacts to.
Right.
Hard
to believe it's one of the...
Again, knowing a Michigan grad, and again,
they could say anything.
the double major, it's the only school I know you can double major in small animal husbandry and math, which is an interesting exercise.
And the sentiment is either 2 thumbs up, 1 thumbs up, or 2 thumbs down,
or
right?
sometimes you're just missing the thumb, and this is all you got. You lose
2
the digit.
hands up.
Yeah,
2 hands down.
2 paws
2
up.
fists.
So with that, we're going to wind up this weekend, this week of Forex Focus. Glenn, thanks so much for jumping on. Great walkthrough. In the next couple of weeks, we're going to talk a little bit more about product and understanding swap rates and some of the other pieces that make FX interesting and approachable. So stay tuned for that. Have a great weekend, everyone. Coming up next, Tom Sosnoff, Tony Batista, Vanetta Logan. We'll see you back here next Monday.
Thanks, guys.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We are ready to build. This is make or break for this team.
It's down to the last 2 minutes, and it's time to rock and roll, baby.
That's all I got is 2 minutes, and that's on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes. Shalaka.
Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Take one. Hey, baby. I like the looks.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Hello.
Hola, Thomas. Are you packed?
No.
When do you
You don't-
leave?
Huh?
When do you leave?
Tomorrow.
Okay.
So you
Right.
leave tomorrow for Europe, and you haven't done your cruise wear shopping yet?
I haven't done anything. I got all day tomorrow.
All day tomorrow. All right. This
I got
is
all
great.
day tomorrow. I got plans tomorrow too, so I'll be fine. I got all the stuff to do. So
Is the sport coat making the journey to the across the pond this time?
no. Last time I got roped into having to bring a sports coat, and all I wanted to do was leave it there. Maybe I did. I will not do that again. So
Okay.
Well, you've left expensive sports coats all over the globe. I heard about one you threw out when you had to go to like the NASDAQ or something. You threw that into a garbage bin on like 42nd Street.
yeah. No, I've messed up a lot on sports coats over the years, but my worst experience ever was in Melbourne, Australia. I got
Yeah, there you go. Globally, worldwide.
I got there and I had to go to a Australian rules football game because it was the event I was going to, and they told me I needed a sports coat to get into the club at the stadium, and so I'm like, oh great, I don't have a sports coat. So I ran down the street.
So you wore your wife's blazer?
No, but I almost
It was Chanel, honey.
I almost pulled off my cousin Vinny thing where he walked into a thrift shop, and bought like a blue tuxedo.
A pink tuxedo?
Yeah. So I walked into a men's clothing store and I was like, do you have any sports coats? And the guy points me to a rack and I'm like, I grabbed one that looked like it was my size. I literally had 15 minutes. I just grabbed one, walked up to the counter, how much is this? He goes, $1,500.
Okay, first of all, what kind of store did you walk in? You're like, I walked into a store. Of course, it was the most expensive high-end store. Like
I
on the
was
Gold Coast.
whatever was like in the down next to my hotel. I mean, I have no idea. So
Yeah.
Nah, Vanetta, the dollar was much weaker back then. That's what.
no, those were U.S. dollars. And then the worst part was I got to the stadium. So like I'm wearing the sports coat, and all the guys there that I was meeting go, "What are you wearing a sports coat for?" I'm like, you guys told me.
It's a sport. It's a sport coat. It's a one coat. There's not like sports. It's not like you could play multiple sports, but it's just a sport coat.
So they go, "What are you wearing a
you.
sport coat for?" I go, "Because," and the sign said sport coats required. And I'm looking at these.
That's just a joke we play. They said that's just
Yeah,
a joke
exactly. They're all
He just
wearing
infuses capital into the Australian economy.
They're all wearing like, jerseys, and I'm in there like a dumbass in a sport coat, and I'm like, they're like, oh, you messed. Australians are not exactly it's part of their culture to make you feel horrible.
That's not true. Oh my God, that's a terrible sentence. That's not true about the people of Australia.
Is
and
that
I
their life
apologize
goal?
on behalf of IG and the family of companies.
The guys in Australia absolutely love it when they can make fun of you. It is part of the culture. If they have an opportunity to pounce all over you because you're an idiot, then they take every advantage of it in Australia. And
I welcome an Australian man to pounce all over me.
Even if you're done, you feel like an idiot. You're fine with.
Yeah, he could go down under. He could tie my kangaroo down.
He can put another shrimp on the Barbie.
let's just say they had a lot of fun at my expense.
Hey, Vanetta, you call that a knife?
That's not a knife. That's a knife.
Yeah, no sports
Call me a
coat.
boomerang because I came twice. Okay. Good night, everybody.
You got to join in on these, Sosnoff. You got to join in on these. These are good. Oh.
Now, I'm actually.
But you need to bring a rain jacket, Tom, to the UK.
I'm not bringing a rain jacket.
Just...
In fact, I'm only bringing t-shirts.
What? No. It's fall in. Okay. All right.
I'm not even bringing
Don't
pants.
teach him.
I'm not even bringing pants.
You're just gonna go like Wisconsin, like hoodie and shorts.
You got it. No, I don't do shorts.
It's the way. Wait a minute. As your body runs so cold these days, a high of 50, a low of 44 is not going to work for you with a little bit of rain.
I don't do shorts, so that won't be shorts.
We are all thankful for that.
80% humidity, high of 50, low of 40.
Where?
London.
Oh, London. London's 80% humidity every day.
Okay. Edinburgh's a lot better. It's 52 to 42.
How about Edinburgh?
Edinburgh, sorry.
So wait, Tom, you believe in humidity, but you don't believe in wind chill?
I didn't say I believe.
I'm just trying to figure this out. Like,
first of all, I didn't say I believe in humidity. It's
okay. There it is. Nope, they both exist, but they're both okay.
Uh-huh.
All
I'm
right.
not worried.
Well, I hope you have safe travels, Tom, and you get to
I will. I'm actually
meet a lot of cool people. I saw on social, I monitor the social comments. There's a gentleman flying from Finland to the UK coming to see you. That is dedication.
We have,
he's actually representing. He's actually representing the chat room.
No, we have a bunch. We have a whole group of traders coming in from Italy.
Well, because once you're in Europe, you can fly anywhere in Europe for like 20 euros.
Yeah, you don't. It's not that easy, but yeah, people are coming in from everywhere. It's going to be fun, and then and I'm also really looking forward to. I have a couple of hours. The only city I have a couple of hours extra in is Edinburgh, so I'm really looking forward to that because it's supposed to be beautiful. Never been there.
Well, wait.
Good.
Oh, go ahead, Bet.
Brit just DM'd me. She says she's not giving you her rain jacket again. So I'm just telling you right now.
He's gonna have to like go buy like one of those like tourist ponchos.
Oh, don't be like one of those Disney poncho people, like where you have like the see-through poncho or something like that you wear.
And it's got like a castle on it.
Yeah,
Oh,
don't do that,
no.
Sal.
I just use a plastic bag. It's way cooler.
What about a bonnet for your hair?
You can use a brown one for your head too.
A babushkin.
I'm just saying it doesn't.
It's a babushka.
A babushka.
Raincoats
babushkin.
that fold up so small. Okay. They make raincoats that fold up so small. I hate you both.
Yeah, you can get them from any like mountain climbing store that you go to, Sosnoff.
Yeah, I go to a lot of mountain climbing stores.
No, the REI is right there. It's close to you. You just
If
go.
I'm on a mountain, it's because the plane we were on crashed into a mountain because there's no chance.
Don't say that.
Well, there's no chance I'm going near a mountain.
Well, it's hilly. It's all like cobblestone streets. Like there's elevation changes.
I don't do elevation changes.
Will you be bringing your boots with the spikes in them?
Yeah. Oh no, I can't. Because those
can't fit them.
TSA.
No, you can't go through security.
Yeah, I said TSA. Okay.
Okay, so you're not checking a bag.
I'm not checking a bag. No.
That was my question from yesterday. You said you were going to check.
No,
a bag.
He's gonna bring a carry-on bag. You said bigger than a backpack. So he's bringing carry-on. He's not checking. So I
haven't checked a bag in 20 years. I'm not checking a bag for anything.
Got it.
But it's not always up to you. Like, well, I guess if you're flying first class, because sometimes you run out of overhead space, and then you have to check your bag.
You're not using our slush fund to eat up all of our slush fund with your first class ticket, are you?
We're not flying first class. We're flying private.
You're borrowing Taylor Swift's jet. She's not using it right now. She's yeah.
First class was too pedestrian. We're flying private.
Okay.
That's my boy.
Do you know what they're serving for dinner on the flight? Did you look it up already?
Ooh, the Vindaloo chicken. Don't forget the Vindaloo chicken, Tom.
Did you pick? Are you going pasta or like this should be nice because it's international, so that's like another level.
There's no way you picked.
I don't think Aer Lingus is.
Lingus, what?
I'm not looking forward to the food.
My God, what class are you?
My guess is it's beef cheeks. It's always beef cheeks. But I learned. I told you. You just go for the pasta.
Go for the pasta.
Oh, even though Italian food sucks. I got it.
No, but you can't really kill pasta in a microwave. It's pretty good.
That's true.
Yeah.
Bat, how about you? I heard you're off on some adventures this weekend as well.
I am. You know, if you see Tom all over the UK in exotic places and fancy hotels and private planes, you take a picture with him, send it to me, bat@tastylive.com. I'll send you some swag. And you know what? If you're in the 900 miles of the Jacksonville area and you find me, take a picture with me. I'll send you some swag too. I'm going to Jacksonville to meet my niece. Frankie in the chat room. It's really my niece.
I have so many questions.
Usually, if you're going to meet your niece, you fly her in. But I'm going to see her in Jacksonville, Florida. A lot of nieces come from Jacksonville too. I'm looking for that. Her mouth is just open.
I got nothing. It's
my only warning in Jacksonville is give yourself time because it's a big city. So sometimes it takes a long time to get from wherever your hotel is to wherever you're going.
Dude, I'm dedicated to doing the show. I don't get into Jacksonville until 11 o'clock at night. I will be here at 2:30 doing the grind.
You have like a 7:30 flight tonight?
Yeah.
Oh, man. I didn't even know Southwest had 7:30 flights.
I'm not flying Southwest. I'm flying private.
No.
Yeah.
Wait, did Jacksonville have any hurricane damage? Were they okay?
I don't know, to be honest with you.
I think Jacksonville.
I wasn't sure.
I mean, it went north. I think it went north of there, but I'm not 100% sure.
Sure.
I mean, I'm sure they had some. Yeah.
Bring your clubs. I'm sure that you could sneak
Bring my
around.
clubs.
Yeah.
I can get around in. Okay. All right. Maybe I could change my flight. I can get in a little bit earlier. I can get that round in.
Yeah, you get around in.
I get around in. Yeah, Vanetta, that's my only story for today. Maybe I'll send some pictures. It'd be fun.
Yeah, and it's great to connect with family, old and new. So that.
Yeah.
What'd you order at the wedding? Make sure you get the beef.
I don't even know if I sent anything in, to be honest with you. I might have to stand at the bar and eat. I don't know.
Wait, you're going to a wedding you didn't RSVP to?
I didn't want to be, it's my niece's, wedding. I didn't want to be the person nobody had met. What am I doing there? And then, it's all about me. So I wasn't going. And my sister called me all for the last 2 weeks, and you have to come. You're the only person that looks like me. So,
that's unfortunate for her, but
poor girl. Oh my God. So it's okay. Tell him you'll take the leftover vegan option.
You get the kosher meal.
I didn't want to the first time to meet. I'd rather meet everybody at a pool party. I don't want to meet everybody at a wedding, if you know what I mean.
Sure. No, I understand that. I understand that.
Yeah.
Don't create a big stir if you get the chicken.
Always go with the grouper when you're in Florida, South off the grouper.
The grouper? I'm a seller of there being grouper at the wedding.
Well, they got bat, so they got groper.
Honestly, I don't even know if I've ever had grouper in my entire life. I don't know if I've ever had grouper. Fried maybe.
You had grouper.
I would bet everything. I would be all in that you've eaten grouper.
I don't know that I've ever, unless it's fried. I don't think I've ever ordered a grouper.
You're like those big whales in the ocean. Your mouth is just open. You suck everything in the ocean in. You've had everything, man. You had it all.
Seriously. I know you like to portray this guy that you are today, but I remember you yesterday.
I'm just saying I don't think I've ever had a grouper.
We made him mad.
We used to have, when I was in college, we had one of those giant grouper fish in a fish tank.
You had a saltwater tank in college?
Yeah. We had
in the mansion.
Okay, I'll go all in on that.
It was my roommates. We had some kind of a grouper.
You
did not have a saltwater tank in college.
We had one.
Was he a marine biologist and his name was Jacques Cousteau?
We had a
marine biologist at the community college.
We had a grouper, and if I remember correctly, the grouper
state.
The grouper has teeth. It used to eat meat, if I remember correctly.
That was a Venus flytrap, son.
That was Little Shop of Horrors on Broadway.
Yeah, the grouper ate steak.
I think the grouper.
Suddenly see more.
I think the grouper was.
Oh my God, Sadnov.
I think the grouper was one of those flesh-eating groupers, whatever the hell they are, and it would eat anything.
Flesh-eating grouper? That's a piranha.
I'm gonna pivot out of this, boomers. I can't with you. The facts are not facting.
If you've ever had a fish sandwich in Florida, it was grouper.
When was the last time I went to Florida and had a fish sandwich? Never.
If you ever had ceviche or any kind of fish stew in Florida, it was group.
Nope, never.
Okay, hey, I gotta keep it moving, boomers. We got a great show for you today. What a week it's been. But finally, we're going to end on a high note because at the 8 o'clock hour, we are bringing you the weekend stocks. We got Jamal in the house. He's going to recap.
Wait. Back to college. Could you imagine Sadlov meeting these guys in college and they go, hey, let's tell the big stupid one it's a grouper.
It was. It was a saltwater tank, and we had a grouper.
Mm-hmm.
Okay.
He'll believe us. I'm sorry for that. I'm done.
No, it's fine. We'll get to the bottom of this today. We'll write his mom. I don't know. So anyway, Jamal's gonna be in.
We had
He's
a
gonna
dog,
recap this week.
an iguana, and a grouper.
Sure you did.
Okay, Ace Ventura. Look, Jamal's gonna be in. A lot of stuff happened this week. He's gonna recap it. He's titled this week's segment. There's a new sheriff in town. That's gonna be with Jamal at 8:00. Then at 8:40, fan favorite Fast Market. That means viewers write in with trade ideas, and Tom and Bat try to do as many trades as possible in 20 minutes. 9:00, we got a market measures post earnings moves. That's all it says. And then live from the trade desk, if you have questions about the brokerage side of the business, about Tasty Trades, Scott Sheridan will be in at around the 9:30 hour, and we will be taking calls or answering questions via chat from viewers about the brokerage side of things. And then again today, TP will be joining Liz on the Liz and Jenny show. TP refuses to adjust his webcam, so he does the show like this. And it's the most Bill Belichick camera angle I've ever seen.
It's you know what? A couple times I asked him to change it because I thought it'd be better.
Everyone in production has asked him. Every single person.
I decided it looks great. I love it. Just leave it the way it is. If he can get away wearing that shirt with that pose, he deserves it.
Oh my God.
I don't know what TP deserves, but he doesn't deserve that. That's for sure.
Anyway, that's the run of show for today. We're just here to have a good time. You guys
It makes Liz look even better.
It makes Liz look like Princess Leia next to Jabba the Hutt. Daily dose. Let's go.
Our leading story, breaking news,
across
the wire. Leading story, top story. This just in.
In today's headline,
This just in. Breaking news.
All right, everybody. Today's a fantastic Friday. It's November the 8th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Just programming note, Tom will be out all next week. He is doing his grand tour of the UK, but you definitely want to keep it locked in because I have not one, but two bats. Somebody pray for me all next week, a bat versus bat. The original bats holding it down while Tom is in the UK. So that's going to be all next week.
Big changes coming next week. We're going to let people finish their sentences. We're gonna have our opinions. It's gonna be amazing. You're gonna want to stay tuned. Nikki's coming with some good stuff. You're gonna meet the research team. The research team is actually gonna present pieces that are thoughtful and decisive. It's gonna be awesome.
All right, that's all next week.
Just promise me that when I get back, you haven't destroyed the entire business that we worked 14 years to build.
Hey, gotta keep it moving. This is hilarious. In a now viral news presser, Jerome Powell says he will not resign as Fed chief if Trump asked for his resignation. After the FOMC minutes came out and they are doing a 0.25 basis cut, Powell was like, look, I'm telling you straight up right now. He's like, I'm not leaving. He's like, I'm not elected. Like, he can't make me go. And so I made like a funny clip about it on our Tasty Live Instagram. You can check that out. But what are your thoughts on Jay Peasy? He's like, well, I'm telling you, I'm not going.
I mean, the whole point of the Fed is that it's independent. And that's why it's when you're appointed, you can't be asked to. I mean, you can be.
You can be asked to leave.
you can be asked to leave, of course, but there are certain ways to get rid of a Fed chief if they're incompetent or they commit fraud. There's a lot of different ways, but you can't just fire a Fed chief because that way it keeps the executive branch in check, so that there's a certain level of independence. So I mean, listen, he's right. He said the right things, which is, no, this is my job and I'm going to do it until my appointment runs up.
Can I tell you, I was surprised because social media comments can be a dumpster fire, but the comments on the post were, a lot of them were like, Jerome Powell saved our economy. They're like glad that he wasn't like, I was just surprised.
I'm not so sure Trump would even, I'm not so sure Trump wants to go down that path, because there's a lot of things that he can change that are, easily within reach for him. And this is something that, why do you want to even, you wouldn't want to, it just doesn't look good. It's not a good look. It's not a good optic. So I don't think he would even go there in this case.
Can we talk about bonds, Bat? What are bonds doing this morning to finish the week?
They're up about they're up about half a point. Which
is your
good.
name Bat? Just curious. Is your name Bat now?
Oh, I didn't know. What did she say?
I said Bat.
She said, Bat, what are bonds doing? They're up 12 ticks, Tom, and you've already traded them. You sold them all the way up at 117.21. They're 117.15 right now, up 12 ticks. Good job out of you.
Yeah, I just sold a portion of my position because that's the ones that we bought the other night before they dropped. They were 115.21 2 days ago. Now they're 117.21. So we made 2 points
now
back.
let's be clear to the trading audience out there. If you buy 10 bonds at 10 different prices, you don't pick and choose which one you want to sell out. You just have a P&L number. But in your own mind, this is what you're doing.
Yeah, no. My worst buy was like 1706.
Yep.
So it's like, it was a losing trade 2 nights ago. It's a winning trade now, no matter how you slice it up. So that's good.
Yep. Got it.
I have an interesting theoretical discussion for you. I had never heard this term, but I guess it's been floating around the financial space for a while. But the headline says, is the vibe session here to stay? Basically, a vibe session is a disconnect between how well the economy is actually doing and how people actually feel about their own personal financial standing. So right now, 45% of voters said that they were financially worse off now than they were 4 years ago, and we saw the results of that. Do you think that even with just the change of administration, regardless of change in fundamental economic indicators, that the vibe session will shift?
Yeah, I mean, I've never heard the term vibe session, to be fair with you, but I think we had this discussion yesterday a little bit with Victor, and I had this discussion the day before with Dylan. And so...
well, I'm sorry, I don't have a penis.
Is it here to stay? I mean, probably forever. It's not going to...
No, but does it shift, though, as people's perceptions? Like, if the people get the administration...
People's perceptions are always going to shift, especially with a new administration. They're going to give you the benefit of the doubt at first. But, 4 years from now, they'll be saying the exact same thing. There'll be a vibe session again.
I just thought it was interesting because then also, like, what do you do to counteract this?
Yeah.
Because it's detrimental to one side. So I don't know how do you fix the vibes? Anybody? No? Okay.
No. Don't know.
Okay. Just talk amongst yourselves then. Hey,
listen, I mean, there is a lot of perception in media. I mean, we can't do that. And then there's reality of prices too, right? So, I mean, I don't think one person can do anything in the short period of time, or one administration could do anything in this short period of time. But like Tom said, in a couple of years, we'll see if markets move, and they always do. Maybe for the better, maybe for the worse.
Wall Street expects Trump's presidency to unlock deal making. We've seen massive move in the bank and financial sector as Wall Street deal makers and corporate leaders expect the floodgates to open on M&A activity. True or false? How do you play this?
I think it will depend a lot on. There's 2 factors here. If interest rates come down a little bit, I think that will help M&A activity. I think what the Wall Street's expecting out of the Trump presidency is that some of the deals that were blocked for regulatory
by the FTC.
for regulatory purposes, like some of the let's say, some of the transportation deals, like some of those airline deals, and potentially some of the mega monopoly type deals, that there'll be less hurdles to get through. So that would encourage companies to be more aggressive in the M&A space. But what we saw during the last Trump presidency compared to what we saw afterwards, there wasn't a big difference. So I don't know that that's how accurate that is, but I think a lower interest rate environment, a little bit lower, would help M&A activity to start with.
Can we talk about the Russell? What's the Russell doing back?
Well, the Russell was really weak yesterday.
Oh my God, dude! You can let him breathe, man.
No, go, Tom, go. He's on fire. He's ready to go. Go ahead.
Oh, no, you answer it.
Thank you, my lord. Thank you. The Russell was the big winner yesterday, as Tom was alluding to just a moment ago, up almost 5% or more.
No. The Russell was down yesterday.
I'm sorry. 2 days ago, the Russell was up big, about 5%. It was basically unchanged, down small yesterday. It's unchanged, down small today. Down about $3.30.
Hey, Bank of England delivers a rate cut with a warning on budgets inflation hit. The Bank of England cut borrowing costs for the second time this year, but stopped short of signaling faster easing, warning that last week's budget could drive up inflation by as much as 0.5 percentage point. Let's shift gears and look at the euro and the pound.
Pound's down a little bit today. I believe the euro is too. I looked earlier just
Both
to give it
down small.
Yep. They're off of their lows. They're down at the low end of their range.
One thing we haven't talked about this election week is the softs. And I just want to get into a discussion about the softs because obviously farmers will be affected by a new administration with tariff threats. But I want to specifically just talk about soybeans, corn, and wheat because we haven't this week.
We have not talked about soybeans, corn, and wheat for some time. Wheat is basically unchanged, going sideways for the last week or so. Soybeans has caught a little bit of a bid, and corn has caught a little bit of a bid over the last couple of days. Mid-range for the last 3 months, Tom?
Yeah, we have small positions on in all three of those. It's like pulling teeth. We're trying to squeeze some money out of the high IVR, and so far it's working, but it's very small. We're picking up about
the nation
a
is
tick a day.
projected to face a record $42.5 billion agricultural trade deficit in 2025, and that's according to the USDA. U.S. soybean exports to China fell to around 26.4 metric tons last year, down from 36.1 million in 2016. Just putting that out there. Hey, keeping it moving. Gold ETF demand turns positive for year to date. Global physically backed gold ETFs saw inflows for the 6th straight month in October, with year to date flows turning positive for the first time this year. That's according to the World Gold Council. I did not know there was a World Gold Council. Are they hiring? I bet that Christmas party is lit.
I'm sure it's great. Gold has been on a tear to the upside, really with no downtick until the end of last month, when it's taken a little bit of a breather. Gold down $2.40 to 7,300. Remember, it was over 2,700. It was over 2,800 just a week ago.
Tom, any gold trades, gold ETFs that you're doing?
Yeah, all of them. I mean, our position, this is what we need, is a day of absolutely nothing in gold where they suck a little juice out. So far, so good on the overnight session, but it's down, like Tony said, it's down $2 today. It's nothing.
Hey, getting to some earnings plays from last night. Affirm beats on top and bottom lines. The purveyor of the buy now, pay later loans reported better than expected fiscal first quarter results. Affirm's revenue came in at $698 million versus $664 million expected. Did you have a position in Affirm?
I did not.
Okay.
So it's dead to me.
Pat, what's the stock doing this morning?
AFRM, trading at $48.50. Let's just call it unchanged. Ivy rank is 61. It is on the higher end of its range, so good for premium selling. High Ivy rank.
Okay. Tom, did you trade Lucid?
No.
Well, they slightly topped their Wall Street third quarter expectations amid widening losses. The company's net loss for the third quarter widened to $992 million, hachi-machi, compared to a loss of $630 million a year earlier. The company was able to bring in $200 million in revenue, but that's not great. But
I mean, it's
up after hours. So what do I know?
It was up 10 cents from 220 to 230. I mean, this is a company I think that's struggling with survival.
What's the symbol, Tony? What's the symbol again?
LCID. It's a $5 billion company.
Not anymore. No, I'm just kidding.
LCID. Got it. Okay. Got it.
I'm not sure if you guys want to check on Tesla this morning. That is obviously the dominant player in the EV space.
That's the big dog for sure. Trading 297, almost 298. Looks like it's up about 80 cents to $1 right now. Market's unchanged, but Tesla had quite a run after the election from around.
It sure did.
250 to almost 300.
How's the IV in there?
IV's pretty good at 36. I'll give you that too.
Well, staying in the EV space, Rivian lowered their earnings guidance after they missed Wall Street's third quarter expectations. The automaker's net loss did narrow to now $1.1 billion compared to $1.37 billion. Yay! Rivian brought in, revenue of $874 million.
We did not have a Rivian position. It looks like it's unchanged.
You are correct, Sadnov. Trading at around $10. $10 and a skosh, as my friend Mr. Tim Knight would say.
We don't have a position on it there.
Pinterest,
$10 billion.
Their stock plunged following weak Q4 revenue guidance. The social media site said that fourth quarter revenue will be between $1.125 billion and $1.145 billion, and the street hated it. And they were able to bring in revenue of $898 million. Pinterest had seen a little bit of a bump earlier in the year, but this is disappointing. PINS.
Yes, it is. Go ahead.
Yeah, we don't have a position on in there either.
I thought you were spelling something else real fast. Pins, $30 down around $4, almost $4, $3.75. Not a good move. Not a good move. They should stop reporting earnings. Every time they report earnings, it seems like they don't have a good day.
I know, poor Pinterest. Finally, Airbnb posted mixed quarterly results, and I'm not sure what the shares are doing, but they did fall around 4% in after-hours trading. I'm not sure if they are up now, but did you trade Airbnb?
Very small. We sold some out of the money November puts expiring soon, and I think we'll be fine. But the stock was up like $12, and now it's down like $10.
Yeah. Down $10, $11. You're right.
The company posted a third quarter gross booking value of $20 billion, and they brought in revenue of $3.73 billion, both up 10% compared to a year earlier. Tom's wife is still banned.
Don't mess with the Corinne, man. That's what happens to your stock when you do that. See? Don't. Stronger than the Donald.
That's funny. Oh, Square, SQ, Block, Square, I don't know what this company's called. They had earnings, but they missed Wall Street expectations. Their shares fell. Shares of the company fell more than 10% in extended trading before paring losses to below 4%. Block's total net revenue came in at $5.98 billion, missing expectations of $6.24 billion.
Square is only down $1, trading 70. Just under 74. It closed at 75.22. So down about $1.50.
Not too shabby. I'll take it. Yeah.
No, not too shabby at all.
Tom, when's the last time you traded Square, Blockhead, whatever this company's called?
I honestly, I don't even remember. I don't know.
Okay. Well, if you type it into your little machine, it'll tell you.
Don't. He's not good at this.
No, okay. All right. I'm going to keep it moving. Keep it moving. Hey, this is crazy. After we had such wonderful success with our election unspecial with the founders of Predictit and Kalshi, France is going to ban Polymarket. That's the power that we have. No, I'm just kidding. The ANJ, France's gambling regulator, is expected to ban access to the site in the near future. The cryptocurrency prediction platform was a big hit during the U.S. election, with one investor walking away with reportedly $48 million from his electoral bets. In all, more than $3.2 billion was bet just on Polymarket all over the world for our U.S. election event. On November 5th alone, 294 million in volume was recorded on the platform.
Yeah, what people don't need to understand about Polymarket is that it's peer to peer. So you bet with another person.
Oh, I didn't know that.
Yeah, it's not.
Yeah, it's part of the blockchain. I mean, like, isn't it
Sure.
the back end of it, Tom? Blockchain? Maybe I'm wrong. Please correct me, because I don't know.
It's a peer-to-peer platform, so they just facilitate. They basically facilitate.
They match you up so you can find each other, because
That's right.
I might want to make a bet, and the person could be anywhere in the country or the world.
They match up buyers and sellers, but the actual trade's done peer to peer. So it's not like a listed marketplace, like in the U.S. And then they make their money on scraping the gas fees. Do
you think France overstepped by banning it, or is it really just akin to gambling?
I don't even understand why France would care at all.
France cares about things.
I know. I just don't really, it's all crypto. It's all, I just don't even understand why they would even make a statement like this. Who cares?
Hey, the top tech stock of the year is not what you think. Yeah, you might have NVIDIA poised on your lips, but a stock called AppLovin is the top tech stock of the year. It went up 46% after beating earnings. It's up 500% for the year. The ticker is APP. I believe it started the year at like $38.
I've never even heard of it.
I don't even. What's the symbol? I'm sorry. Do you know?
APP.
Oh, that makes it pretty easy. Yeah, you are right. A $248 stock right now. Although about 48 hours ago, as you mentioned, it was a $162 stock, and it started the year at a $40 stock. So you are
right.
I don't know this stock at all. Looking at some of the option market, they're untradeable. Let me see if there's any open interest. There is some open interest, not a ton. It'd be interesting to see what goes on. Thank you for bringing it to my attention.
Yeah, I scour, for news.
Yep.
Saw this and I was like, what? And then it just reminded me of McLovin, from the movie where he gets the fake ID and then. Yep. I think it's Superbad.
Superbad.
Yeah, McLovin. And then I was like, now I want to watch Superbad, and then I didn't do any work. So. Hey, in other news, oh nope, that was the same story twice. Okay. Clearly hard up for cash, NVIDIA is going to limit GeForce Now users to 100 hours of playtime a month. The news comes as NVIDIA surpassed $3.6 trillion in market value. So they're going to limit users to around 3 hours of usage per day. What are your thoughts on literally the world's most valuable company being like, look, you can only use our stuff for this amount of time. We don't have any money. The hell you don't.
That seems like such an insane headline.
Well, that's true though. So they're limiting how long you can use their GeForce Nows, and it works out to 3 hours per day. And the headline is tongue in cheek. They're not clearly hard up for cash, but why would you limit how much your users could use stuff? Because obviously there's going to be outliers, like it's going to be a distribution curve. I don't know either. What are you doing in NVIDIA?
Nothing.
NVIDIA looks unchanged this morning, maybe down about 20 cents or something like that, at $148 and change, right at or near its highs.
Okay.
NVIDIA.
What's the IV?
IV's pretty good at 35. It has earnings coming November 20th.
There it is. Anthropic is teaming up with Palantir and Amazon Web Services to sell AI defense to customers. Anthropic said they were teaming up with data analytics firm Palantir and AWS to provide U.S. intelligence and defense agencies access to Anthropic's Claude family of AI models. Palantir has had a great week post earnings. I don't know if you're doing anything else in Palantir post earnings or anything in Amazon.
It has post earnings starting at 41, up around 55 and change right now. It looks like it's unchanged, maybe down around 50 cents or so. IV rank is relatively low at 15 right now. But good job out of Palantir to the upside.
There you go. Hey, McDonald's. This is for you, Tom. McDonald's is bringing back spicy nugs to menus in participating markets, breaded in a crispy tempura coating, spiced with cayenne, I cannot speak, cayenne and chili pepper. It is returning to McDonald's since being available regionally in 2022. It's going to be available, but not limited to Phoenix, Dallas, Houston, Memphis, New York, and more. Spicy nugs.
What do you think about this, Saz?
I don't really go to McDonald's for spicy nugs, but
you're a spice whore, so
yeah.
You are, Saz. No, if you are a spice whore, I would give it that. Yes,
I think I had these once, and they were too spicy for me.
Really?
Well, since I started working here, I got the ulcer. I can't handle spice like I used to in my ute. MCD, McDonald's, not sure what they're doing.
Yeah, McDonald's is hanging out at $2.95 and change. Looks like it's up small so far this morning. It looks like it's up small. Had a little bit of a problem in the middle of last month for earnings.
Oh well, they gave everyone E. coli, so.
Yeah. We dropped from 316 down to about 290 and change where it sits now. It's been going sideways. IV rank at 31 is pretty good.
I don't condone this. I think that you should take the electoral process seriously. But being that I'm also from this state, I do find it funny. Apparently, Indiana loves their head football coach so much that he received almost 500 votes to be president of the United States. That's something I can get behind. Kirk Signetti was a write-in ballot on over 487 ballots in the state of Indiana.
That's pretty good.
He's the best thing to happen to Indiana since
Bobby Knight.
Actually, you know what? Indiana's been getting lucky in sports. They got Caitlin Clark, and now they got this guy.
Mm-hmm.
Well, Caitlin Clark didn't go to IU. I mean, she's in Indiana now. Yes.
Yeah.
Well, they got the first pick in the draft.
Yeah. I just thought this was a funny story. That's it. There's nothing more.
I got Indiana against Michigan this weekend with the
That's right. Big Ten matchup.
Bat, Scott, and Nikki, all three of them. Free money.
Oh, you're going with Big Blue?
Yeah, no, not because I like Big Blue. It's just because I don't like Tom.
No, to be fair, during most college football seasons, I root for Michigan because I just.
Oh, do you?
I like college football, and I always would just root for. Well, I'm not going to root for Purdue.
Well, do you know that this year Indiana has covered every single game?
That's great. That's amazing. I'm so proud of my Hoosiers.
I guarantee that's never happened ever.
It's a magical season. Those kids are playing their hearts out, and I hope the fairy tale continues. Go ahead.
No, I was going to say, and I think I read a headline about the Bears not winning a home game in the last like year and a half.
No. They haven't won an away game in the year.
Okay.
They're 0-18.
2 years. Okay. Yeah.
They haven't won.
I don't think that's
the actual stat is that they haven't won an away game on a Sunday under Eberflus.
Oh, that's amazing.
Oh, that's terrible.
He doesn't travel well.
They're 0-18 on the road with him.
He's like a grouper sandwich.
Hey, Tom, I pulled this for you every Friday. I like to do a little segment I like to call Will Tom Eat It, where I scour the food for fat traders, scour the internet for food for fat traders. And Tom, the travel TripAdvisory has ranked like the top 10 like casual restaurants in the world.
Okay.
And a restaurant that's in the top 3 is in Edinburgh.
Ooh.
Wow.
What's the name?
So TripAdvisor, globally ranked casual restaurant.
What's the name?
And one of the top 3 restaurants. I'm going to show you this video. You can get Scottish delicacies and a whole bunch of different types of mash. This looks amazing. Watch this.
If they're serving grouper, so help me.
Ooh.
This is TripAdvisor's top 3 restaurant in Edinburgh, and I can see why. I will be dreaming of this mash for weeks. You will find it at the top of the mound, and they serve an amazing selection of Scottish specialties, haggis, neeps and tatties, lamb shank, and they have recently added their lion's mane homegrown mushroom to the menu as a main course, which is super novel and exciting. Check this place out. Right, this is TripAdvisor's top 3 restaurant
so they got
in
haggis
Edinburgh,
and lamb shank
What's
and
it?
different
What's it
types
called?
of, and mash. Wait, hold on. Oh, thank you, John.
Saj, you could check all.
It's called Macker's Mash Bar, and it's on Bank Street in Edinburgh.
Macker's Mash Bar?
Yes, I'll send the information to Brittany.
Beautiful.
And they have vegan, vegetarian, gluten, and dairy-free options, so she will love it.
Oh my God, Sadnov, you
like I am doing work here.
You are. I did a little bit of work too, Vanetta. Before you leave, I'd like to just show you something.
I don't want to see it.
No, you do. Sadnov, your college dorm. I don't know. I've been to a couple of college dorms. I've had 4 kids go through college. It must have been one hell of a fish tank, Sadnov. Check out this picture. And not only must have been some hell of a fish tank. I mean. Think about I bet the ladies were all over your house in college, Sadnov. You had a dog, a grouper, and an iguana. Oh my God, you got to see these guys grouper. It's so big.
That fish is bigger than me.
Yeah, you had a grouper, Sadnov.
That looks exactly like the grouper we had.
That's what happens when you flush them down the toilet, Bat.
The grouper ain't my homework. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Great job, Vanetta. We'll be back in 90 seconds. Confirm and send.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You just mentioned AI a moment ago. Would you like to see some of the evils of AI? All you had to do was look at this picture. You got the evil of AI.
This was very disturbing. So this is you and me as a mashup? I don't know who did that, but whoever did that should be fired.
Well, maybe you can get to it.
Please make that go away.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is basically unchanged, down 4.5 handles. NASDAQ down 56, basically unchanged. Russell down 5, basically unchanged. And the Dow up 22, the small bucket to the upside, basically unchanged. Volatility, basically unchanged. Sadly, there's a theme going on in the equity market. It's unchanged. Bonds actually catching a little bit of a bid. 117.24 is the high. 117.17 right now. But as you can see, they could afford to catch a little bit more of a bid. Bitcoin just under 77,000. Sadly, look at this at the high end of its range. 77.1 is the high on the future. Oil down $1.05, solid enough to 71.31, but you can see mid-range for the last month or so. Gold basically unchanged. Solid enough, we're basically unchanged. Airbnb down 10 for earnings. That's all I got.
Yeah, I got some futures to buy back, but I haven't bought them yet. We'll see. All right, let's let me move my screen over here, get this set up. These are emails.
The only 1% mover, not that 1% significant, but usually we have a few of those in the futures market, is Ethereum and oil.
Yeah, I don't count ETH. Emails that came into us last night from viewers all over. Let's see what we got. Can't believe we're November 8th. I sold a 0 DT Iron Condor at the 10 Delta strike in the SPX on election day. At the end of the day, my call spread was going to expire in the money. So I decided to roll to the next day. Now it's blown through both my strikes and I don't know what I should do. Keep rolling it until there's a pullback or just take my lumps and move on.
I mean, 0-day options give you very little time, especially near the end of the day. They're going to give you basically zero time or zero credit or zero anything to do anything in there. I don't mind that you rolled from one to the other when you were inside or around your short strikes and your long strike. Now that you're completely in the money, it's cash settled. Your loss is already in your account. It's a max loss. If you want to open a new position, you most certainly can, but I would use new strikes that reflect closer to at the money if you want to be at the money, or closer to in the money than your strikes that are very deep in the money.
You know, we've done a lot of research on zero DT trades, especially iron condors and strangles. And in none of our studies does rolling to the next day, when you have a losing trade on, does it really work? Long term, that's a negative return. So I don't like that approach to start with. Now, since you already did it, and now you're stuck with it, obviously, into today because you kept rolling it. I, like Tony said, I mean, I'm inclined to say take your lumps and recenter if you want to stay in, or just take your lumps. You know, maybe you'll get paid something today. I really don't know. But in general, if you don't get paid in the first 2 hours, we move on. And we never roll to the next day with the same strike, same position. So if you get paid in the first 2 hours, great. If you don't, move on. All our research is really consistent with respect to doing something early and not rolling forward to the next day. Let's go next slide. Out of the different types of debit spreads like diagonals, calendars, etc., which of these are the easiest to manage? Like vertical spreads, calendar spreads, diagonal spreads, which are the easiest to manage? Debit spreads.
I get it. I think calendar spreads are the least. I'll go that way. I think calendar spreads are the least easiest to manage. There's really nothing to do in a calendar spread. It's almost like a butterfly, a tight butterfly. You put it on, and if you have a profit, you take it off, and if you have a loss, you're usually kind of sitting with it. A diagonal spread's a little bit easier because it's got embedded short strikes in there. You can make it a little bit tighter, to try to collect a little bit more credit in there. A regular debit spread, you can roll from 1 month to the next and usually get a little bit of credit. So that would be a little bit easier too. But debit spreads in general are not the easiest trades to manage. They're almost like you put them on and you manage the winner if you can. They're closer to 50-50 shots.
I think that's the real answer here, is that debit spreads, they're all debit spreads mean you pay for it. So
they're limited in their management strategies.
We don't manage a lot of debit spreads. Like, we might roll if it's a skip strike calendar, if it's skip month calendar or skip month diagonal on a horizontal side. On a vertical side, we might adjust it or do something against it. But the reality of debit spreads are you kind of made your bed when you made the trade. And so they're not that easy to manage, but they're also not that complicated. You put your trade on, you hope it works.
Yep.
Let's go next slide.
There's a reason why it's the easiest trade for a new trader to make.
I sold a put last week. The stock has since run higher, but the put has dropped in value. Why would I buy this back when 50% of the premium has been achieved versus leaving it alone and keeping all the money? I will only sell premium on names that I want to own at the strike, less the premium received. So why would you cover it at 50%?
Hey, look, you're right. You don't have to. It's just from our research, it appears to be the optimal thing to do. Time has value. And because you like the stock at your strike price plus the credit received today, because the stock is significantly higher, you like it. You won't like it when the stock would be significantly lower and you get put the stock. No matter what you think, you would rather have it at the price it's trading at now. We like to manage winners. We think it's optimal. Our research suggests it's optimal, but you certainly can stay with it if you like to. If you like it so much, after the 50% is achieved, roll it up in the same month and collect a little bit more credit, or roll it out to the next month, the same strike, and collect more credit. I have no problem with you staying in the stock as it's moving your direction if that's your game plan.
Yeah. I mean, if you want to keep it the short put and try to squeeze some more premium out of it, go right ahead. But there's a reason.
Sure.
There's a reason that we spend $10 million a year doing research. And the reason is so that we can give you optimal mechanics. And the mechanics suggest that over the long haul, your return on risk is better when you manage at 50%. That's it. So you make more money per day when you manage at 50% than when you hold to expiration. That's all it is. But if you want to hold it, sure, go ahead. We don't care.
Absolutely.
All we do is talk about optimization. But yeah, hold it. Let's go next slide.
You sound a little bitter.
Not bitter. It's a nice trade.
I'm just teasing.
How do you defend an iron fly that's moved against you?
Yeah. Let's talk about what an iron fly is first of all. The short strikes are basically at the money, and you're buying the wings, and you're doing it for a high credit to the amount of width that you have to the strikes. It's a strategy that really depends on the stock staying nowhere, going nowhere, and just sitting. It's a high credit, lower probability trade, but you can make a higher reward on the overall trade. So there really is nothing to do with an iron fly, an equal strike to iron fly, meaning equal put and call or equal distance away. You're really just, again, almost like a calendar spread, because this is synthetically what it is. You're basically just sitting with it.
Yeah, Tony's right. You don't really defend an iron fly. What you can do is you can reduce the size of your position, get smaller. You can close the position, or you can reduce the size of your position, but you can't really defend it. Or we wouldn't defend it. Okay.
Yeah, we don't look to defend it.
We would just reduce the size if you want. Yeah. So if you do a 5 contracts, you take off 2 or 3. That's it.
Very hard thing to do, right? I mean, it's hard to have a losing trade and say, I'm going to take it off and reduce my size here, but it's usually prudent.
Yep. Let's go next slide. Is there such a thing, and it would make sense, to beta weight a portfolio to the VIX? That way, you would know what to expect based on the changes in implied volatility.
No, I would think it was I think it would be a horrible thing to do, because remember when you're beta weighting against something, you're looking at all of your positions and trying to find out how much risk I have on the market. And VIX doesn't even have any stock to measure it against. So I much prefer you doing it to SPY or ES or Qs or something like that.
From a math perspective, you certainly could do this. It's not a very hard thing to do. But would it make sense? I'm going to agree with Tony again. I don't think it does. I think it would be very confusing. And there's about 15% of the time, almost maybe 20% of the time, when the VIX and the S&Ps are, instead of being inversely correlated, they're actually correlated. So the problem with this strategy is that if you beta weight a portfolio, the number is always going to be theoretically accurate. If you beta weight versus the VIX, about 20% of the time, you're not even going to be able to count on the numbers that you're looking at. So
the VIX might not even be representing the volatility that you're short, the month that you're short.
No, that's what I just said. About 15 to 20% of the time, you're not going to be represented at all. I don't like this approach at all. Let's go next slide. And the last one. When scalping, how do you decide to get into the trade? Also, do you have a max loss in mind that you're willing to take before closing the position?
I think your max loss is decided on the amount of credits amount of contracts you have when you're trading this 50-50 shot. And when you get in is completely subjective to you. So for me, I don't have a good answer for anyone on this. I will say, if the expected move in of the product that you're trading is 10 points, and we've moved outside that expected move, and you're on the wrong side of that trade, that's when I'd be looking to have my mental stop somewhere outside the expected move. But again, really subjective. It's a 50-50 shot. It's all about direction.
Yeah, when scalping,
a lot of leverage. Usually most people trade too big. Sorry, I wanted to add that.
First of all, how do you decide when to get in the trade? I mean, that's just up to you. You know, like you think we're at some form of an extreme, maybe, or you're a trend trader and you think that maybe we broke out or broke down. We think of it more as an extreme. So, you know, we got to the top end of the range. Like I sold some futures last night before the close, and I haven't really covered them all yet, but I'm about to, and just hoping that they would be lower, right? You know, overnight and stuff. They didn't go as low as I would have liked. Do you have a max loss in mind? We usually don't, but we're trying to be pretty reasonable and pretty relatable with respect to scalping. So, you know, on a day like today, you know, I would probably be somewhere in the 5-10 to 15 handle range for futures. You know, that's what I'm willing to. That's what I'm probably willing to lose if I'm wrong.
But again, pretty personal question, right?
Yeah, let me tell you something about scalping, though. Don't get this in your head that you think you've mastered it or you understand something. You know, the key to scalping is just taking profits, moving on, and forgetting about the last trade you made. Like, don't try to own it. Don't try to remember, you know, exactly how many points you made and all this kind of stuff. Just boom, boom, boom. It's just like it's brain dead stuff. Just get in, get out.
It really is. It's a very hard thing to do.
Yep. Just get in, get out, move on. Don't overthink it.
Awesome. Hey, listen, let's take a quick 90-second break and come back. I can't wait to see who the new sheriff in town is. We got Jamal next.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with 2 unique virtual events.
6 must-know skills for active traders and 6 option strategies every trader needs to know.
Both feature legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of choices, you'll get overexposure. I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What?
Yeah, this is Twitter.
Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I'll make it real easy for family to talk. I'll make ex-girlfriends real easy to stalk. I'll show you life in real time that's completely amazing. I'll show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars. Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got a million customizable backgrounds. You're so totally boring. My card's on the table. Hash mark. Facebook is disabled.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this man, Jamal. This week in stocks. You got to give it to me, my man. Who's the new sheriff in town?
You're poking the bear already, huh? That was not the intention of the title. It really wasn't. It is what it is. I've always wanted to say that. You know, I'm a huge Eddie Murphy fan. There's a new sheriff in town, and his name is Reggie Hammond. Y'all be cool.
I thought you were going to go.
Too good.
I thought you were going to go the old.
Conversation.
Oh, go ahead.
Go ahead, Tom. No, after you.
No, I thought he was going to go the old Mel Brooks route from Blazing Saddles.
Oh, yeah.
New sheriff in town.
No. Can't do it on. Can't. It's not politically correct anymore. But you know, the whole scene with sheriff. You know that whole line. It's great.
I know exactly what you're talking about. What were you going to say before that, Tony?
That's too good. And
I was going to say, I loved our conversation preparing this segment yesterday at the big boy table. So let's get right to it.
I'm a Cleavon Little fan. I don't know what else to say. I'm not sure what else he did in his career, but Cleavon Little was great.
My wife was supposed to be in Blazing Saddles, Sosnoff, and you know what? If she would have been there, she wouldn't have got all of this.
All what?
Gosh.
All of this.
The world is better off. I mean,
thank you, Jamal. Thank you.
Well, she definitely is not. She's not better off.
I believe Eddie. I believe Richard Pryor was supposed to be in Blazing Saddles originally, if I'm correct. I can't remember why he couldn't do it. I think he was doing his show at the time, but that's a little.
Wait, not Blazing Saddles. It's the other one. I apologize. What
are you talking about? I'm talking about Blazing Saddles.
I know, not Blazing Saddles. The other Mel Brooks one.
History of the World.
Oh, History of the World.
No, I'll get it. Go, carry on.
By the way, that restaurant that Vanetta was talking about is 2 blocks from our hotel.
Oh my God, you got to do it then. I mean, you got to try at least, try to get in.
Yeah, sure.
Even if you sit at the bar, Sosnoff.
Sit at the bar.
Is this in the UK, I assume?
Well, I mean, if it's that kind of restaurant, you know, maybe you can't get in. Is my point. And if you could get there early enough where you could sit at the bar, you know, and order on the bar, you can do that. Is what I meant.
Sure, I could eat.
Him can't get in. Him? What do you mean? Really? He's not gonna walk up and say, "Hey, I'm the size. I need a table for 4."
I got cash. Yeah, I get it.
Okie dokie.
Let's pull up some slides. Let's talk about the week. There is a new sheriff in town, and his name is not Reggie Hammond. Let's move to the first slide. It doesn't look like Reggie Hammond at all, neither. Equity indices were extremely higher, obviously, since election night, since Trump won. Best post-election day in history. Got a slide on that in a second. J.P. Morgan and Goldman and other banks, they just really took off. That was one of the things that you noticed on Wednesday after the election. They pulled back a little bit yesterday, but big move on Wednesday, surging on this idea of hope of reduced taxes and reduced regulation as well. Post-election, look, we had a huge move in the dollar, had the biggest day gain since February 2023. Currently flat on the week. We'll see what ends up today. And then gold had its worst day since June on Wednesday as well, Tuesday/Wednesday. I mean, I tweeted about it. Tony, retweeted it for me. One of the best trading nights in a while. I mean, it was just crazy on Tuesday night through Wednesday. I mean, after we'd just been sitting around, not a whole lot's been happening. It was the beginning
Tuesday
of a whole lot
night
of
was
movement.
not the best trading night. I bought bonds and they kept going lower, and I kept buying bonds and they kept going lower. That was not a fun night. There was no two-sided action.
That's true. But at the same time, when you see that type of movement so crazily on one night, don't you kind of feel like, okay, this is ridiculous and it's going to sort of bounce?
I did, but it didn't until
it did. Yes, it did on Wednesday.
Yeah. The bonds definitely bounced. The stock market though has had no pullback.
Yeah, no, it hasn't. Well, yeah, it hasn't. Speaking of bonds, 10-year note is trading at a 4-month high due to a higher expected inflation under the new administration. We'll see what happens there, which is kind of crazy to me. That's a whole nother, the narratives are flying, as you would imagine. Fed cut rates amidst all of this. Fed cut rates 25 basis point for the second straight meeting as expected. And the crazy thing about that is for the last 3+ weeks, we were looking at vol, right? And in the November election expiration on the 5th, and we were looking at vol for the November 7th, and vol for the 7th was way higher. So we were expecting probably more movement for yesterday. And it was basically like kind of a nothing burger. So that was the crazy thing about that. VIX stumbled for the most since August, falling below 15, and VVIX closed below 100 for the first time since mid-July. All the vol has been sucked out of the market. Let's move to the next slide. Like I said, huge contraction. This is the last couple of weeks of vol curves going back to October 16th. You can see we're basically hanging out in the same area for the week of October 16th, for the week of the 23rd, week of the 30th. This week, boom, back to basically, God, I'm blanking on the word, not backwardation, but contango. I hadn't seen it in so long, I forgot what it looked like. I forgot the name. But we're basically back to contango now when you look at this vol curve more recently.
Yep. Good point.
Let's move to the next slide. Like I said, so this is election years. This is the moves over time. You can see 1932, big move to the downside. 1948, big move to the downside. But yeah, the last 3 years, markets have been up. And this was the best day ever when you look at S&P 500, 2.5%. Dow was up 3.6%, NASDAQ 2.8%, kind of lagging, if you will, compared to some of the others. Russell obviously was the big winner, up 5.8%. Russell's sitting around 2,400 now. Craziness, just craziness.
It was a day, that's for sure.
Yeah, and has continued. And the way it feels this morning, who knows? It might continue a little bit more. Let's move to the next slide. So the sector rotation is the thing I think that's people are paying attention to. It could get a little interesting. So far, what we've seen, financials leading the way. You got consumer discretionary, mostly in the form of Tesla, right? And names like that. For those who always forget, I always talk about consumer discretionary is the things you want, you don't necessarily need. Communication, I feel like Google is in that crowd. XLK, obviously tech is moved up. Energy moved up. What didn't necessarily move up? Healthcare to some degree. Even though there were some healthcare names moving, I felt like some of the managed care names like Humana, et cetera, were moving, but didn't explode. That sector did not. And consumer staples was kind of down. Also utilities. So surprising in a way. Well, I guess not surprising because honestly, when interest rates are a little bit higher, you'll see some of those last three names kind of falter. And I guess that's what happened. We just didn't expect interest rates to explode like that and bonds to fall.
True that.
Let's move to the next slide. Big picture looking out. SLV and gold pulled back. You can see obviously Qs, SPYs, IWM, and diamonds in the form of Dow. They all went up. And then, of course, there's the bonds. When does it stop for bonds? That's the answer I need from you guys right now. When does it stop?
It looked like it stopped. I think it might have stopped.
Tom's praying it stopped.
I'm hoping. We sold a bunch out yesterday and last night, this morning, but I'm still really low on bonds. I want him to get up into the 118 handle.
Yes, he does. You're there. You're getting close.
Barring anything crazy, I mean, this is kind of how the year is going to end up, right? Like, equities up, 20% or so, and gold and silver somehow up, that much as well, and then there's lowly bonds that are going to end the year in the red, which is, is this like the third year in a row in the red for bonds? Maybe, might be.
I don't know.
It's interesting.
Could be.
Let's move to the last slide. So, Trump has embraced digital assets, and Bitcoin followed suit, touching all-time high of 77K. You saw the Bank of England lowered borrowing costs 25 basis points as well to 4.75%. So we really are in this rate-cutting cycle now across the globe. After last week's 54% range in trading, DJT experienced a 58% range in trading, but for the most part, it's been a sell the news. Stock is down a pretty decent amount. They say China is preparing for a second trade war with the U.S., and so they're also preparing for a second round of stimulus. We saw what the stimulus did a couple of weeks back, maybe a month back. Those Chinese stocks took off. I don't know if that's going to happen again, but again, they're preparing for it. So for this coming week, we got CPI on Wednesday. I don't even know if these inflation reports matter as much anymore, but you got CPI coming out on Wednesday, you got PPI on Thursday, and you got retail sales on Friday. And then as far as research this week, the market measure, how do earnings drive stock movements? It was a really interesting one. Check that out.
A lot of those Chinese stocks have earnings coming at the end or middle of November, like Baidu has it November 21st. Baidu down about $3 this morning after catching a bid yesterday of $3. So watch yourself there. You might get a little bit. IB rank of 71, pretty high also. So you might get some play in those Chinese stocks. Good job out of you, Jamal.
Thank you, sir.
Sadnov, say something nice to Jamal.
Good job out of you, Jamal.
That's the big one, Elizabeth.
Jamal, enjoy your weekend. Enjoy your weekend. We'll be back in 90 seconds with the Tasty Live. Stanford and Son, right there. You don't know it, but it is. We'll be back in 90 seconds. The opening bell next.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
Oh.
My brother did that once. He can't talk now.
God, I'm serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
exploring zero DTE. We promised you we would take a look, and here we go.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back? But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Tomas, we are back, my friend. You know what that means? The opening bell is imminent, Sosnoff, to quote another Fed chair. Even the S&Ps are unchanged, Sosnoff, going into this weekend. Even the S&Ps trading near their highs, just a scotch over them. 6,010 last night, Sosnoff. NASDAQ down 36, Russell down 4, and the Dow up 60. It's a mixed bag of tricks, basically unchanged. Oil is your big mover, and it's to the downside, down $1.20. Down $1.22 to 71.15. That's all I really got, Sosnoff. Let's wait until this market opens here in about 40 seconds or so. What do you think the plan is today? Volatility in by 10 cents. Did you get the playbook for today, like in the rich guy meeting or something like that?
Yeah, I don't really have a game plan yet for today. I mean, I've adjusted a couple positions and I've sold some bonds out.
Well, I can tell you my game plan, Sosnoff. Baidu, I need volatility to contract. Meta, I need to go lower. Tesla, which is up $1.90, I need to also go lower. Somebody did something.
Airbnb.
Airbnb, Sosnoff, you're buying back those putties.
I'm surprised I got filled. Stock's down $12 and the puts got cut in half.
Yes, you are correct.
Remember yesterday I did the wrong put, and so I wanted to do the near term. I don't know if you remember. So I switched.
Of course I did.
I switched, and that's one of the few times when that was the right move, because it actually worked. Stock's down 14 and the puts got cut in half.
It's a 0 day. It's going to lose all its intrinsic value. If it goes through it, it's going to become a lot more. It's going to become a lot harder to manage. Yes,
right. So that worked out for once. Thank you very much.
Money goes to money. Good job out of you. Even every mistake you make money on.
Thank you very much, Mr. Airbnb. What do we got here? Russell's down a little bit compared to the S&Ps, which are up. Me no like.
Right, $3.75.
I know.
But sure.
Bonds treating the good kids good. You good bonds.
Sosnoff, for the bad kids, it looks like it's the Chinese stocks. PDD down almost $5. Square for earnings, I guess, down $4 and change. Baba down $4. Baidu down $2.75. ARM down $3. First Solar down $2 and change. Affirm down $1 and change. JD down $1 and change. Let's see what's moving to the upside as even the S&Ps catch a bid here and flirt with their highs up almost $5. You got Upstart up 12, UNH for the helping the Dow, which is up $70, up $7.50. Costco up $7. Lilly and Humana up $5. Home Depot up. Your coin up $4. Enough. TSM, I know it's Taiwan, up $2.75 in the Chinese stock trend. JP Morgan and Tesla up around $1.50 to $2. Apple up $1.
Yeah, there's
still some buyers in the woodwork, Sosnoff.
There are definitely buyers. Definitely buyers, but again, bonds are doing their thing, which is good. I'd like to see them get up to about 118 before we lighten up before we give any more out there, lay any more out. And I'd like to see notes get up. Well, they're getting kind of close to an area that's a little more interesting. Can you believe how much the 10-year notes have moved around the last couple of days?
No, for a product that's supposed to have a pretty tight range, it really has had a quite large range. The 10-year actually as much or equal to the 30-year.
I know, it's crazy. It's really crazy. So
yep,
I lay out a little bit here of the 10-year just to take a few profits.
Right. This is just getting rid of some longs that you have, right?
Yeah.
Not opening a new position.
Yeah. No. Yeah. We just got a little too crazy the other day.
A little too rambunctious, my mother used to say. Anthony, you're a little too rambunctious today.
It was a nutty election night, and
The magnitude of the move was so great, is what.
Yeah, I just felt the whole play that night was just to get long bonds. It turned out getting long bonds was a better play than getting short S&Ps for sure.
Wasn't a better play than getting long even the S&Ps, but sure.
No, I know. Well, I wasn't going to get long.
Because you were wrong.
Yeah. All right. Well, listen.
But you basically got an unchanged market here, Stodnoff. It looks like volatility coming in a little bit by about 15 cents. I don't know if you have a Goldman Sachs position. Looks like volatility is coming in nicely in there. It really expanded the last couple of days. Expanded for election night.
I don't have a position on in any of the financial stocks. I have a
good for you, because if you put one on now, you're fine. If you put one on prior, that was short premium, it did not work out. I know that for a fact because I'm in there.
I have a very small JP Morgan position, but like you said, vol's coming in today.
Yep.
So
so you'll sit?
No, I'm actually gonna I'm long some 250 calls, and I'm gonna replace them with selling some 230 puts. And I know that sounds like it's a crazy little game, but I'm doing it to collect a little more premium. So it should help my deltas. Did a little bit.
Beautiful.
Let's see. What else do we got going on here? Give me some
Apple
ideas.
Up $1 and change. Gold is GLD, talking about that, down 58 cents. Tesla up $6, over 300, Sadnaf, 303 in Tesla. Becoming a little bit of a pain.
I started to get a little short Tesla yesterday. It's my biggest loser this morning. I started to get short Tesla yesterday. I started to buy sell the 325, 335 call spread. And that's my short position. I'm kind of leaning towards adding to that.
Okie dokie.
But I don't know. And why is the stock up again?
America. I don't know. I'm getting short delta in there too.
America. You know, I just have a feeling the timing is so perfect for Tesla to jump the shark here. I just feel
it's jumping the shark at over 300.
I know. I just feel like it's the right trade. I'm going to sell the 325, 335 call spread. Sold it yesterday at about 250 something, and it's trading 285. Wow. I like it.
Big move in Tesla. Ivy rank a 38 in there. No earnings looming.
Yep.
The rank keeps expanding is my point.
I think you have to sell into this rally. So,
I mean, look at this stock. I mean, a month ago it was $215, $100 lower.
Yeah, I mean, yeah, I don't know what else to say.
Gotta stay mechanical, Sadnov. That's all you can do.
That's right. Stay mechanical. Other than that,
awesome.
Other than Tesla, which is our biggest loser today, not much else.
Beautiful. Let's take a quick 90-second break then and come back. We got more Tasty Live, Sadnov, after this. You know what we got coming up next? Fast market, Sadnov. You got some trading to do. We'll be back in 90 seconds with Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Move with the rhythm, shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grata, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed?
No problem.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, Sadnov. We've got Fast market. Go, Sosnoff.
I like it. Trying to clean up.
Me too.
Clean up on aisle 3. That's it. All right, let's do this.
Yeah, I'm doing the same thing.
Yeah. I always have like a few positions on that, I like to clean up before I hit the road, things like that. Anyway, let's do this. A little fast market here. Always fun. These are trade ideas that came to us from people all over the place. And
far and wide, Sosnoff, far and wide.
Far and wide. All over the place, far and wide, same thing. And we're going to share them with you. Let's do it. So, Manny from San Juan, Puerto Rico. I think I met Manny when I did a talk down there. If it's the same Manny, but if not, hello, Manny, and welcome to Tasty.
Was it the Manny from the Scarface movie? Hey, Manny, you want a job?
No. Do you know my uncle's name was Manny?
Was it?
Yeah.
I didn't know that.
I had an uncle Manny. Yeah. Manny goes lots of different ways. You can have, old Jewish guys
Don't butcher it. Don't butcher it. He didn't do 23andMe. We don't know where your Manny came from.
Manny. I know my Manny was an old Jewish guy. That's for sure. Wide iron condor. Let's see where Manny wants to do here in GC. Manny's using the gold contract, which we would use as well. Our current GC position, because we do have one, so I'll let you know. Let's see, GC. Our current GC position, which is working quite nicely today, Manny, is we are short the 26.90, 27.65 December strangle with 48 days to go. So we'll go to December, and you want to do the 20 delta strangle, which is way wider, which I like. Doesn't get in my way here. That's the 26.05, and we'll go. Let's go 26.05 to 25.85, $20 wide, and let's go 20 delta. He said, "I'm listening to Manny straight out here," and that's the 28.60, 28.80, right? $20 wide.
Yep.
$20 wide. The credit is about $6 and about $6.50.
Close enough.
We're going to try a little higher and see, just in case I was wrong. Have it in right now at 660. Nothing done, Manny. 650, we should be filled. Nothing done yet. Oh, there we go. Filled.
There you go. 650. You are filled /GC.
650. Thanks, Manny. We did a $20 wide, $20 wide iron condor in December in gold. 48 days to go. Did the 20 deltas, $20 wide. Collected exactly 1/3 the width of the strikes. Couldn't set it up any better, Manny. So let's see what happens. And the IV rank, by the way, in there is 61. Let's go to the next slide. So beautiful. It is Target. And Susie from Minneapolis. I don't know if it's really Susie Q, but Susie from Minneapolis. Sell a classic strangle, says Susie. Currently in Target, let's see what we have going on here in Target right now before we do this trade. Because I think we have a target position. We do. It's very small too. And let's see if we're up or down on this target position. We're up. Small. We are short the 25 puts and the 35.75 strangle. So here's what I'm going to do, Susie. I'm going to close the puts that we're currently short because we don't need them with all these other positions, and they worked. Close them. So now we have the 135, 175 strangle on. 135, 175. So let's go back. 135. 135. I'm sorry, 135, 170. That looks like a pretty delta neutral strangle. 21 DT classic strangle, 42 days to go. Collecting in this case $5 and maybe $5 and I don't know. Let's see, $5.11. I'm not sure.
You're gonna find out in about 10 seconds.
Yeah, we're gonna find out. I'm at 512, nothing done. I went down to 510. I'm working it, Susie. It's gonna be hard to get fills this morning because nobody wants to buy premium, it looks like, going into this weekend. All right, I'm working it. Let's see what happens the next minute or so. Let's go next slide.
Beautiful.
Victoria. Like all the women coming on today. Victoria from Boise, Idaho.
Hi, Victoria.
She's looking at crude oil down $1.25 today.
Look at Victoria. Big dog going into the big product.
Our current crude oil position, Victoria, is we are in December and we are short the 70-72 strangle. It's working really nice today. What does she want to do? She wants to do 45 days to expiration, sell the...
She wants to do a call spread. I hope she did it yesterday. I wish she did it yesterday.
But that doesn't seem like a call spread, Tony.
I wasn't looking at prices. 79.92. It's probably some sort of typo. It's trading at 71.
I think
oil.
I think it's the 92.97. I think it got inverted. I mean, doesn't that seem like what it should? Maybe it's a
the 79 strike is it? 79 strike's a 22 delta. So maybe it's 79.82, Saznoff. That's trading for 32 cents. I'm just trying to guess here. I mean, I think it's 79.82 would be my guess. They didn't put a price in here, so it's hard to. Plus the future's down $1.30, so it's hard to.
Yeah, this is a tough one for us today, Victoria, because
oil's down.
Because oil's down so much, so I'm selling a call spread into real weakness here. I'm reluctant to do that. So what I did instead was I sold a strangle in there and added to my position, and we have the 66.5, 76.5 spread on, and I just kept it as a strangle. I don't want to sell. I don't want to sell a call spread into the hole with oil down 130 today.
Yep.
And I did get filled in Target. I had to give up like a nickel because they killed premium in Target this morning. Let's go next slide.
Got it. Did you do anything in oil then, Saznoff?
I added to my strangle 66.5, 76.5. SMCI,
just want to make sure.
Which had a huge rally yesterday afternoon. It's down 40 cents today. It's trading at $25. I'm thinking about selling a 30 delta naked put in here, says Sean. After a big rally in there yesterday, we were short naked put, Sean, and we covered them. I think I'd rather do a put ratio spread, Sean. I'm not so confident SMCI is going to escape their issues,
their woes,
but the premium's so high in there at 137% volatility in December, it's like redunculous. And so if I do the 2017 ratio spread, I can do that for about, like almost, I can do it for a 45-cent credit easy, maybe even better. And I kind of like that trade.
Okay.
So it still gave me long deltas, but I have a little protection to the downside. Not so sure this stock is out of the woods where there's smoke,
Gotcha. Yep.
Bonds, let's just take a quick look. Bonds up 23. S&P's up 8, NASDAQ down 11, Russell up 5. All right, Russell's moving a little bit. Let's go next slide. ENPH, stocks beaten to death. What about selling a 65 put? ENPH. Oh, this stock is, oh my God, $68? What the hell happened?
I don't know. I don't have an EMP position.
Mike,
I really haven't been watching.
Mike from Tulsa, I like this. This is right up my alley, but why? I could sell a 60 put.
Down 280 today doesn't tell the whole story. Stock is trading for 68 and change. It's cut in half since September, South.
I mean, I was trading the stock, getting in trouble at 120. Mike, I just sold the 60 put for 186, which is way better than the 65 put for 240. So I sold it, and I think you can do it better now. The stock just dropped another 50 cents. So I just sold the 60 put for 186. It's 191 right now in the mid price. So you can even do it better. I'm not saying it's a good trade. I'm just saying it's the best time.
It's just a higher price. And if you're
It's just
selling
a better
something,
price.
you want a higher price.
That stock's in a free fall. Let's go to the next slide.
Yeah.
Boeing. Let's get this Boeing going. Stock's up 56 cents today. We're a hair long in there. This person, Dave, from Somerton, Arizona. So Dave, we have on the 140. You said sell the 135, 170. We have on the 140. What is that? Oh, those are notes at 13.
That is correct. You're selling them.
Oh, nice. Okay, we'll take it. Dave, we already have on the 140, 170, and we're at position limit. So I'm with you on this trade, and I like it, but I am not going to. I'm not going to add to our position. Yep. That's all. I already have the position on 140, 170, and we have it on as big as we want to get. Let's go to the next slide. It's one of my biggest positions, actually. Virginia from Reno, Nevada. Let's take a look at what Virginia wants to do. By the way, Tony, bonds are trading at, I said I wanted to sell some at 18. So we're going to put our 18 offer in. And we're going to put an 1801 offer in. Okay. PANW from Virginia. Have not traded Palo Alto Networks, Virginia, in a long, long time.
Long time.
Yeah, we really haven't. Stock is trading for $389. What does she want to do? Double one standard deviation ratio spread in December.
We
got one stock giving us trouble today, Bat. It's Coinbase.
Tesla. Oh, mine's Tesla.
Mine's Coinbase.
Tesla up 8 and change. Coinbase up 14 and change.
I know. It's the only stock I have giving me a hard time today. Let's go back to PANW.
Baidu is my biggest winner.
Wow. Got filled in bonds at 1801.
That's correct. That's correct.
The option gods.
That's gonna put a little pep in your step for this weekend.
The option gods are throwing the good kids a bone here.
Actually, this is the futures gods. The options gods, they can care less about you.
Well, the futures gods, some of the gods. I mean, after Tuesday night, it didn't look good for the good kids, and Wednesday, that's for sure. Got down to 115.5, and
we almost had to call the plunge protection team on you.
Yeah, now it's much better.
You were the plunge protection team.
Yeah, I mean that was a lot of work. PANW. That was way more pain than the gain was worth, but it still worked. All right, Virginia, we're going to do this for you. 16 Delta. I'm buying. That means you buy the 16 Delta option and you sell 2 of some other option, which means either 1 or 2 strikes out of the money. I'm going to see which one I can do for a credit. So buy the 16 Delta and okay, Virginia, We are going to Palo Alto Networks.
Mm-hmm.
We are going to buy the 340s, sell the 320s, buy the 450s, sell the 460s. And I think we can do this whole thing around a $2 credit, but I don't know. I'm just guessing. Mid price shows 193. So maybe it's not. These are hard in a stock like Palo Alto Networks because the markets are pretty wide. Like the 460 calls, just so you know, are 280, 380. So this is not something you want to do in any kind of size at all. This is just something I'm doing because it's fast market. Nothing done yet. We're working in Virginia. I'm trying to do it for about $1.90 credit, and I'll go down in a couple seconds and lower my price. Let's go to the next slide. Zach from Sioux Falls, South Dakota. I like all the new players today. LRCX. We've traded this one a couple times. We got Boise, Idaho, Sioux Falls, South Dakota. We're all over the place. We are. Lamb Research is an $80 stock. It's unchanged today. This stock is closer to being on its butt than it is on its highs. Let's see. After earnings, stock's trading in a range between 70 and 90.
I would almost cancel this Palo Alto Network order. I'll tell you why.
Okay, why?
You know, you're in at $1.90 credit. The natural bid is 25 cents. The natural offer is 3.40. Markets in here are anywhere between $1 and 50 cents wide. The very little volume. I mean, there is a little bit of open interest, but I don't know. There's no liquidity in there.
I'll leave it in at my price, and if not, I won't worry about it. I agree with you. I was just doing it. I wouldn't do it normally. I was just doing it because I wanted to support Virginia.
Understood.
Wide LRCX. What does he want to do? A wide strangle in here. This is a tough one too. It's not. I mean, it's better than Palo Alto Networks, but you're gonna have to stay small in this stock. 71.90. It's got a lot of strikes.
Mm-hmm.
71 puts are about $1, a little over $1. 90 calls are about 68 cents. You probably can move it 89 calls. If you wanted to do a delta neutral, you do 70 puts, 89 calls, and you do this one, do a little price discovery.
Maybe you do a little do-si-do.
Maybe, I don't know where the hell this thing's going to trade now that I look at it. We're working it. I'm trying. They just widened out the markets dramatically. Let's see, 90 cents. 90 cents. You're talking about. It's going to trade about $1.80 or something. Let's see what else do we got.
$1.80.
What?
No, I was just repeating what you said.
Yeah, I think it's around $1.80, but we're working it. What's the next slide? Dave from Colorado, looking at TLT. It's tough with stocks like Lamb Research and things like that because the markets are kind of wide and they widen them out and stuff like that. TLT, I don't know anything anymore. Puts, long call spread, covered calls. Well, Dave, we are currently in a bunch of positions in TLT, just like our bond positions, and they're working quite nice for a change. I'm all over the place in here. So we're basically long deltas. So we're short some 97 puts, some 94 puts, some 93 puts, some 92 puts, some 90 puts. Pick your poison. Dave, just trying to, what would you do in TLT here, Bat, after this very nice run up?
Yeah, you do have a nice run up here. And hopefully, this is a person that's had a similar position like you over the last 3 days where TLT was under 90 and now it's 92 and change. Decent IV rank of 35. I mean, maybe like a Jade Lizard type trade, Sadnov. I mean,
well, I have a lot of positions on in here, so
I'm not just talking just about you. I'm talking about this person who says, I don't know, he says covered call. A Jade Lizard's kind of like a covered call. A little bit higher probability of success. I mean, a covered call uses so much buying power.
yeah, I think I'm gonna pass on this because I have enough long delta in here already.
Yep.
By the way, LRCX gonna be really hard to fill. Really hard. Anywhere good. Dave, yeah, I got enough deltas in here. Let's go to the next slide. Angela from Oxford, Mississippi. Like all the women playing today. Dick's Sporting Good. Another one that's a tough one. Like, just to give you an idea, Angela, when you look at something like Dick's, it's only traded 44,000 shares of stock today. It's a $200 stock. It's only traded 44,000 shares of stock. I know it has high IV rank, and I know it's a stock that's had some pretty amazing movement, but these are challenging. These are very challenging, for fills. We'll give it a shot, but you're gonna have to stay super small in here. A 1 standard deviation strangle is the 170 puts and the 240 calls. If you went based on price, you do 165. I'd probably do 165, 240. And I would reduce my size to your minimum size. And I'm thinking it's going to trade. Well, look at that. You're thinking it's probably trades around 447, 440. I did it 446. But I did it small, just do some price discovery. And then what I like to do is go back and then, see if I can do it a couple cents better because I think I gave it away.
Because first of all, you didn't think you were going to get filled. Then you think you're going to get it. Then you think you gave it away because you get filled. Then you're going to find out that it was a good fill.
It might have been.
Because the markets aren't that great in there.
It might have been. Yeah. And then it looks like now it looks like it's an okay fill.
Okay. That's
all right. So you were right. Let's go to the next slide. Oh, okay. So anyway, I'm still working more fills in there. Angela.
You're working more dicks?
I'm working more contracts. Let's take a look here.
Such a child. Seriously, sometimes you're such a child.
I'm a child.
I know what you were thinking.
I'm a child.
I know what you were thinking. I was just trying to make an honest statement.
I'm playing the game.
I bet you are. Double your chance of a date on the weekend. What do we got here, Sadnov?
In gold, we did an iron condor. In TGT, Target, we did a strangle. In crude oil, we actually did not sell a call spread. We sold a strangle instead because crude oil was down. In SMCI, so we sold strangle, John. Yeah. In SMCI, we sold a put. I'm sorry, I take that back. In SMCI, we did a put ratio spread, John. Put ratio spread. In ENPH, we sold a naked put. In Boeing, we already have that on kind of position limit, so we did not do anything. In PA&W, I canceled my order because we did not get filled. In LRCX, we did not get filled. In TLT, we had an existing position on where we're short a lot of puts. And in Dick's Sporting Good, we sold a strangle and we're trying to do more. Okay, so we technically did 6 out of 10. But we wrote 7 out of 10 here because we already have a TLT position on, and I adjusted it. But I just added a little bit to it, so I guess it's technically a trade. But now, if you're following my trades and stuff like that, next week's going to be a tough one, and I'm going to be on the road for the whole week doing trading shows throughout Europe. So I'm going to rely on I'll be traveling some when the markets are open, and I'll be doing the show at night. So I'm going to rely on something. I'm not going to have a very reliable service because I'm going to rely on Tony helping me out next week, which is going to put my account at huge jeopardy. I'm going to notify all the regulatory bodies and our risk department
The other day I went out to the trade desk because I thought I could find somebody that could take care and pride in helping me with my positions. And I looked around and I looked out there and I saw what was out there and I'm like, oh man, I can't believe the bat's my best option. I can't. It was more depressing looking at those guys than you, so I had to come back in here. Scott's like,
so what you're saying is I'm not the first pick, I'm the best available.
You're the best of the worst. I mean, I looked at Scott and he looks at me and he goes, I'll take care of your positions. And I'm like, no way. I'm like, you are a butcher. I would never. And then Steve's like, I got this. And I'm like, are you kidding me? I've watched you. And
I called BS that either one of them volunteered to do anything for you.
They were begging to.
Yeah. No way.
Yeah. So I went to Tori and I said, Tori, will you please adjust my positions? And she goes, Todd, I got a lot of stuff to do.
And she said, no. Britt is already watching those for you. You'll be fine.
Got a lot of stuff to do. So it came down to between you and Jules. And I couldn't, I just, I can't. At least I know you'll be watching.
Unbelievable.
I don't want Jules calling in my positions from the poker table at Harrah's, so.
No words, Sosnoff. No words. You never cease to amaze me, man. You really are something special. I'm going to take a quick 90-second break and come back. We got a market measure next. I'm looking at your positions right now, Sosnoff. I'm working it out. Pen and paper. We'll be back in 90 seconds. It's Tasty Live. Boy, are you a good trader.
This is what my life has come to.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look.
They did not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
He's a senior in high school.
Okay, cool.
He has $25,000 from working. That's amazing. Do you think it's best for him to stick with defined risk or undefined risk strategies?
The term undefined risk is a really crappy term. Undefined risk strategies have a higher probability of success. Defined risk strategies have maybe less risk. I prefer undefined risk. He should mix them up.
Any percentage like weighting, like 60-40, 70-30? Like,
I mean, I'm 75-25, undefined over defined. He can be whatever he feels comfortable with. He can be 75-25 defined or 75-25 undefined, or he can be 50-50, anything he wants.
Now, don't screw up. You're the weakest link here.
you guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. If you didn't know that, I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it!
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we're back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. Coming at you with this market measure.
Looking at some of these stocks, the NASDAQ looks a little bit weak, but...
Not if you're looking at Tesla.
Or Coinbase.
Or Coinbase. You are correct. But you are right. The NASDAQ, Mr. Obvious, is down 52.
Yeah, I'm mad about my Tesla position. Not happy.
Yeah, get in line. Me too.
Yeah, I know. Baba getting whacked today.
Baba is getting whacked today. Baidu also. Baidu down 360.
I know. Baba getting whacked, and all the Chinese stocks. I haven't looked at. Let me just see. Where's my? Yeah, that's a pretty good.
Beatdown.
It's a pretty good beatdown. I rolled down some calls. Rolled down some calls in Baidu just for the hell of it. All right, let's do this. The bond move is saving our butts today. Bonds and notes. We've been talking about it nonstop all week as being the best play on the board, and it wasn't without a lot of pain, but it did turn out to be a good play. But it was with a lot of pain.
Yep, agreed.
And it probably saved us from getting short stocks, which would have been worse.
True that.
Yeah. Crude oil down $2. I don't know if you're watching it. Pretty big.
Yeah, big moving crude oil. I'm kicking myself. I don't have a crude oil position. I want to put something on with the IV rank so high, and I didn't do it.
There's plenty of liquidity in there. So you can pick your poison.
Yep.
I've been adjusting positions, and the U.S. dollar is also a little weaker today, which is good for us.
Yep.
Anyway, let's do this. This is a market measure, but right before we get into the market measure, just real quickly, this is my last time to mention next week because we're going to be on the road heading to Europe tomorrow for 5 shows. First one's in Edinburgh, which is going to be awesome. And these are small shows, so they're not going to be crowded. There's not going to be a ton of people. You can ask questions. You can see the screen. You can see what we're doing. We're just gonna try to trade like a crazy person for about an hour. Hopefully the markets will be busy. I know Monday's a holiday, but I think the markets will still be pretty good. Volatility's high enough.
Futures markets are going to be tight.
Yeah.
I mean, you've got banks closed and you've got the electronic market open only in the bonds, right? I mean, the open outcry's closed in the bonds. Everything else is open. I think it's going to be another day as usual. Maybe a little lighter volume, but another day as usual.
I agree. Anyway, Edinburgh on Monday. If you haven't signed up yet, tastylive.com/events. Manchester Tuesday, Birmingham Wednesday, London on Thursday, which is sold out, and Dublin on Friday, which I believe is also full now. But again, they're all smaller shows. But Edinburgh, Manchester, Birmingham, London, Dublin, I can't wait. And we're going to have some fun over the next couple of days.
Beautiful.
We're taking off a bunch of bonds and no positions today, so we don't have to worry about traveling with a ridiculous position on.
You won't have to worry about the bat butchering your position.
I don't have to worry about the bat butchering my positions, yes.
You're so cute. You really are so cute sometimes.
08 now in the bonds. Need to sell some at 10.
Oh, how about 09, my friend? 09.
09s. I need to sell some at 10, and I'll be
God, you're making so much money there. You don't even care anymore. You're giving away ticks.
Be very happy.
And I'm the butcher.
All right. Let's hope this all works out. Let's do it. Anyway, tastylive.com/events. The bat will be here all week next week with Nikki and the rest of the team. So we'll have a full house in studio, and hopefully I can live stream some stuff back to you. We'll see how that goes.
Oh, that'd be awesome. Be fun to see you.
Hopefully. Yeah. Fingers crossed. We get some live streaming going. All right, let's do it. Market measure, please. So what comes after earnings? Let's take a look. Do stocks go the way of earnings, or do they go the other way?
I believe after earnings, I believe they trend sideways for the most part. I mean, I think depending on and again, I haven't seen this, the study set, I would say it was sideways to higher just because we're at all-time highs, Sadnov.
So the question is, if you have an earnings report that's in line, obviously afterwards the market's probably going to do, the same as it was doing before. But if you have a stock that has a really good earnings report or a really bad earnings report, do you think the market continues to trend in the direction that it went, or do you think that it all normalizes and just becomes random again?
In a 45-day time frame after the trade is made, I got to say it's all random. Immediately following, I would say it kind of stays in the direction it's in. I don't know if I'm answering. I don't know if I'm answering to the study.
Let's take a good hard look at this because it's really interesting, and some of the results are a little different than you might think.
Awesome.
Publicly traded companies release quarterly earnings reports detailing their financial performance. These reports come out either before the market opens or after the market closes. The overnight moves accompanying these releases are often dramatic. Because this is anticipated, implied volatility is typically elevated just before earnings and falls off after. We've explored placing earnings trades before, but whether you have an earnings position still on or you're considering trading an underlying now that the dust is settled, what happens to the underlyings in the weeks following an earnings report? This is an important question for retail traders. Let's take a look. This is the first kind of study we've done exactly on like this topic. Next slide, please, John. So we examined each earnings announcement from the 15 largest components of the S&P 500 for the past 8 years. So it's a massive study. For each, we looked at the overnight's earnings move and the 7-day move and then the 30-day move, close to close, following the earnings move. So we looked at overnight, 7-day, 30-day, all right?
All right,
a correlation from -1 to +1 between the size of the earnings moves and the size of the following moves. How frequently the following move was the same direction as the earnings move. We call that continuation. The average size of the 7 and 30-day moves, meaning the mean absolute. So we contrasted the overall statistics of those following earnings moves that did or did not exceed the implied move. And we just put a little caveat at the bottom, says, note that these earnings moves only stayed inside expected 48% of the time, far below theoretical or the empirical non-earnings frequencies.
Yeah.
Okay. Let's go to the next slide. So what comes after earnings? So the first one we looked at was overall, okay? So the correlation, the continuation, and the mean absolute move. So this is interesting because you know how sometimes we go, well, it's only got priced in a 3% move and stuff like this. And remember, this is the top 15 stocks over 8 years in the S&P 500. So when we look at the overall, the size correlation and the continuation, the first thing that pops up here is that, you know what, these moves tend to be a little greater than whatever the expectation is right around earnings, because those are higher numbers, the mean absolute move, and the continuation number is a little higher than a random number would be.
Yeah.
I mean,
so
they're a little bit higher. So the size correlation is also interesting in saying that after 7 days, there's some correlation. After 30 days, there's a little less correlation, but the continuation of the move is pretty good. Let's go next slide. So on this slide, this is with earnings inside the expected move. Now, of course, if it's inside the expected move, the correlation is going to be lower and the continuation is going to be lower, okay? And then the mean absolute move after 7 days is obviously smaller and after 30 days is smaller. So when they're inside the expected move, I would say this is pretty random. 52%, you know, that's probably in line with just a completely random number. So if the earnings are inside the expected move, then there's not that much to actually consider, right? About a continuation or stuff like that.
Yeah, 100%.
Let's go to the next slide, John. This is earnings outside of the expected move. Well, here, everything changes. And you can look at the size correlation, you can look at the continuation numbers, and you can look at the size of the mean absolute move. And what happens for earnings moves outside of the expected move is that there tends to be a very high continuation move after the number comes out. So if you have a really bad earnings report, there tends to be, 8 out of 10 times the stock continues to go lower after 7 days, and 7 out of 10 times after 30 days. And this is in the top 15 stocks in the S&P 500. And if it's and I think those numbers do have a lot of value to them.
Agreed. I think they do
and
too.
the mean absolute move is usually greater than you think it's going to be.
So it means you got to be a little bit aggressive, especially if you're looking to roll up the untested side or do anything like that. I mean, that's my takeaway.
Yeah, I think that's fair.
Yeah.
This is a very powerful slide that we haven't done before.
And it's funny because if I think back about emails that I get for earnings, if a stock moves, let's say, outside the expected move to the downside, even though the market's a little bit, bid the way it is right now at market highs, people sit for a couple of days because they think it's going to correlate with the market or come back a little bit. Most of the time, it is like, what do I do now? I didn't roll, that kind of thing. So I think being aggressive with your rolling is probably my biggest takeaway for this.
Okay.
Earnings.
Next slide, please. Those are bigger numbers than I thought, way bigger. I thought there'd be a little bit of positive, outlier moves would have a little bit of positive continuation, but not from 50-50 to 8 out of 10.
Right.
When earnings moves fell within the expectation, the underlying afterwards performed like the underlyings any other time. That's exactly that was our takeaway. The following unexpected large earning moves, however, we saw the underlyings making large moves very frequently continuing in the direction of earnings, like 70 to 80% of the time. These moves might well be anticipated and priced into the premiums available post-earnings, but understanding what is typical following earnings can help you choose how to play it. Yes, it definitely is going to influence and impact our decisions somewhat. So very good market measure, really good market measure.
Very nice, but you know what? I got to take a quick 90-second break and come back. We got Mr. Scott Sheridan. We're going to your phone calls, 855-238-2789 or 855-BE-TASTY. You got any questions, you give us a buzz, Mr. Sheridan, Mr. Sosnoff, and I will do my best not to butcher things. We'll be back in 90 seconds to Tasty Live.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at tastylive.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Multitask MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you seen me, then you seen a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force, quiz.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Golf putt, normal distribution. Reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend. You know what that means? Enough out of you. Tasty Trade World Headquarters, your friend of mine, the ever popular Mr. Scott Sheridan for the Scott Sheridan Studios, and he's taking phone calls today, 855-238-2789 or 855-BE-TASTY. That number will be below in a minute. Give us a call. We would love to hear from you. I got 4 or 5 lines open. Questions for Tasty Trade, questions for Tasty Lives, questioning life. Call us. We've got the answers for you. And Sadlov, I just have to give you a little bit of an update here. I know you were worried about this. Rich is on the train to Scotland to see you. He's on the train right now. He's looking forward to it. But enough out of you. Mr. Scott Sheridan, welcome to the show.
He's Scottish, right?
Me? He said he's on the train. He's coming to see you. I don't know. It's just from the chat room. I know you don't like the chat, but that's from the chat, Sosnov.
So I just came to a realization watching Tom is you were introducing me. I think you heard us that you don't have an entry music like I do, like Nikki does. You want one? We'll give you one.
I have entry music. I got the song when the show starts.
No, that's just the show. That's not you.
Yeah, I agree.
Oh, you mean my own music?
Yeah.
No.
Yeah.
No, you see, because I'm not that kind of person. I don't need my own music. I make my own music.
Oh, yes, you do.
You see how he's going to belittle your intro music now? You see it? You see how he's doing it?
I'm okay with that.
I don't even consider that to be intro music, what you have. You just have like a beep, beep, beep. You know.
Yeah, that's good. But see, people associate that with me. And I would just like to thank all of the people, all the emails, the favorable emails that I got about tap dancing. Thank you very much. Appreciate that. I will report back hopefully in the next 6 months.
I am such a seller of anybody saying positive things about you tap dancing other than I think they probably called you a bunch of names that you can't repeat on air.
Nope. I would repeat everything. I got some very endearing comments like, you know what? You go do you. Don't listen to them. Shout out. Good luck. Okay. And you know what? And the 6 is coming along for the ride.
I love it. I love it.
Right.
I don't want to shift gears here for a moment, but are you watching Martha Stewart, the show on Netflix, Scott?
Don't know what it is. I mean, I know who Martha Stewart is. I know
it's Martha Stewart in her life, how she became the first woman billionaire, her early days, and
she's a billionaire?
She was the first woman billionaire.
Martha Stewart?
Self-made woman billionaire.
Before Oprah?
No. Oprah was way before her.
Oprah had to be.
Oprah was way before Martha Stewart. Are you kidding me?
Hold on.
$20?
No.
Scott, Tom?
I'll buy Oprah until your hands bleed. Yes, I'll take Oprah.
$20?
Yes.
Okay, $20.
But why are you doing this? Why don't you just...
Oh, sorry.
$20. I'll Google it right now. I can't
Do you
even.
want to do 100? Because I watched it. I mean, I'm telling you, I have
first
inside
one
information.
here is Madam Walk. What is this?
So listen, before we get into this argument, what I wanted to point out was you must watch it. First of all, not only is it amazing and good and funny and educational, it's a great semi-documentary. But the first 3 minutes of the show, Martha Stewart is walking in a garden, and you just see her from behind as she's talking.
If you tell me that she's hot, okay, I'm hanging up.
She walks just like Sosnoff.
Oh,
it's amazing. Nice. If you put the two of them together, and I hope production does it, if you put the two of them together walking side by side, you would think that it was the same person.
2000, Martha Stewart became America's first self-made billionaire, female. But then Oprah must not be considered like self-made.
American.
Huh?
American.
She's not American?
No, I'm just teasing.
No, it's just the way they wrote this. Martha Stewart's not even in the top 10.
You know what, Saz? How about this? I'll pay you because you're such a sore loser about everything this week, okay?
Here,
I got it. You need it.
It says that Oprah, I think, was this in 03. So maybe she was. What did she make? What did Martha Stewart make all her money from?
How about this, Sadnuf? I had inside information. I'm a gentleman. You wanted to go to your hands bleed bullshit, okay? I took you for $20 because I'm a gentleman, Sadnuf. You would have taken me for thousands.
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 And
no doubt about it. And
laughed. Yeah,
and laugh and like it. And like be so happy about it. But I'm not that kind of guy, Sadnuf, because I'm trying to heal.
Trying to heal?
Saz, I'm waiting for my Venmo.
Oh my God!
Waiting a while. You know what? You have a free call. You have a free bet on Indiana. You got right. So you can't lose. You either get 40 or you're even. More importantly, Tom, are you traveling this weekend?
He's not paying me on. He's not paying me on this $20 bet. You know that.
He's gonna say it wasn't real.
I mean, I don't know how Martha Stewart could be ahead of like the Waltons, whatever, there's a million.
But but the Walton kids weren't self-made because they got the money from
It wasn't self-made. It was just the first woman.
Oh.
No, I said self-made.
He said self-made. I am saying that for sure.
No, not that. You got to go. She was a model, Tom, just like you were. So, I could see
because...
You got to get them walking. It's in the opening credits of the maybe if you see the coming attractions, you'll see it, but you got to get a picture of Tom doing it too. It's amazing. You walk like an 83-year-old woman, Saz.
I hope I look as good as she looks at 83.
Me too. I don't know if she's 83. I just made that up.
I don't know how old she is. I don't even know if she's in her 80s. But I hope I look as good as her.
I think she
all I know is she was the first self-made woman billionaire. That's all I know.
She's 83.
I
don't know how she was ahead of Oprah.
I know all this stuff. I was going to bet him for another $20.
But like, if you take the richest women in the world, you got the like Estee Lauder, like you got.
Oh my God!
You got, who's the Greek tycoon? The one Onassis. That kid's worth whatever.
Whatever. All
right, more importantly, Tom, are you traveling this weekend?
Oh my God! What are you new? We've been talking about. You just said Rich is on his way to Scotland. I'm on my way to Scotland tomorrow.
To Scotland. Oh, right. You're going to tomorrow night?
Yeah.
Oof.
Oh my God, Vanetta Logan just wrote in and said, "Oh my God, I watched it too. She walks just like Tom." I'm telling you, ladies and gentlemen, if you don't have enough Tom from this week and you want to see him, watch the first 5 minutes of Martha, the documentary on Netflix. And in the first 5 minutes, she's walking in a garden from behind. She even has your boots on, Sosnoff. You look just like her, those little pin legs, and she walks kind of with a little bit of a hitch in it. It's amazing.
More importantly,
all right.
Did you eat lunch yesterday?
Yeah, it was disgusting.
Me?
Yeah,
disgusting. I didn't eat it.
Okay, so now I'm looking. I'm like, it's a new thing. Okay, Korean bowl, etc. Great. So I said,
Tony and I have had it before. We knew it was disgusting. We had it before.
I said, where'd it come from? And she says, Tom and somebody who I'm not going to name.
No,
they had it somewhere. So, and they said it was amazing.
No,
amazing. I'm like, oh, Tom walks in and he's looking at it. He's like, where's this from? I'm like, what do you mean, where's this from? You've had it before. He's like, I've never had this. So Tori says, yeah, you and the other person had it. You guys said it was amazing. Tom looks at her and says, it's disgusting. It's not even edible. So
I was with Tony and we were laughing about it the last time we had it. The two of us were laughing how bad it was.
How was that place? It was disgusting.
Yeah.
And the portions were small. So it was horrible and small portions. How's that place in business?
It's a ghost kitchen.
Chain.
It's a ghost kitchen.
It's a chain too, Saz, I think.
It's a ghost kitchen.
It's a ghost kitchen.
Got it. Yeah.
No. You got to get them walking. And by the way, Oprah was a teenager when Martha Stewart became a billionaire.
Wow, you're really pumped up about this. You got the hots from
Martha
Stewart?
I'm not buying all this. I got to do a little research.
I will tell you this, and I didn't know this. Brittany just wrote into me and she said, and Tom, correct me if I'm lying, that she said she told Tom last night that he's the male Martha Stewart.
She did.
Is this true?
She must have seen the show.
So I'm not lying, dude. I'm not lying. You got to check it out. You didn't get enough time. You watch Martha, the Netflix special. Scott, you got to watch it.
She called me and said, I was just thinking. It's exactly what she said. Exactly.
Out of the mouth of babes.
And I remember back in the day, we used to compare Tom to like Michael Jordan, to like Fran Tarkington. You pick athletes.
I like
now it's This is where the
wait, look. Look. Wait till they go from behind. It's perfect. Wait, look. Oh. I'm telling you, if you put the two of them side by side, you'll pee your pants.
Too good.
She's wide on top, little on the bottom, got the little thing. Mean as an MFer. I mean, just like them.
Oof. Too good. I gotta say, if you move and block out the face, although I don't think you would ever wear a vest, but
why? He wears a women's jacket now. That one he got from Dookie's a woman's jacket. He wears it now.
Oh my God. All right. We do some business and then get
Yes, let's
calls.
go. I got some phone calls. I'm so sorry I monopolized your time. I apologize.
It was well worth it. It was good entertainment.
Thank you.
That was not worth anything, just so you know.
Oh, yeah. That was worth it. It's funny. When it's at you, it's never worth it.
The only difference between the two is Tom's a bigger bitch than her.
All right. Top 15 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. Time for you, number 15, AFRM at a 31. For everybody else, Tesla at a 39, NVIDIA at a 35, Coin at a 45, TLT at a 35, PLTR at a 14, DraftKings at a 31, AMD at a 21, Square at a 13, Airbnb at an 8, UPST at a 16, SMCI at a 59, DJT at a 47, Meta at a 7, TSM at a 41, and number 15 for Tom, AFRM at a 31. Rounding out the next 10, MSTR at a 44, Costco at a 33, ENPH at a 33, GLD at a 61, and Boeing at a 49.
Beautiful. Can we go straight to the phone lines?
Let's do it.
Simon, New York City. Simon, what's up, my man?
Hey, guys. Good morning. Thank you guys for everything you do. I have two questions based on two things that I heard you guys say over the last week. The first is I heard you guys say that, when you first built Thinkorswim, you didn't have any charts because you didn't use any of them. So my question is, what did you use to determine your trades when you were not using charts?
Well, it's a funny story. When we first built Thinkorswim, we built the whole platform with no charts. And then as soon as we rolled the platform out, people were like, how do you guys have a trading platform with no charts? And we're like, who uses charts? And then that's when I reached out to Tim Knight, because our platform was in Java. He had written profit charts in Java, and we made a deal with Tim, and that's where we became, business partners 24 years ago. And the original charting platform on Thinkorswim was profit charts. Then about 4 years later, we built our own charting platform from scratch because that's what customers wanted. So we had both charting platforms on there. But, coming from the trading floor, we really didn't know anybody used charts. We thought it was just kind of like a side hustle or something, a joke.
We traded price of options, one option against another. That's all it was. We understood that nobody knows direction, or at least that's what we felt. Nobody knows direction. And you could look at charts. I would have people honest to God, look at pigeons on a windowsill and see if the market was going to be higher or lower. It didn't make a difference.
I mean, all I needed to do was do the opposite of what Scott and Tony did, and I was good. I didn't need.
Right. I
didn't need charts.
Gotten that Venmo yet.
So you didn't even look at what the daily high or low was or anything like that? You just
No.
I mean, you knew. I mean, but nothing. It didn't make a difference.
Yeah. I mean, you got to realize, Simon, we were one-trick ponies. It's all we did all day was watch the same thing. There wasn't a single tick in the day that we couldn't memorize. It wasn't what you're thinking. It wasn't like we were trading one product. It was pretty simple to do.
Oh, okay. So I think I understand. It's because you had this one thing in your mind the whole time, so you didn't need the chart because it was basically in your mind because you weren't doing so many underlyings the way that you promote right now. Okay. Right. That makes a lot of sense.
Yeah, it was just it was basically one index, and we knew every single tick.
Okay. No, thank you guys for that. I have a follow-up question with one other thing I heard you guys say this week. So one thing that you said was that as your customers, we should be able to do better than you because we can micromanage, right? And by micromanaging, you didn't really explain what you meant by micromanaging. And so I was thinking a lot about that, and I was trying to see, what is it that I could do that might fit that concept, right? And what I started doing this week, which is okay, but obviously it's only a week, so I don't know, is moving the strikes of, the strangles that I put on at the 45 BPA the way that you guys recommended, right? And so sometimes what I noticed is that I can actually sort of scalp it, right? But unfortunately, I'm using charts to do this, right? I can see that, it's at a local minima kind of thing, right? So then, I can sell this side and then I wait for it to go back up and I buy it back or the other way around, whatever, right? Or I load up one side a little bit more. Is that what you mean by micromanage, or is there some other micromanagement technique that you're talking about when you mentioned that on there?
Tony, you want to take it?
Not enough? Yeah, go ahead.
No, you can take it. I mean, we use micromanage as another word for being very aggressive with our positions. It's really a choice. It's a preference thing. You can be kind of one of those. You can be one of those traders that lets the market come back to you, and you hope that everything falls inside of whatever the original expected range is. Or you can be one of those traders that aggressively, manages your positions kind of up and down the scale, and that's what we do. We kind of chase price to keep our deltas in line, and I think that's kind of what you're asking, and that's pretty much what we do.
Yep.
All right. Thank you guys for all of your insights. I really appreciate it. It's always fun to watch you guys every day, and you guys are really doing an amazing service to everybody that chooses to list it. Thank you guys again.
Awesome. Thanks, Simon.
You got it. I think we're going to Denver. I got George in Denver.
Yes, sir.
How you doing?
Are you there?
Yeah. Hey, George.
Yes, I am, George.
All right.
Go ahead.
All right, a couple of quick questions. I love the back testing, but I have several questions. Is there somebody I can call with those questions?
You can email. You can email research@tastylive.com. There's nobody to call. You can You can email research@tastylive, or you can email Dr. Data. And if you want his email address, you can just drop me a quick email, Tom at tastylive, and I'll give you his direct email. And he's the architect behind the backtesting platform, and he'll answer you directly if you want to.
That'd be great. Okay, I'll do that. Second question, I know I'm being pesky about this, Scott, but I haven't seen any treasuries on the platform yet.
Yeah, it was supposed to be this week. We ran into a minor issue with Apex. I believe it's going to be next week.
Okay. All right. And I better withhold my next comment or I'll be getting cut. Anyway, you guys have a great time. Tom, I could say, well, I didn't know you had one of the guys was gender fluid.
Oh, yeah. Well, I thought it was more about inept bond market. But yes, you are right. You are right. Thank you, sir. Appreciate it. You've been cut off. Just kidding.
See ya.
Thank you, brother. Let's go to Los Angeles. I got Baram.
Hello? Hello?
Hello.
Yes, sir. You're on.
Yeah, hi. I called last week, but Tom had to go to a meeting or something. So the first thing I said was, hey, Bat, what was 2 times 17? Then let's double that. And then you move the decimal point, it's 7.14. Anyway, I was calling about, like, I know it sounds dumb, but like when I used to talk to Julie or some of the other guys, someone from that crew is in my server. And then as soon as I mention fractional Brownian motion, the next thing Jacob does is a skinny on options math about it. And he says a lot of things that are wrong. He just doesn't get it. The same way he was when he explained the election thing yesterday. You're like, well, what are you talking about? Yes. Who goes into lie, Jacob? Anyway, that's basically the only thing I was going to say, that Jacob needs to be checked a lot of times. He's wrong about a bunch of things. Like, for example, we do what Simmons did. Do you think Simmons was out of his mind or Jacob is? That's one of the things we do, hierarchical hidden Markov models.
Well,
anyway, I don't want to bust through it. Yeah.
If you're asking us,
go ahead.
If you're asking us to check on,
sorry, Tom, I forgot the main thing. I'm sorry. The main thing I was going to say is that could you please get rid of these people draw? It's just like it's such a bad look. Like if I was Jacob, I'd say, hey man, get rid of these people or I'm not coming in. Like I don't know why he doesn't do that. You know what you're doing. It's not a good thing.
I don't get rid of what people's what I missed what you just said.
These people who come and draw on the price, Tom. You know that's not a good thing. Like why is it on the network? I'm anti all that. That's why I'm blocked and everything.
Anti what? I'm so sorry.
You mean
you got TA people getting treated seriously. Are we kidding? Why don't you get the homeless people to go? Like you know that's nonsense.
Well, first of all,
is that your head of the trading is a moron who has 2 lines who says, head and show. Come on, what is that?
We don't do a lot of it, and we do it because there's some people that
I know there's demand for it, but Tom, there's demand for pedophilia movies.
I don't.
Is there?
Wow.
It's the same. It's the same type of thing.
Listen.
It's the same type of scumbag who would do that, Tom. You know this. That's why
you can choose. You can choose not to listen to that if you don't want to.
No, but you're enabling it, bro.
I'm just telling you, you can turn it off if you don't like that, but you can't question everything that we do because, we got to mix it up.
I know you're righteous. That's the thing. I know you're righteous, and that's not a righteous move. That's all I got to say.
All right. I hear you.
It's an opinion. You're allowed to have your opinion.
You could do no. If the engagement part, you could do legit things like add a Hearst exponent to your platform. Do that. The things that we do. They're not nonsense, but it's not a extreme to the right that there's nothing that you can know about the market.
So essentially,
here's some lines.
Yeah, but essentially what you're saying then is that every single trading platform that has anything.
Yeah, they're all guilty, Tom. You know this. They're all guilty.
You're saying that you're just indicting every single platform in
Tom,
existence.
I was a seed investor in Robinhood. They're guilty as well. They just added a fucking thing that you can draw lines with.
Every single person that you could draw lines with.
Every single one does it. Doesn't mean you have to do it, Tom.
All right.
Right? You know I'm right.
Let's
I'm sorry about my tongue.
Let's go.
All right. We got to go. Thanks.
Thank you, man. Thank you. Appreciate it. That's an old school trader right there. How about let's go to Mark the Trainer? You'll be our last one.
I was looking for Victor Jones and Chris Vecchio. I must have dialed the wrong number. Hey, guys.
You're just going to have to wait till Sunday. Wait till Sunday.
Oh, my God. All right, we got a real tasty trader here. Tony, I saw the election special. I would like to thank you personally for so eloquently stating the opinion and mind and choice of the people. You really stuck to your guns, and you said it so well.
Thank you very much. I was just looking at the odds.
Well, I know. I think everybody else was talking their book or whatever, but in the real country, you were very eloquent. What you
said you and a couple of other crazies that Tony is eloquent. But yes.
Eloquent?
Eloquent.
We be eloquent. All right, next one, my friend. Another question.
Eloquent.
Yeah. Thank you again for everything. I just needed to back Tony. You know, everybody.
Thank you, brother.
It's okay, Mark. Mark, somebody has to do it every once in a while. Every once in a while,
Tony, you got my back, man.
Somebody's got to throw Tony a bone every once in a while. So thank you so much.
Y'all be well. Excellent work. Excellent programming.
Thanks, man.
Thank you.
Thank you again. Be well. Bye.
Appreciate it. All right, Thomas, we are out of here, my friend. You enjoy your trip. I know it's going to be actually a work trip. I hope you travel safely. Mr. Scott Sheridan, enjoy the rest of your day. I'm going to take a quick 90-second break. I know you were probably doing the show, South enough, so you weren't able to give me my Venmo yet. But just to let you know, it hasn't come in.
Oh, it's too bad.
If you give me a public right now, if you give me a public bet, you were right, I was wrong. I'll take the $20 and wipe it clean.
Never.
We'll be back in 90 seconds of the Tasty Live. Scott Sheridan, I love you.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
My name is Tom Preston, and I am the Chief Market Strategist here at Tasty Live. So every day I write the cherry bomb that goes out to our Tasty Live customers. And usually it talks about some potential trade idea that people might want to consider with a little bit of context about why a person might be interested in doing it. But the main reason that I push these things out is to get people to think in terms of volatility, liquidity, and probability in their financial decisions. What I want people to learn is an effective way to approach the financial markets and to use options to their fullest advantage.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
Play a very exciting game. No. Hold on.
No, you're wrong.
Hold on.
She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
To the Friday edition of the Liz and TP show. Thank you very, very, very much again for joining me.
Liz, come on. We've been over this a dozen times. It's TP and the LD.
TP and the LD show.
That's
yes,
right.
Yes.
Liz, 2000 is calling. They want their sitcom back. No, it's TP and the LD. That brings it up to 2025.
Yeah, you're 100%. I'm going to LD. And I like your style with just initials because I named my son an initial as well. Like, I think it's cool.
Did you?
Yeah, he's JD. Yeah.
See, it's LD. You got to Google it and see. Like if you Google TP, you come up like I say a bunch of internet protocol, and that's fine. I really don't care as long as you know who I am, Liz. That's fine.
Oh, everybody knows who you are. TP.
So really quickly, and everybody knows how I was having a senior moment at the end of yesterday's show. I could not remember the term blockchain.
Well, I'm glad you weren't having a senior moment. I didn't even know what question we were answering. That's why I was like, okay, I'm just going to let
TP go. Geez. Yeah, there was a question that was put up on Twitter. Victor Jones runs great shows on our network, has a very different and interesting perspective on stuff. He was talking about decentralized finance, DeFi. I think it's a great idea. And what it depends on, at least to my simple brain, a lot of it depends on blockchain technology for security. And blockchain, again, for talking to traders, it's technology that lets you see a piece of data, and we can talk about that in a second, but a piece of data that you can copy and view. You can look at it and copy it, but you can't edit it. So let's say Liz and I had an agreement that I owed Liz $20. And instead of writing it down and giving it to a lawyer or somebody, we put it on a blockchain, okay? A chain. And what would happen is if somebody said, let's say your husband went in and said, I think TP meant to say $40, not $20, and he tried to edit it, it would send ripples through the entire blockchain world and say, hey, somebody's trying to fiddle around with this stuff. Shut it, stop it. Right.
So it is safe. It's for safety, basically.
Yes. And that's why, for example, they talk a lot about it, using blockchain for things like real estate titles, lights, right? So I don't go up and dig around in your local county courthouse and find the Deer King title and switch it over to me, things like that. Blockchain would basically make that impossible. So it's for security, and that's why, decentralized finance, if you don't have these gigantic regulatory and legal departments that these banks have, you need another type of security, and blockchain is probably more secure.
So let me ask you this, TP, and I know crypto is one way to trade it, but how else is that tradable?
There are companies. Well, we talked about Coin yesterday. Another company that came up was CleanSpark, CLSK.
Oh,
that had
it
been
is
halted.
Okay, perfect.
And
Thank you so much, TP.
And this is not. I'm not saying you should trade CleanSpark, okay? But what I am saying is, if because I'm such an expert at segues, Liz.
That was a great segue, by the way.
I'm like Chuck Woolery. I'm like Pat Sajak. Or
we are too. You know what? We're aging ourselves because you know what this means. We'll be back in 2 and 2. That's Chuck Woolery.
Oh my God! If and I don't know. Do you even remember Mike Douglas, the Mike Douglas Show?
No.
All right. I'm going to stop right
You gotta stop there.
All right.
So
CleanSpark, CLSK was halted today, and CleanSpark is a Bitcoin mining company.
It's still halted.
It's still halted as far as I can
see. The platform, John, so everybody can see this. It is still halted.
And I just did a quick check because these things pop up in my little news feeds and stuff. And the reason is it doesn't have anything to do, from what I can see, from their business operations or their enterprise. It really has to do with the discrepancy between the shares outstanding or the shares that were authorized and the number of warrants that they issued.
Okay.
So warrants are like expirationless options. It's more of a corporate action sort of halt. So they have to and I'm not saying it's not serious. It's a pretty serious thing when you issue more warrants than your issued stock would authorize. But that's why it's halted.
Oh, TP, you are a wealth of knowledge. But this is something that could be.
Thank you, Google.
But so this is something that is a possible blockchain trade.
Yes. And, one of the things, Liz, and I don't know how you feel about this, but when you get to CLSK, just to take an example, and we could also look at, stocks like Ford, for example, it's not a blockchain trade, but a cheap stock, like a $13 stock or a $10 stock or something. At what point, Liz, as a trader, do you, and I hate to say it, stop trading the options and just buy the stock? Because
this is where I'm at now.
The stock is an option.
The stock becomes the option.
Ford and CLSK are cheaper than most SPX options. Yeah. You'd be hard pressed to find an NDX option because it's such a huge index. You'd be hard pressed to find an NDX option trading for less than $13. Okay, it's they're worth hundreds of dollars. So my point is, do you sell a put in a $13 stock, right?
Well, take a look at this, though. So wait, TP, I will tell you, CLSK, now, hi, my name is Liz. This is the first time I'm looking at this. I've never typed this ticker symbol in my life. I'm shocked at how much premium there is. I just went to the December, just out of the money, because you can get $2 on a $13 stock, versus Ford, where there's nothing. If you go all the way to here, you're getting 10 cents. That's when Ford is when the stock becomes the options to me. But CLSK, that's a decent chunk of premium.
And so part of it is when you're looking at CLSK, the implied volatility is what, 160%, 140%?
Well, I think, yes, 135 right here. And you can see that on the side. I'm circling in.
So as long as the implied volatility is high enough, absolutely, you can still trade the options on these things. And again, I'm like Liz. I have never looked at CLSK. I don't know anything about it. Whether I'd trade it or not, who knows? Trading it, I don't know where I can get filled in this thing. But compared to Ford with a 30% implied volatility, I think it had, there's just not enough premium. There's a point, Liz, to me, where the premium I get from selling an option does not warrant taking the risk. It doesn't justify the risk.
While I've got you, TP, I just want you to go over something again, because I know this, but I love having your level of knowledge, because you're the one who actually wrote this into the program. You invented this and wrote it into the program. And I think I think you need to get credit for this every chance you can. But this number right here, this 135.7% implied volatility for the December 20th, means that this is going to be zero, right? Aren't they saying that with that percent implied volatility, that's why you're getting paid for this? It's either going to be zero or it's going to be 135% higher?
So basically, yes. And that's an annual number, Liz. Okay, so that's an annual number. So 135% is an annual number. So in 1 year, in the middle of early November of 2025, CLSK will either be zero or, $30, right? But if you look at so what you can do is actually convert that into a 2-week number or a 30-day number, right?
So
and you adjust it down.
TP, are all of these numbers annual numbers? So when I go to 0DT, it's the 7 days 150, the 14 days 164. Okay, so that's good. Those are annualized numbers, and you can convert them. Good.
Yes, and what you can do is if you look at CLSK, and this is just, we already do that conversion for you. So if you go into, what are you looking at, 35 days or 42 days? 42 days. So do you see those horizontal dashed lines?
Oh, yes.
That one, and there should be one on top.
Between 19 and 20 and between 7 and 8.
Those are the 1 standard deviation levels based on that 135% number.
Yeah.
Okay. So we already convert that into a 42-day volatility and turn it into a price. Why do we do that, Liz? Because we get paid in dollars, not volatility. Okay. The electric company doesn't take 5% volatility as payment. They take $20 as payment. Right. So what I need to do is turn that volatility number into a dollar value. Then I can trade it and potentially, not guaranteed, potentially make money on it.
So kids these days have it all, because you probably had to convert these on the trading floor into.
It was a nightmare. It was just, at least I had sheets. At least I was trading at the point where we had printers. And you could print the stuff out and you look at your sheets and look at them. Oh, geez. Anyway,
But you were printing it out once or twice a day. I mean, clerks would bring you sheets that were printed, and then it would be redone only a couple times a day.
Yeah, depending on what was happening in the market. If the bonds weren't moving much, you just kept the same sheets. But if they moved a lot, or if you get a sense that the volatility had contracted a lot or blown up or something, then hey, rerun my sheets. And it would take like 10 minutes. They'd run back up to the office, press a couple of buttons, wait. So it's much easier now. But here's the thing, Liz. It's become much more competitive now. Okay, so your son and daughter can be on the same playing field that I'm 3.5 times older than they am. I have years of trading experience, longer than they've been alive, but they can play on the same level, not capital level, but knowledge level that I have, simply because of technology. Right?
100%. I'm so happy you say this. I get on my soapbox every time we go on a live show and say that this is the greatest industry in the world, because there's no boss, there's no inventory, you don't have to audition or interview to be a trader. You decide if you want to be a trader. You decide what you want to do, and there's zero barrier to entry.
Right. So regarding that, and you and I have kids roughly the same age. My kids are a couple of years older than yours, I think. My older daughter is going to be 22, younger daughter's 19. And you know what I was thinking, Liz, as two parents, how I talk to my girls differently than my parents talk to me, not about life, but about like careers and jobs. And I'm thinking even outside of trading, because I assume they will be trading, right? That you're going to be managing your own money.
Well, they better be, because they're our children.
Or, right in the kisser. It's, right. But so like, and I'm not saying that my parents were bad. I feel like I've been a reasonably responsible citizen, but they didn't know anything. They didn't know. And what I talk to my kids about is just the expansive opportunities that are out there, the possibilities that they're out there, and the way that their skill sets can match completely different industries, right? Yeah. It's don't think that, gee, I have a degree in, biology, therefore I'm going to be a biologist. Like I told my daughter, who's, she's getting a biology degree, I said, you know what? I bet Tesla has a biology on staff.
I bet they do.
I can't guarantee. I don't know. But knowing Tesla, thinking about Elon Musk, they probably have a biologist.
But it is just, but you're right. The degrees and the things that you're telling them to do are going to be completely different. Which one is the biologist? Is this the theater?
The younger daughter. No. So my older daughter's getting a finance degree and a theater degree, which I think is kind of the perfect combination. But that's another question. But
and I sent you that Instagram, didn't I? About the theater major. Isn't it fantastic? It's fantastic.
And your daughter is involved in theater, has fun with it, stuff like that. It's so. Look at what you and I do, Liz. Yes, we're doing this online, but we do this also in front of hundreds of people. And I'm not downplaying the fear people have of doing it, but the ability to go up in front of people and just talk and be articulate and say something meaningful is such a skill that a lot of people don't have. A lot of people don't have it. And I'm not saying that you need it, and I'm not putting anybody down, but the ability just to go up and say, and Liz, you and I didn't prepare for this show. Yes, no. We've been trading forever and we prepared that way. So you and I can just sit down and talk about trading. But as far as other stuff goes, the ability to do that's really valuable, and you don't think of it in theater. Hell, you got to get up there and perform.
It's a lost art. Most people, it's their worst nightmare. But my daughter wants to, so maybe we can have our daughters do a show together, because my daughter wants to be theater and engineering. And I was like, engineering is great. That translates into trading as well. You're going to learn how to trade. So
yeah. And the point is I tell my daughter, like, she's getting a finance degree, so she thinks trading, right? And yeah, that's true. She could work as a finance manager at a car dealership.
She could.
And make a lot of money doing it. She could work just at a regular bank. She could work at an insurance company. She could work. There are all sorts of jobs that when I was a kid, my parents never told me about.
Weren't you a Latin major?
Yeah, I studied Greek and Latin. Why? Because my parents grew up in the 1930s, and anybody who was anybody in Massachusetts in the 1930s had a classics degree. So that, my kids should have a class. Okay. And they didn't think about, gee, maybe you want to move to California and be in the aerospace industry. Gee, maybe you want to move to Texas and be part of the oil industry. Gee, maybe you want to move to New York and be part of Wall Street. They never talked about that. I'm not blaming them. I'm not saying anything. But that's, instead of telling my kids, here's what you should be doing, I just point out to them the possibilities. That's all.
I love that. But your leap from your leap from where you went to college to this is all about who you meet and the people that you talk to along the way.
Yes. And also, Liz, whether people like you.
Oh.
That is something I hammer into their heads. And both my kids, I think, they take after my wife. They're pretty likable. They don't, and me, I'm kind of so on the likability scale.
You're the most likable person on the network.
When I'm talking to the general population, sometimes I'm a little bit scary. But anyway, I tell my girls, I said, you're going to get hired because people like you. I said, when you're hiring somebody, you don't know how good they are. You don't know that they're going to show up to work. You don't know anything about them. But if push comes to shove and you have to put in, oh my God, we got to stay late tonight and work on this project or whatever, or fix this problem, I have to like who you are. If I can't stand you, I can't work like that. And that is so much in the tasty world. We all like each other. We do. Right? It's all, yeah, I like you and Jenny, right? I could sit down and chat with you guys about whatever, right? And so so being likable to get a job, that is the dirty secret of hiring.
Well, I think I couldn't agree with you more. So honestly, that's a good lesson for them. And I love that your daughter is going into finance and theater. I think she's probably forging a new path because there's very few of those.
I hope so, because I'm sick of paying for her car insurance.
Oh my gosh, sure. Okay, now on just on a totally different subject, TP, we've got to do some high-class problems here.
Management.
Our bond position made money yesterday.
Ka-ching.
Cha-ching. So I'm going to close this. Did you close yours already?
I haven't closed it yet. I'm going to hang on to it a little. What do we have? You have the 14. Should we close it, Liz?
I have the 16.15. We're up 42% right now overnight. I'm going to close that.
Let's just close it.
We have a smaller. So TP, we have a smaller account, which this is a good discussion too. I trade multiple accounts, as I know you do too, right? I trade multiple accounts and I trade them differently. What I love about this show account is it's small-ish, and it's managed by 2 people. So it's got some type of checks and balances while we're doing it. So Jenny and I switch off every day who's running the account and the other one who's kind of just, talking. And we really do try to follow the rules and take profits quickly because it's a small account. So in my own account, when I have this, I might let it run. I might wait to get to 50%. But here, 42, I'm okay with it.
And you don't want to piss off Jenny.
No, she gets real angry.
I'm going to send this in at 11 cents, not cents, 11 ticks, 11/64, but cents. See if it gets filled. I'm going to let that work. Bonds have bounced. And did we know it was going to go up? Nope, I didn't. I just had a hunch. It was just like, I think bonds have sold off a lot. I think they might bounce back.
And I was talking to you, we were texting each other after the announcement, and the bonds really didn't start to move until halfway through his conversation.
No, they were sitting there. They were up like, I forget what the numbers were, like 27 ticks or something like that, 28 ticks, weren't budging, and then they started to tick up a little bit. They came off a little bit this morning, and that's why, up 30 seconds, 23 ticks, futures ticks. They're off a little bit, but they're up. And did you pay 12 for that?
I did. I just did.
All right, that's fine.
I wanted to carp your market. You got to put that on there too. I carped your market. That's on your trader lingo list.
I'm going to let mine sit for a little bit. And what else do we have to do? I also took off DK and DKNG. I can never get those letters right. DraftKings. I bought mine back for 9 cents this morning.
Now
I didn't want to look a gift horse in the mouth.
You were in the 0 DTEs, right? So you had to
I was at 1 day. And I made I sold it at like 97 cents or whatever, and I bought it back for 9. I figured that's a big enough profit for me. You sold the 37 days. How are you looking?
So we sold the 37 days for $3 and it's 85 cents. It's 71% profit. I'm going to close it.
Yeah, it is, especially around earnings. The earnings trades that work, I've had enough earnings trades go against me and see winners turn into losers. Just take the profit, move on.
And run like a thief in the night for sure.
That's right.
Yeah.
Run like a blockchain thief in the night. Before all the blockchain people figure out you've done it.
And I've got a quick question for you. I'm sorry. You're right. We don't plan for the show. So I'm going to ask you a couple questions right now. And the reason I'm asking it is because of this little stock right here, CCJ.
Yeah, CCJ.
So one day we were sitting at the Tasty table, and I love sitting with all the Tasty personalities. And I kind of went around and I asked Victor Jones, I asked Julia, I asked Jamal, I was asking Josh, Tom, and Bat. I said, what's your biggest position and why? And just because I thought it was interesting, Julia's answer was the best. She's like, no position of mine is bigger than the others. I was like, all right, you don't count. Everybody else, that's the right answer. We all know that. But everybody else was giving me the positions that they got too big in and why. And something that Victor Jones is always in is CCJ. And I thought it was interesting. So we are in that as well with him. But my question to you springboards from that. What's your biggest position and why?
And NDX, only because I can make enough profit to be worthwhile.
Okay.
In NDX. It's a big ass product and it has reasonably high implied volatility, like 23% IV rate, not very high, but my biggest position is in NDX. I can get paid in NDX. And like you were saying yesterday, Liz, like with that stupid VIX put spread I sold, you got to hold on to that thing because it's not going to come in, right? It's not gonna do anything. NDX, those things come in. If I can sell a spread and sell it for $8, like $800 of credit, I can buy it back later that day for $300. I'm getting paid, and so my biggest positions are right now, and that can change, but in NDX.
So what do you do in NDX? Are you a durational trader and let me get back into NDX.
I do a lot of 0 DTE, a lot of 1 DTE options. I have maybe, a little bit. Yeah, I have some stuff a little bit longer out there, like in the, 42 days or something like that. 32 days I have some 41-day stuff too, but a lot of the risk that when you talk about, hey TP, what's your biggest risk? It's in the 0 DTE options. I'm selling wide put spreads in NDX.
That's interesting.
Looking to make $1,000.
Do you do it on the open?
Yeah, right after the open. As soon as I get a sense of like where I can get filled, yeah. And that's what's that? I'm sorry.
Tell me what is wrong with this trade that I've been doing every morning, and I do it in my account because it's too big for the show account. But I've been doing this every single morning.
Yeah,
and
these are big trades.
So I go to SPX and I queue up a $50 wide strike. So I mean, I will just take it and go 90 to 40. I would only do this on the open. I'll queue up a $50 wide strike, and then as soon as the bell rings, I take the strikes all the way down to where I'm only getting $2.
Yeah, nothing wrong
with that. I hit review and send and immediately on the open, and then I will immediately put an order in to close it for $1, and I've been doing it every morning.
I think that's a great strategy, and so to put a little bit finer point on it, Liz, it seems that you're using the previous night's option prices before they've all opened up and before everybody starts trading this stuff, saying, just get me on the board.
Yes.
Right. Get me on the board. You load up a put spread or call spread if you're bearish or whatever. You load it up. You're not routing it, I don't think, are you?
No, not until after the bell rings when the prices file in, and then I will use the technology to go up or down, because I don't know if this is true or not, but this is in my little mind. I feel like this is true with those 0 DTEs. If you can get filled almost instantly, the decay is fast and furious.
It is.
After the fact.
It really is. That's why I'm saying because I live the TP lifestyle. And I need money, I need to get paid, right? And so I get paid with NDX. And the reason I do NBX over SPX is NDX has it's more volatile. It's bigger, and because it's a bigger product, SPX is what, 5,800? This is 21,000.
How wide do you make it? Can you give us an example of something?
25, 50 points, things like that. Not crazy. Well, sometimes. I mean, if I were going to do a trade right now, if I were going to do the 0 DE, if I were going to do the 0 DDEs, I'd look at the 2150s versus the 2100s. I would take, and that'd give me a $720 max profit. I would take that off as soon as I hit 300 profit on that. Yeah. And it's also, Liz, that's also at 10:30. The day's half over.
Yeah, right. So that's why I have a hard time, and we've been doing Jacob, who's awesome, by the way, has been doing some research for us on the zero DTEs. And it is fascinating, and they're back testing a lot of the stuff, but they were almost saying like selling premium in the morning is great, but as the day goes on in zero DTEs, it gets less and less beneficial to be selling premium.
Yeah, and part of that is later, especially around the quarterly expirations and things like that, that you can get some wackiness at the end of the day as, traders look to reposition and, start moving the index around a little. And it's not that traders are manipulated. That's not what I'm saying. It's not manipulated. It's just you can see some short-term swings in things like the NDX as you get towards the close, and you can't recover from them.
Right.
Just like Liz, you talking about CLSK, that 130% volatility or 160% volatility, that stock is going to be $0 or $30. Okay. It's a binary trade. When you get to especially after, let's say 12 o'clock or time, Chicago time, 12 o'clock or 1 o'clock in the afternoon, selling NDX options, you can do it, but that is really more of a binary trade. I'm not getting $700 of credit for that trade anymore. I'm maybe getting $400 or $450 for it, and I have to hang on to it till it closes to make money, because it's not going to come in the premium doesn't come in that quickly.
The risk reward scenario just isn't there. Okay, TP, can I run something else by you while I've got you?
Yes, please.
Okay, so I don't know if you haven't come to Chicago and you were recently in. Did you meet Jajun, the new researcher? You might not have.
I know who he is.
Okay, so Jajun did a piece, and
great young guy. That's another example of a young person who's smart, the learning curve has been so fast with him.
He's extraordinarily sharp, and we love this trade because it's kind of fun to scream Jajun in the middle of our show. We do this, we'll do it. So we've been doing it on and off. Where the long and short of it is, this is not. I mean, it came from a piece of research that he did, but then Jenny and I took the research, extrapolated, and made a trade out of it. So I'm not blaming Jajun. He didn't take us down. If the trade doesn't work, we don't blame Jajun. But when it works. But when it works, we always go Jajun in the middle.
That's right.
It's kind of fun. Okay, so
that's a good rallying cry.
Oh, it was great, and I'm telling you, the chat, yes, that's right. The chat and everybody on Twitter loves it too, because then sometimes I'll get a text from Frank Walsh just in the middle of the day with just Jajun in the text, because that means his trade closed. Okay. But the premise behind it was the research piece that he kind of provided, and you can go back and watch the whole thing, was that it was termed when's the best time of day to trade. Now, he really didn't give any definitive answers, but he said at around 10:30 our time, which it is right now, okay, yep. Around 10:30 our time, the second half of the day has more 5-minute up bars than it has 5-minute down bars. Okay, so that was the research. So Jenny and I had said, oh, if that's the case, let's take an SPX 0 DTE, wrap it around the at the monies, buy it. So we're buying the 595, 6,000, and I'm going to ship it for 240. And then all I'm trying to do is when I get filled, I'm going to immediately put a GTC in to take $50 out of it. And it hits, right. If you get a little baby pop up, you're out of your trade, right?
All right. I'm going to do the 96,000, the 59,96,000 for 530.
Okay.
I might get filled.
You might get filled. So I just did this for 550, and I'm sorry, 250, and I'm going to put an order in to get out of it for 290, and we'll keep an eye on it.
And all you're looking to make is $50 on it?
All we make is 50. So what's been happening is if you get the little pop, so right now ES is up 19, right? And so if it gets to up maybe 20, 22, we'll be out of it.
That makes sense.
It's
filled.
Just a fun,
you filled?
We're filled, but mine's small. And so yours is bigger. If yours is wider, you'll get $50 out of it much faster.
Well, that's why I'm doing it. So I'm off. I'm going to take this up to 540 because I want to be able to do Jajun.
Yeah, it's so fun to scream Jajun and set.
I'm going to be 540 bid. See, they're already 60. Yeah. I think I might have missed that.
You might have missed it, but we can keep
You gotta be fast to trade the Jejun trade.
You gotta be fast. So you can kind of take a look at it, and this has worked during our show. When we put it on at 10,
all right.
Oh, you're in. Good. When we put it on at 10:30, we've been I shouldn't say a lot of times, maybe more than 50% of the time, we're out of it before the end of the show.
All right. So now I'm going to put in opposite order GTC, $50.
The best part is it doesn't have to be a GTC because it's all cash settled. It could just be a day order.
All right. So I'm just going to do $5.90.
Yeah.
Make sure I'm selling it.
I know. Yes.
Send order at 90. All right. We'll wait and see what I get.
I got TP. Nothing's gonna make my heart happier than to see you go Jejun.
All right, but I'm keeping the arms down. I'm keeping the arms down till I get that 90 fill. And so one of the things, and one of the problems I think that you and I have with the general population, okay, is when we talk a lot about shorthand stuff. Like I'm saying, I'm waiting for my 90 fill.
Yes.
You know what I'm talking about, but what the hell is 90? All right. So I'm leaving off what we call the handle, right?
All traders leave off the handle. I know exactly what you're talking about.
Because it's too, I don't feel like saying 5. I don't want that extra syllable. No. You don't need that extra syllable, Liz. You know that I paid 40 for that spread. I paid $5.40, but all I'm saying is 40. And then I was saying like the 90 calls, the 59.90s. You know what I'm talking. When you say wrapped around the at the monies, you know with the SPX at 59.96 what the 90s are. And so it's kind of hard for the general population to decipher that. So that's why, and look, when I'm talking to you and talking to your viewers, you all get it. You get it, obviously. Our viewers get it. But talking to the general population,
our viewers are the smartest traders on the planet.
They really are. And I'm not bullshitting you with that. They really are. My point is, Liz, that talking to the general population, you got to spell things out. So our viewers, if you are out there talking to the civilians, spell things out for them. I am putting in order to sell this call spread. I bought it for $5.40. I will sell it for $5.90. Buy low, sell high. That's what I'm trying to do.
That's exactly right. TP, I want to make sure, just because keeping an eye on the time, I want to see if there's anything else that needs to be managed. Here's my question. We're just long. I'm going to close this TLT as well.
So I managed, FYI. Oh yeah, I've got the TLT. I'm going to let that go a little bit. I managed my Q iron condor. I rolled up my put spread. I rolled up a put spread in JP Morgan. IWM, I am looking to roll up a put spread. Again, I'm getting challenged on my call spreads and all these iron condor things.
For sure.
So, like I said, I'm having a good day. This is a very good week for me. And gold, we were talking about gold a little bit. I think we were talking about gold a little bit yesterday.
We were.
Gold is down again. I had a short 40 put in GDX that I'm defending with short calls. But I'm going to let those calls just zero DTEs at this point. I'm going to let those calls go. And right now with 21 days, I'm going to roll that short 40 put from my 21-day noves to probably out to, let's see, I'm going to go out to maybe 42 days on those.
Yeah, and that makes sense. You should be actively managing these, especially when you're defending with a wild up move like we've had. I mean, this is not necessarily gold. Gold has gone down, but with the wild up move that we've been having, you have to defend it. Okay, so I've got now the YouTube chat is going crazy. I think some of them have gotten filled on their Jejuns. Sometimes people will do it the opposite too, but I love it. So people are saying Jejun in the chat. But I want to pop into Twitter real quick, TP. So
yep.
This is Jack Tucker. Love him. He came in yesterday after the show, and he just posted a 0 DTE in SPX after today's initial move. And so this is something that a lot of people are doing as well. They are putting on iron condors and taking them off. So we love Jack. He was on the election unspecial and won some money as well. Frank Walsh, he comes in with all of our economic indicators. You've always worked with him, haven't you?
Well, I'm sorry, Frankie. Frankie was old when I got started. Okay. I was at the Board of Trade. Frank was at the CBOE. I knew Frankie after I had left the floor and he had left the floor. So, in the previous iterations, and met him through Sosnoff. I love Frank. He knows more people than anybody.
He knows more people than anybody. And I got to tell you, this guy is amazing. He's the YouTube chat moderator. He is funny. He is fast on his feet, and he knows a lot of stuff. So
awesome. Yeah, 100%. 100%. I love Frank. Frank, I love you. Mwah.
He's the best. But so I wanted to do this. Yesterday, TP said that earnings plays are not his bread and butter trades. What are his bread and butter trades?
What are my bread and butter trades, Julie? My bread and butter trades are, let's say, just longer term. I trade a lot of NDX, big products. Bonds I trade is kind of my bread and butter. Crude oil is more my bread and butter. I've been doing very well in things like NVIDIA. I sold a put spread in TSM, stuff like that. That's a little bit, I go to those like the 42, 50-day expirations. Of course, I trade some shorter stuff. Yes. Okay. But the trades that I always have on are trades like that. So I will trade, Julie, through earnings. I don't love doing it, but what I did yesterday was I sold his 1-day DraftKings put. Liz sold a 42-day, right? Yeah. So it's not my bread and butter. It's not something I wanted to deal with. In other words, I didn't want to wait around for 2 weeks for that put to come in, or I didn't want to have to defend it, right? So my bread and butter is more higher priced products that have enough volatility to make so I can get paid on, this is not, don't take this the wrong way, on my sized account. Okay. To get the returns I need to compete against, let's say, the SPX. Yeah. I need to take bigger risk or bigger dollar risk. And so my bread and butter is more in higher priced, more volatile products.
Just like your NDX. Now, TP, let me ask you this. So you just sell the put side in NDX, or do you do the
naked?
Do you do the iron condors?
No, I'll just do one side. The iron condors, you've said this before, Liz, and you're absolutely right. They take too long.
They do, for me.
They don't come in. And I would rather be short-term directional on those zero DTEs. And especially now, I've kind of given up, Liz. I think the market for the next couple of months might be biased towards the upside. I would just do the short put spreads in those index products. Or if volatility is low, like for the Jajun trade, I would buy a call spread.
Yes. I mean, the Jajun trade is kind of entertaining. We understand it's 50-50. It could go up or could go down. But yeah. I don't want to put words in your mouth, but I quote you all the time with something you once said to me. So you can retract it if you want. But one of my favorite things that you said was, and I think about this when I'm putting on my SPX trade in the morning, because I'm pretty far down. So I'm doing a put spread, but I'm far down in the put spread. And I remember you saying that's neutral too, because it's got to fall so much farther. It's neutral to bullish. So puts are neutral too, as long as they're, out of the monies.
Right. And if you said, if you're selling that way out of the money put spread and you came to me and said, TP, I am so bullish on this market, it's going to bounce back. Not guaranteed, but it's going to bounce back. I would say, Liz, you're kind of wasting your time selling a put spread. If you're that confident, buy the at the money call spread.
Correct. Do something to make more money.
Because that put spread, yes, you will make some money on a massive rally up. Some money. You're not going to have a big winner on it. You're going to have a good winner. But kind of going back to the whole bread and butter thing, if you're not convinced like that, selling that out of the money put spread is basically neutral, because if the SPX even drops $10, $20, you still make money.
You still make money. Yeah.
You're wrong. When you become a trader when you are wrong on direction and you still make money.
That's correct. So you're okay. You're okay with me quoting you saying TP said puts are neutral too?
Please do. Please do. I'm
because I've been doing it for about a year now.
I am flattered that you would quote me.
Oh, you're quoted all the time. You clearly don't watch the show because Jenny does an impression of you. You have to ask her. On Monday, tell her that I said that she does a good impression.
at the TP and the what is it? The TP and J show.
TP and J. You have to have her do her impression of you, okay?
All right. All right. I will have to close my. I get so embarrassed. But anyway, no I loved it.
Fantastic.
Anyway, so what other tweets do? Because we only have about 13 minutes, Liz. And Liz, you know me. I'm like one of those old toys where you pull the string, the thing talks, right? You know those like the stuffed animals where you pull the string and it makes the sound?
Yes.
Once you pull the string, I just don't shut up. So.
Well, this is what I think is great. Is, you kind of alluded to the fact that we didn't prep for the show, and we didn't, because I got to tell you, that's what the great part about a live show is. What I didn't expect, what I didn't have on my bingo card this morning was looking at the halted stock, right? If you try to plan something, we've had this discussion so many times, Jenny and I have, where when we first started the show, we'd be like, okay, today we're going to talk about a broken wing butterfly. And then all of a sudden you can't find one. But if you open up a position and say, so we do, I'm just going to use a different, let me see what we don't have in here. Let's look at, I'm going to do something. Jenny's going to get so mad when we put this in. So let's take a look at JD. Okay. So JD is something that I always have in my account. We don't have it in here. I just want to make sure we don't. Mm-hmm. So we don't have JD in this account. It's got a 45 rank. Earnings are coming up. It is a Chinese stock, right?
Yep.
It's a $38 product. And I'm just going to give my assumption, TP, and then what would you do? So my assumption is that I think I'm going to take the contrarian play, and I'd like to be neutral to bullish in a product like JD.
Yep.
Okay. Where would you take me?
Neutral to bullish.
Yep.
Sticking with the PB&J methodology, I would go out to 42 days, maybe sell the 35 put.
I like it. So here's what I think is fascinating, TP.
Okay.
Is you and I probably would have come up with the exact same trade. So we'll do a what's your assumption on Wednesdays, and people come in with their assumptions. And what Jenny and I try to do is usually use their assumption. And you kind of alluded to that when we were talking about puts are neutral too. If somebody says I'm extremely bullish, you're not selling this. I said I'm neutral to bullish.
Yeah, and so the thing, and here's the issue. You and Jenny have to fill an hour's worth of content for 5 days a week. It's hard. It's hard.
So I'm actually going to be, don't tell Tom this. I don't think it is. I actually think the market is the greatest content creator in the world, because no matter what, every single day I open it up, I was like, look at this. Do you know what I mean? There's something every day.
There's something to talk about, because Liz, if all you and Jenny did was, all right, we're going to manage our SPX, we're going to put in the Jejun trade, we're going to do this, you'd get about 10 minutes of content out of that. Right. But the ability to talk about, halted stocks, the ability to talk about JD, right? Why am I looking at JD? Why that 35 put? If I look, and my thing is the skew, right? So all I do is I say stock's trading at 38.46, 42 days. It's in between 38 and 39. Go down 3 points from 38 to 35, and it's $1.18. Go up 3 points from 39, again, because I'm doing equidistant. Yep. Go up 3 points to 42, and it's $1.67. $1.67 versus $1.20, the skew is pointing towards the upside. Simple as that. Market sees upside risk.
Are you surprised that the Chinese stock has skewed to the upside? Chinese stocks have skewed to the upside?
I don't. And part of that, and I think what it is maybe is some of the fear about what might happen to China vis-a-vis the global economy and all that might be simmering down a little bit. Might be. You see TSM rallying, and the whole, what China might do versus Taiwan and stuff.
Yeah.
JD is down today. What's Baba doing?
So,
down a lot here. FXI was down, but FXI was rallying. FXI had a big move up, and so I think part of what made them rally yesterday is a little bit of all right, maybe now that we know what the next administration is going to be, they can kind of plan for it.
Yeah, right? There is some
and I think that might be part of what's going on. So, but I don't know. Maybe, I don't know. All I know is that with JD, and I may sell that put with you, all I know is that 42 days, if I sell that 35 put, I have an 87% probability of making 50% of the max profit before expiration. I'm making $2.57 compared to about $1,000 of buying power requirement, which is more than 0.2%, right? In other words, the theta return on capital is very rich in that. Yes, my max loss is 33.84 if the stock goes down to 0. But, if it drops down to 35 or 32, yeah, I could handle a $200 loss in that trade.
For sure.
That's it. That's all that trade is. I don't know anything about JD. I don't know anything about geopolitics. I don't care. I am a trader like you.
And it's so funny because I took all of my Chinese stocks and I closed them all and put it all into JD. Why? Because it's my son's name. That's it. I'm just looking at, and then I use the volatility of whatever to kind of go from that parameter. Okay, TP, while I've got you, I don't know if you're going to know the answer to this, and I'm probably going to put you on the spot. I'm going to guess you don't know the answer to it because I don't. And this isn't something you and I do, but if you look at this FXI chart, you see this? Yeah. Oh, there's this up here. I know what that's called. It's called an abandoned baby. Okay.
Yeah.
But what does that mean when the baby's abandoned? So it's up here by that and it comes down. Does that mean the next move is they're going to go up and get the baby, or it's going back down?
I think I bet it's bearish. I don't know. The abandoned babies.
I've always wanted to know this. I've always wanted to know, when you see an abandoned baby, does that mean they're going back for it?
I don't know. All I know is that in the middle of every sunken ship is a chart room.
Yes, this is true.
Okay.
But that's just, we kid, but I really have no idea. I don't read any charts. I don't even know what I'm doing when I'm looking at a chart.
So here's the thing. There are people who can look at charts and have them make sense and make money of. The proof of the pudding is in the taste. If you're making money looking at charts and basing trades off of them, awesome. Keep doing it. There is room in the trader tent for people that look at charts. All I would ask you is, if you're going to look at the abandoned baby in FXI and you're going to put on a bullish or bearish trade in it, that you use a high probability strategy to do that.
That is when things get fun, TP, is when somebody picks their direction. Whoever picks their direction, right? Like however you're getting it, you're reading the tea leaves, whatever you're doing, you've got your directional assumption. If you overlay a high probability trade on top of it, that's when things get fun.
That's right. And that's how you get paid. And you may say, yes, I read the chart correctly and I was right on the chart. Yes, that is absolutely true. But I'm going to say you got paid by the strategy.
Yep.
Phil, take your 90, Phil. Jajun!
Yes!
Jajun!
Wait, did we get billed yet? No, I'm 20 cents away. So here, this is proof. You got out much faster than I did because you took double the risk.
I took twice the risk. And I don't know. I'm sitting here looking at JD doing, talking about whatever, talking about FXI and hanging babies. And what is this? Jajun comes through. $50 to the TP trading account.
How fun is the Jajun trade? Just because it gets...
Jajun! All right, that's it. The dogs, my wife is probably thinking I'm crazy yelling Jajun up here. The dogs are barking.
You know what? I got to give you a gold star for your level of enthusiasm, because mid-sentence, which is what I want to hear every single time, when Jajun comes through, you got to yell his name.
Jejune. Yeah, that was one of the fastest $50 I've made in a long time. Jejune.
So take a look. I mean, we got filled at the same time. I've got mine down here. I have half the risk of you. Now I've got $30 in profit, but not the full 50 yet.
Yeah,
I said I needed spoos to be like 22. I mean, when I say 22, up 22. That
up
just
22. Yeah, you're not quite getting there yet. But so what's the delta on that? You bought the 95.
Here, I'll go to it right now.
The delta on that is 57. So you need an extra 20 cents out of that.
Yeah.
You need spoos up maybe 26.
You think 26? I was just looking at it saying usually about 2 or 3 spoo points and we'll be out for $50. But I love this, TP. I love that you took more risk and you can see how you can get out faster by taking more risk.
And that's yeah, right. And that's why if you're talking about the bread and butter trades and what do I have most risk in? NDX.
Yeah.
Because I can get paid in NDX. It's as simple as that. And it's because I have, the account size to do that. A smaller account, look at Qs.
Yes.
Well, and go ahead, Liz. What were you going to say?
Do you how do you feel about cash settled products versus not cash settled? Because
I'm indifferent to them. I am indifferent.
Especially if you're going to be closing them, it shouldn't matter either way, right?
I'm indifferent to them, partly because I know how they're priced. In other words, I know the difference in pricing between a cash settled European versus a stock settled or a futures settled American, things like that. I understand all that pricing is baked into the options. So I know I'm getting rewarded for the risk I'm taking. I am indifferent to cash versus physical, or not physical, but stock or future settlement. I don't care.
Good. That's good. And I think the zero DTs are bringing people in. Like the general pop loves zero DTs, by the way.
Yeah, and I will trade, ES options. And I will. Those are future settled. ZB options. I'm all over ZB and ZN and CL and all that stuff. Those are futures settled products. I have a lot of risk in the grains. Those are futures settled. I don't care.
Yeah.
Sure.
Yeah, and it's so funny because that's just it. I think it is scary when you think about, you get the big scary letter saying you're going to have to take assignment on something if it's not zero DT. How many times have you gotten that letter? Been like, oh, you just got assigned on something.
Yeah, my inbox is, a lot of that stuff is, I understand you are required to receive that. The compliance, this is, like I said, like we were talking about yesterday, exchanges and brokerage firms, not so much brokerage firms, but they're legal and compliance and regulatory entities. And so the regulators impose all sorts of things on broker dealers, say, hey, you got to warn these traders, even though these people have been trading for 30 years, you have to warn them about potential assignment. Okay.
Yes. Okay, TP, I just looked at this. Nikki Batista's trying to get in, which means our time is over. Fastest hour of the day, done and dusted. I'm so happy you got your first Jejune trade. Mine did not fill, but I have every I have every hope that it will fill soon. So TP, I want you to go have a wonderful weekend.
Thank you. You do as well. I'll be back on with Jenny on the TP and J show on Monday.
TP and J show Monday. I will be tuning in and watching you. So I'll be on a plane. All right, everybody have a wonderful weekend. And remember to trade small, trade often, laugh with us, learn with us, and watch the TP and VLD show. Thanks, TP. Right.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Bat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. On tastytrade, adjusting your option positions is a right click away. Rolling just got quicker. tastytrade, make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Baller, with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend with my buddy, Mikey Baller. How's it going, sir?
It's going great. It's going great. It is a party shirt Friday. The sun is shining. But most importantly, we have to give a loud happy birthday to Katie McGarrigle. It is her birthday today.
Happy birthday, Katie.
Yeah, I need everyone to flood her Twitter handle with happy birthday wishes. It is at Trader Katie. And also, yes, she will. And it's also Garrett's birthday today. So happy birthday, Garrett and Katie.
Very nice. 2 of our finest.
Yes.
Very nice.
Quite literally. Quite literally.
Yes.
But yeah, I gotta say, I'm just like wondering when the market's gonna pull back. But then again, like, why am I even thinking about that? The market's not going. It's just going straight up, right? That's what we've been conditioned to believe.
I mean, I'm sure we'll have a dip at some point.
I'm sure.
I don't like to focus on the far future or whatever, like, it's just trading what's in front of us. And we've had some good trades over the last couple sessions. Got some great trade ideas from the chat over the overnight with Expedia. And we had our DraftKings position that worked out really well. I mean, we've picked our battles here. I think we've done okay.
Yeah. And I would say Tesla is just going straight to the moon. That's kind of wild to see.
Absolutely crazy. It's been straight up. I mean, this is retro Tesla. This is pre-NVIDIA Tesla. I feel like now with NVIDIA going into the Dow and just basically at highs, I feel like the new, big cap, mega cap meme stock is back to Tesla.
Yeah, significant call skew in Tesla now. Tesla was one of those stocks that would shift from put skew to call skew depending on the moves, but we are seeing big call skew there. And yeah, you should not expect anything less given the magnitude of this move. It's up 100 points in 2 weeks.
Yes.
So yeah, I guess Santa can take the year off because
Santa came early.
Yeah, we've already reached our little Santa goal of 6,000. It's crazy. What's crazier is
you go on.
What's crazier is you do the quarterly guess, the SPX guess. There's people that actually guessed 7,000 like that.
I don't know if they like if it was a typo or
maybe it was.
Who knows? But good on them. It's all the same. Guess is a guess. So yeah, I there definitely is not a large number of people in that 6,000 to 7,000. I think maybe like 50 or 60, which is, I shouldn't say it's not a large number. It's a lot considering where we were at the start of the year. I mean, we were at like what 42 or something like that, 40, 44. So it's been astronomical. Incredible guesses. So we'll see who wins that. But you still got a lot of time. 2 full months, basically.
Yeah.
Anyway, E-mini sitting basically at highs here, 6,020. We got up to 6,025, and the SPX itself was just about to touch 6,000. We didn't get there though, 59.98. NASDAQ has been quote unquote the weakest of the group today. It's down 10, basically unchanged right now. Apple's been, kind of sideways. Microsoft was giving it up a little bit. Google and Amazon. It seems like the money rotation is from these big names into, as Mikey highlighted, Tesla, which is up $21. I think if Tesla was basically flat today, you'd probably see a lot weaker NASDAQ. Dow up 180 and the Russell up 3. So really the Dow and the E-minis, the movers for today. Oil selling off a bit, /CL down $2.14, a little under 3%. Volatility futures have just been absolutely smoked over the last week here with all the things that have rolled off the table. It's been an incredible run there. 1555 on the vol futures. Bonds up 22 ticks, having a nice little 2-day rally here for Tom. Gold is down $11, silver down 37 cents, and then Bitcoin has participated, to say the least, with the upside risk-on move that we've seen in the market. It's sitting at highs, 76,500, just off of them.
Indeed.
Yes.
And yeah, we had Jay Powell take the stand and give us a 25 basis point cut. And just looking at the FedWatch tool now for December 18th, we're looking at almost a 70% chance for another 25 basis point cut. So yeah, crazy world we are in right now. That's for sure.
Wanted to give a couple shout outs here. We had that copper position from Westwater Wednesdays with Tom. We got short yesterday. We took some money on that one this morning. I also did a bunch of trades. We had the DraftKings earnings, which we basically pinned the perfect spot, at least for my position, and I think yours was a nice one as well. I took my position, I rolled it out to December, so I now have this December strangle, the 38.43. This is one that we've been in all year long. We've done all sorts of rolls here. We started this at the end of last year in December as a 32.42 strangle. We've rolled up the puts, rolled down the calls. We've done all sorts of stuff. So we'll have a nice little anatomy of a trade for that position. So that one will be, hopefully, if this expires fully out of the money, it'd be a full $1,000 profit on that one. So that should be a fun little segment for us. We both had the Expedia position. I did an upside crab trade. I closed out of that one. I had to leg out of it because the markets were just not that great on that long 200 call, but took a couple $100 out of that. Thank you for whoever in the chat gave me that. I did have to take some losers in Square, which was another earnings trade. I did an upside crab trade there. So I closed out of that one, as well as in Uber was another winning trade. We had the crab trade, McDonald's. I took some profits in there. And and then put on a new silver position and a MES position into this dip.
There you go. Yeah, I had the Expedia trade as well. Closed that for 480 bucks. I had that bearish copper position. That was great. That was a $100 winner exactly. And after DraftKings earnings, I rolled out the short call, the 36 short call from November to December, and picked up 90 cents. So that trade's basically.
Go on. Sorry.
I was just gonna say the trade's basically done. As long as it stays above 36, I'll get another 90 cents out of it. And as of right now, the P&L open is $1,050 from the whole year. Used like $500 in buying power, something like that, before I took the shares, of course.
Yes.
So yeah, it's been a good year-long trade, but it'll be a nice anatomy of a trade. We can show how the break-evens widen out over time as you continue to take risk in a product. And as long as you trade small enough and the product chops, you'll have a nice year for sure. Like this DraftKings opened at 34 and it's at 40, but it's had a range of all the way down to below 30 and then all the way up to 49. So it's had a nice range for the year given the implied volatility.
Yep. Beautiful. Love to see it as you.
Yes. Correct. But yeah, definitely looking for some new trades. I mean, we have some more earnings trades coming up later this month. We've got AMAT next week on the 14th. We do have NVIDIA. I think that's 2 weeks from now, though.
Yeah.
But we've got some good ones for next week. We've got Cisco. We've got Disney. We've got Home Depot. Applied Materials, AMAT, and that's pretty much probably what we'll focus on for next week. But yeah, it is Friday. We've got the Q&A session pulled up. We've got the live chat pulled up. If you want to join us on the YouTube channel, we're streaming live there. Just go to Tasty Live. You'll see this video front and center. You can throw in your trade ideas and questions along the right-hand side chat. Let's get to it, though. Yeah, rip Tesla short call vertical. So I also closed my Tesla position. So I had the 230, 260 double calendar, closed that for 84 cents. So I just exited for the remaining extrinsic value in the long options since the shorts expired today. There's nothing to do anymore. There's no daily expirations for Tesla. So I would have had to roll into the same expiration as the long options, which you can't really do. So that one's blown out anyways. I mean, my strikes were at 260, and that was the expected move for the 7 days. And we're at 320 now. So crazy.
Yeah. So you can't win them all.
Correct. And then XSP, same story. XSP was almost a full loss, unfortunately. That one, I had the 580, 560 strikes. 580. Just completely blown out. What was I thinking?
I don't know.
What was I thinking taking upside risk in this market?
It's up only.
I know. It's crazy. But yeah, fortunately, Ben, luckily you had the short call spread on. So at least your risk was defined and you really minimized the effect of this crazy move to the upside.
Yeah.
But yeah, I'm going to keep going through these. See if we can get some trade ideas here. Sunflower has only been trading one underlying, Microsoft. Now that implied volatility is so low, I need to learn how calendar spreads work. Can you walk me through one in Microsoft? I can't figure out how and why they. It's just that data coming off earlier on the short option more quickly than the long. Yes. Isn't a poor man's covered call just a calendar spread? Kind of.
Yes.
A calendar spread is just the notion of having a short option in a more near-term cycle and a long option in a further dated cycle. A calendar spread traditionally is where you have the same strikes. So a calendar spread has no intrinsic value potential. It's all based on extrinsic value and how that changes based on movements in the stock price and passing of time and implied volatility changes. So for Microsoft, You're going to do like long January, short December or something like that?
Yeah, I was going to do November, but there's just not enough time there.
Yeah.
This is more of like a typical setup for a quote unquote calendar spread, like a same strike calendar spread. Something where you go to January and you do a round of 40 delta, and then you sell that same strike in the shorter duration, a 30 day ish. Here we're going to be 70-40. Typically you want, we look at like 60-30, but this is fine too for the purpose of the example. But it sets up with a small amount of delta, and that's why we talk about these. We do these out of the money, because if you get a little bit of an up move, you benefit from that delta. That's going to bring in a little bit of value for you too. Your theta is positive in the short term because that shorter duration option is going to decay faster than your longer duration option. So you have a little bit of value to capture in that. And then the other thing is that you have volatility exposure. So typically we want to keep this volatility differential around 1 point, right? So you're buying an option that has essentially the same amount of volatility exposure, vega exposure, as you're selling in the short term. You're always going to have a little bit of a difference, but for all intents and purposes, 1 point vol differential is very, very minimal. So if there's a pop in volatility, your long option is going to pop more in implied volatility than your short option. So that's another benefit to the calendar spreads. But all in all, calendar spreads are a very much low risk, low reward type trade. They're a set it and forget it short term. They're a set it and forget it, small profit potential on this sort of thing. Like 20 to 25% of the debit is probably your home run. You have tail risk in both directions. If you look at this on the analysis mode, we could pull this up. You have risk on both sides of the market. If you have a big move to the upside or a move to the downside, you'd obviously lose on that. You're really playing for, a small move on these trades. Same strike calendars. And that's why we typically diagonal them.
Yeah.
Yeah, go on. Sorry.
Yeah, like just moving that 435 to the 425. Now you have significantly more profit potential to the upside. Like all you need is a little bit of a movement to the upside, and you're already multiplying your profit on the calendar spread. You also have no upside risk. So in this trade where you're buying a 10-point wide diagonal spread for $8, you have no upside risk, and it's all profit potential if you get a rally. So calendars can be tough, especially when the market's just flying around like crazy. Like my Tesla calendar got blown out. I had losses on my call calendar that was out of money. So at one point that wasn't the case. At one point it was like $100 winner, but it kept going, and now I have losses. Where in the case of a diagonal, it could have kept going and I would have still had profits. So we are always going to be on the side of putting up more capital to get the delta exposure and have the ability to make much more capital on a directional move that we're betting on. And we could always reduce this. Like, let's say you place this diagonal spread for $8 and Microsoft sells off to like 415 or 410. You could always move that 435 call to the 425 call and then go into a calendar in that sense. So like you have the ability to hedge your risk a little bit, but we're almost always going to be leaning towards a more directional trade because these markets are moving, and we don't want to be stuck in a position where it moves too quickly and now we have losses on an assumption that we had that was correct.
Yeah.
And another thing with calendar spreads strictly is that because you have a short option that's at 42 days, even if you got to move up, you're looking at like 40 cents of profitability because your short option is going to gain value against you, while your long option is going to gain value in your favor just a little bit more. It's an easier exit to make $100 or $200 on this thing if you diagonalize it.
Yeah, and you can sort of see this, and this doesn't take into account passage of time. We're assuming this happens like right now, but the 435 calendar spread with the December, January is trading at, let's just call it 410. You move this strike to the 430, both of them. That's synthetically having the stock rally $5 right now. It's trading at 430. So you make 20 cents on that $5 rally. It's pretty much nothing. Most of the value that you're getting out of this calendar spread is via time and sideways movement with that position. It's not really the delta. So,
yeah.
But do we do something in Microsoft now that it's been brought to my attention?
Good.
I think this is a diagonal spread. I think it was the 425, 435 that we had. Because you're right, vol is cheap. I mean, you have implied volatility in the 20 handle. The stock has not participated in the upside like everything else, like the other big names. I mean, I think this is an interesting play. 867. And this gives you, so if you have an explosion to the upside, you're paying, $1.25 less than the width. So intrinsically, the lowest this could be is $10. So you have $1.25 in like worst case scenario if something crazy happens. Let's see if I get 870. There we go. 870 got price improved to 865.
Lovely.
Yes.
Manny got caught in the Tesla storm, has a 275 straddle in December. How would you manage it? So this actually, I mean, you're still at the expected move, even though it's significantly in the money. There's still $700 of extrinsic value in the put. So if you wanted to hedge some delta, you could certainly go inverted. It just depends on how much premium you have right now. So you could go all the way up to 315 depending on the width of or how much premium you have, but there's no way you have $5,000 in premium. So we need to know how much premium you have, but basically we probably wouldn't go wider than what premium you have, unless you're trying to just like cut the losses pretty dramatically. Like you could consider doing that, but I personally don't really like locking in a loss with an undefined risk position. But I mean, this is a crazy move. So in this case, it's not the end of the world. But yeah, you can move the put up. I wouldn't go further out in time. 42 days cycles where we want to be anyways. But you're either leaning decently short with a 275 straddle, or you cut deltas a little bit and you move that put up to get more premium.
Yeah, it's a tough call. The trader in me would sit on my hands until we had a down day, but that's easier said than done.
Yeah.
You wait till you get a little bit 10-point pullback, 15, 20, and then you roll it. But it's a tough one.
Yeah.
I'm sitting here with a broken wing butterfly right at the money. This is 30 points out of the money a day and a half ago. Crazy.
Mm-hmm. Lulu Strangle, 273.90 for December. 273.90. So yeah, earnings coming up. Earnings coming up December 5th, December 6th. In the December 6th cycle, we'll say. There's a big jump to 50% IB there. So it's definitely in that cycle. Is this the right strat? I'm not sure this is the right strat. But if, like you said, figured it's range bound a week into earnings, yeah, you can. Like this trade will come in a little bit prior to earnings, but it's not going to get crushed really until after earnings. So you could take a little bit out of this prior to earnings, of course, but if you're willing to just hold this through earnings, then sure, this is a decent strategy. You have a nice wide range. You just can't have a big move against you. But if it's small enough for your portfolio size, you can manipulate it. You can roll the strangle into a straddle. You can go inverted, blah, blah, blah. But I've stayed away from undefined risk for earnings this year.
Yeah. Markets aren't awesome here. 20, 30 cents wide. Let's look at our open interest. Yeah. I mean, it's tradable. It's not like Let's put volume up here. Yeah. Tradable, but not great liquidity. Another thing. For me, it's just too much capital to put into this. But if you think it's sideways, I don't hate the idea. Slightly long leaning.
What's the pick for next year's trade, for the year-long trade? I don't know. Might be DraftKings. DraftKings is just a good one because it's $40, and even with IV rank at 15, the bottom of the barrel, it still has 45% IV, 50% IV. So you get good premium for the risk. And that's kind of what we're looking for a year-long trade. We want to be able to collect a ton of premium to offset intrinsic moves against us. And that's what we did in DraftKings. I started with $395 on a straddle, and now I have $1,842 in premium collected, which is a lot relative to the stock price. Harsh says long upstart, the 50-80 call spread for Jan. Today the stock exploded and the spread's fully in the money. Would you close it or hold it? Nice. Yeah, what's the deal with this?
That's got to be a mega win.
Yeah.
I would think.
So the answer always comes down to how much you can make left in extrinsic value relative to what you can lose. So you have the January 50-80. So the January 50-80, which is going to trade for $3,000 at expiration, is trading for $1,972 right now. So you have $1,000 left to make on this if it stays above 80. But I don't know. This one's probably a close from me. I would rather close this and then restructure it for, like, if you're still bullish on this, you can restructure something like a January-December diagonal spread.
Yeah. Take like some risk off the table.
Yeah. They don't have the 80 strike yet because this move was so huge in December. But yeah, I might close this, and then on Monday they'll have more strikes in December, and you could do like an 80-90 diagonal spread for a quarter of the risk on, and still have a decent return if you get the continued move.
Yeah. I was going to throw out the idea of putting on like a put diagonal spread as like a sort of hedge, because you have $1,000 left to make in the net through January expiration. You could do something like the 75-65 January December. It trades at like $5 and change. So if the stock stays at 80, you'll make another $500 or $600 over the net, plus whatever the January put is worth over the next 70 days. But this gives you a little bit of a tradable hedge. If the stock goes down 5-10 points, you can kind of take some profits on this as a hedge on your original position.
Yeah.
But that uses more capital to put that sort of position on. So
I haven't traded any strangles yet, fearing call assignment. Should I be worried? Not really. I mean, if you're selling a strangle, you already have the risk of 100 short shares of stock, and you already have the risk of 100 long shares of stock. So assignment doesn't change that really. Assignment usually means it's deep in the money and it's a loser and there's no extrinsic value left. So you're already at a 100 delta position at that point. So assignment is not something we think about at all.
Yeah, it's the same risk. The option versus being short stock is the same risk.
Yeah, if you paid $7 for the upstart spread, it's currently at 20. I would definitely close that out and then just restructure it, or do what Nick said. I like that hedge.
Yeah, you got to do something. I mean, you hit a mega home run, so pat yourself on the back for that.
Yeah. Steve closed his CL strangle for 24% profit in one day. Volatility is a beautiful thing. Yes, it is. Would you guys hold it to get more out of it since the volatility keeps falling? No. We know that if we have a strangle on, our day-to-day profit is significantly less than 24%. So you either had like a slight directional lean or you just had volatility crush in a decent way for you. But 24% in one day is well ahead of any theta decay curve. So when we know that we are ahead relative to time, we usually close it. We can restructure it, put on something new, but yeah, we're almost always taking that off.
Yeah. And I pulled up if you want to see the oil implied volatility, type in OVX CGI, and it pulls up the crude oil VIX style volatility, and it's down 6% today. I wonder if that's helping my iron condor I have on. Maybe a little bit. Yeah, it's coming like 30, 40 cents. Nice.
There you go. Do we have core portfolios and trade options around it, or strictly options? Pretty much strictly options. I mean, there's nothing wrong with the core portfolio trading around it, but we take 100 delta stances at certain points in time. Like we'll buy micro futures contracts, we'll sell micro futures contracts, and then we'll have like a year-long trade on something like that. But maybe next year I'll do like a year-long short put and SPY, something like that. It's pretty hefty buying power though. Don't like that. What about a GLD diagonal spread on the call side?
I like that. I mean, I got long silver today. I also have this butterfly in gold in GLD, so I'm positioned in a similar way. I did SLV. I bought 2 of the 27s, sold 1 of the 29s. I did this at 338. It's probably trading just about this. It's trading at 325, so you could do it 10 cents better now. So I'm with you along the metals a little bit.
Yeah, I just bought a 250, 260 diagonal spread, long January, short December.
In GLD?
In GLD for $5.
I like it.
Yeah.
250, 260. There you go. Very nice.
Yeah. Really low debit relative to max profit there. So we'll see. I wanted to ask you about betting on the election. Did any of you guys bet on the election and then voted on that bet?
I did not.
No, I did not bet.
Yeah.
Yeah, but it was interesting to see the betting odds change. And then also the betting odds change with the market. So like when they started doing the polls and they had the United States up and they're showing, the red versus blue, blah, blah. But then you saw the markets ripping higher, Bitcoin ripping higher, and then you refresh the odds and it was like minus 300 for Trump instead of minus 180 or whatever it was.
Yeah.
That was interesting to see. But no, did not bet on it.
Yeah. Maybe next time. By then it'll be in our platform, I'm sure.
Mm-hmm. United Airlines has doubled in price.
What happened?
Yes, it has. Yeah. Yeah, I mean, this could be a number of things, but people are traveling for sure.
I have the 57.5 put left over, I think from earnings, like around here. Stock was literally $30, $40 lower. Unbelievable.
Crazy.
Was that a play to get short it? Small?
I don't know.
85.80. Let's see if we get filled.
Could. It's an easy way you can get deltas in there for sure.
All right, I'm going up to 295 and then let's sit. There you go. Did we get out
Manny
6,000? Let's see if we got it. No,
of course.
It's still 59.98. move.
Manny has $22 in Tesla. So yeah, you could go to the 295 if you wanted to, cut some delta, pick up another $6. You could go to the 300. So like you could go 25 points wide and pick up another $6, $7, $8 actually, moving the 275 to 300, and then you would be left with, let's see,
basically
you'd have $3,000.
Yeah.
You'd have $3,000 on a 25 point wide spread. So you would make $500 if Tesla drops back down to 300. So certainly something you could do. I would say that's the furthest I would go in the 42-day cycle, is up to the 300.
Mm-hmm.
But yeah, I agree with Nick. If it's a small position relative to portfolio size, I would be waiting for a move down.
Yeah, it's tough. It's tough to roll up into this. Obviously, you could have said the same thing yesterday, and then today it's up $20, and then you're happy you did the roll up. But we're looking at them now, and it's tough.
Thoughts on an MCK double calendar?
MCK. McKesson. I have no idea what this company is.
Yeah, this one's gonna be tough. This one's a no-go because the markets are so wide. You can't have a four-legged strategy with really wide markets like this. You just get killed on the
nobody's trading these either. We can just pull this up just for fun to just see how wide these bid-ask spreads are. Worth 40s. So you got a $4 wide bid-ask spread here. It's anybody's guess where you're getting filled in and out of that. So
yeah, and another problem is the secondary part of this is putting on a stop loss with a 10% profit and a 10% stop loss. I'd be willing to bet that right after you got filled, you would immediately get filled on your stop loss because the markets are so wide here that there's nothing that tells you that you wouldn't get filled for a loss, right? Like the markets are $4 wide. If you have this on and your stop loss at 10% of a loss is like 50 cents, you could get filled literally immediately. And there's no rhyme or reason for it just because the markets are so wide.
Yeah, the bid-ask spreads here can definitely move.
Yeah. Let's see here. Let's see. Been watching Coin and Tesla Fly. If we think there's two-sided action, how can one participate with lower risk? Iron Condor, if anything. And how do you pull up the chart for a specific option strike? You just right-click on it on the bid or ask, and you'll see the menu pop up there. But yeah, two-sided action, I would say just a Iron Condor is where we'd probably go at this point.
Yeah.
And it's going to be like a set it and forget it Iron Condor.
Because the volatility is so high.
Yeah, and you can't be like moving up and down into these crazy moves. It's just kind of like, here's the range. Let's come back 3 weeks from now and see if it's here.
Yeah.
Yeah, Albert, I just closed the Tesla position. So I sold out of the spread. I sold out of the whole thing for 90 cents or 80 cents. So that was a big loser there, unfortunately. But yeah, there's nothing you can really do when you have this move up 100 points in a week, pretty much.
Yeah, it's just over. Live to fight another day.
Yeah, it was a small IV trade that had the right idea, just a crazy move.
Mm-hmm.
Would you recommend a long call or a short put at 293 for Lulu?
Well, those are way different positions.
Yeah.
The 290 strike, long call or short put? So I mean, you don't have the same sort of downside risk with the call, but you have a lot more value. So if the stock drops 20 points or 30 points, your call goes to zero, whereas your put's profitable. So that's a big question. Long call is an upside speculation. Short put is a play on volatility and time and sideways movement. You don't need to be directionally correct, so they're vastly different positions.
Yeah. How would you manage a Netflix December 20th short put spread? 760, 770 at 475. If you collected 475 for this, I'd probably close it or consider closing it. If you bought it for 475 and it's a bearish trade, there's nothing to do other than just hold it and see if you get a continuation here.
Yeah.
But yeah, if you sold it, closing it would be pretty close to 50% profit. Boeing. Can it recover?
I have a leftover call here. I wonder if I should have looked at this yesterday. All right. What are we thinking? Get long it?
Yes.
All right. I just closed out of that leftover long. I don't know when that is from. Let's see. Where is this? Why are my order chains not coming up? Okay. So we're getting long. That's the play.
Yeah.
I think we do it a diagonal again. Oh, I did that so I had the 165, 175. That I did on the 13th of September. So that's a couple $100 loser. That's no bueno. All right, Boeing, get long. We got short, United, long Boeing. Seems
interesting.
It's a weird pairs trade. When we get into the 155, 165.
Yeah.
I don't like that. 575. All right.
My Tesla call is up 1,500%. Should I hold it? Yeah, Tesla was definitely, and we kind of felt that way too. I just played it more neutral. I mean, you had to believe that if Trump won, that Tesla would rip. Just maybe not this much. This is a big rally.
Yeah.
But yeah, if you have a call on, you could hedge that call by selling a call against it. You could buy a put spread against your call.
Do we know the strike?
You could buy a zebra. I don't know. It's just up 1,500%. So any strike that's probably deep in the money.
Yeah. I mean,
you can hedge this. You can hedge it with a spread.
Yeah. It depends on the duration. Like if you're short term on these, you've had the perfect storm of obviously what happened, and you got the move, and you've had volatility explode. So all those factors, like if your calls are at the money in November, like if you bought these 320s in November, these are going to move really, really quick. Obviously, for or against you, if the stock continues higher 20, 30 points, it's obviously more profits on the table. But this has been as good as possible for your position in terms of the pop in volatility. The 5-day change is up like almost 9-10%, which pumps up the volatility. You have that call skew now that's baked into the market here. Even 7 days out, you go up to the 350 versus the 270, we'll call it. They traded 3x So you've had everything kind of work in your favor. You know, sometimes you got to ring the register.
Yeah.
Take some profits off the table if you got more than one, 10 contracts, 5 contracts, whatever.
Yeah. Brett, when you're right clicking on the strike, you don't have an option on there. Remove the option and then just right click on the bid or ask.
Yeah.
And you'll see view option in chart. If you have an option on there and you right click on it, that's when you see delete leg.
Yeah.
What's going on with currency? Zero blasted. Trump winning was a strong dollar potential result, and all these currencies are weighed against the dollar.
Yes.
So 6E down, 6J down.
Yeah. You can pull up the dollar if you type in $DXY. It's the dollar index value, and you can see we had a big move into the election, reversed some of that on JPOW, and then now we're back up.
Mm-hmm.
I got long some micro euro today. Well, I got long it into yesterday's move, took profits on that, and now I'm back in it. 10726.
Anybody getting into Airbnb post earnings? I don't know.
It was
Airbnb is dead to me.
It's dead. I think it's the worst.
Dead.
It's awful. Dead. I'm a hotel.
Did I ever tell you? Yeah. Did I ever tell you the story of where it was like a guy's trip to Wisconsin, and the owner of the Airbnb we rented was like spying on us?
No, that's creepy.
Yeah. They were like, some guys were smoking cigars outside, and they were like bringing the cigar before, or maybe they were bringing them in, not lit, but they're like bringing them in and cutting them over the garbage. And they got a text from the owner and was like, no smoking cigars inside. And we're like, how is this possible unless you're literally watching a camera and watching us like operate here? It was very weird.
Yeah,
so yeah, I'm off the Airbnbs. I'm a big Priceline head now. You can get great deals on Priceline if you do the roulette wheel. Love it. And you don't have to deal with spying on people. Crazy. Sold the December call spread in IWM, 240, 245, getting tested. What to do? Call spread, nothing much to do other than roll it out in time. If you want to, you're already in December though. So, and it's narrow. Like this is one we'll probably just hold.
Yeah.
If it was in November, we'd roll it to December.
And there's no way you did it prior to this move because it's trading at $1.90 right now, and the small caps are up, let's call it 15 points. So just to do like simple math, we moved this $15. Like I don't think you sold this at 50 cents ish prior to that move. So you must have done it over the last couple days. So it probably hasn't even moved all that much with the amount that vol has come in. So I think you hold it.
Yeah. Did you work as an architect before starting as a trader?
No, I did not. No, I studied architecture for 1 year at college.
Oh.
I got into an architecture program at Kansas, but I unfortunately am not the most studious of people. Yeah.
Now you're.
It ended up it worked out well for me. It was good. This is better. This fits me more.
Yeah. Can you show us P&L over 6 months or something that shows performance over time? We don't have it on the follow page because we need to not. It can be a compliance issue if you come off as like financial advice, which the follow page is not. So, I mean, we've done well over the last couple of months because we're like permabulls as most millennials. But yeah, I mean, the general market is up what? An insane amount this year.
30-40%. But it also doesn't matter. It simply doesn't matter because this show is not like the purpose of this show is not to like make buku cash. Like that's not the show. The show is to show how to trade options, the mechanics, the adjustments, the ideas, where we find opportunities, what we do with positions. Like that's the focus of the show. We're trading one lots on the show as just a way to show how things work. I mean, this doesn't exist really anywhere else. So that's the purpose of the show. The show is not for somebody to follow and make X amount a year. You should determine what your own risk tolerance is and your capital limitations and your directional assumptions. That's all your prerogative. But as for option trading, that's what we're trying to show. We're trying to show how options work, what we look for, you know, the things that the trades that we set up, how we manage those trades. That's the purpose of this show.
Yes. Because everyone has different account sizes. Everyone's trading different sectors.
Yeah.
It's not a one size fits all.
Yes.
SoFi.
But I had some bangers from the chat over the last like couple weeks, so it's been a nice little run.
Yeah, the chat and fast market have had a very strong win rate.
Yes.
SoFi, I've been scalping the stock for months. My brother's friend's a big SoFi head. I got to text him after this show. But yeah, it's basically doubled in price. Love to see that.
You're going to say that a lot.
Yeah.
Everything
doubled in price. Yeah.
So good.
What option can I take on Tesla for stock replacement strategy?
It's going to be
you're playing for continued upside. Yeah. Continued upside is tough, but I mean, it definitely defined risk. Even a zebra for like 7 days is still $2,600.
Yeah.
So I might just do a diagonal spread. Like there's such call skew here that it makes me want to lean towards a diagonal spread if I'm doing anything.
Agreed. It's a cheaper way to get the same amount of delta. So even if you think like, okay, let's do January, December, and we'll do the 40 delta. So we'll say 350, and we'll go to the 20 delta here, and we'll do round numbers, 400. You get 23 deltas for $1,400. You know, that's the equivalent of buying 4 or 5 shares of stock. So you're getting, 5x the delta exposure. Obviously, you have risk on this trade that is more than buying the stock because you're trading out of the money options, but it just goes to how much call skew there is and how much leverage you can get with like a diagonal poor man's cover call, something like that. Even if you want to go more in the money and do like the 300 strike and then sell a 20 or 30 delta against in December, you sell the 360, even that at $3,000, that's the equivalent of 10 shares of stock, and you're getting, 30. So that's what I would do. It's going to be tough to do 100 shares of stock because of how high volatility is now. There's not going to be much of a difference in the margin in that situation.
Yeah. So like even that 320, 360, the classic setup at the money and then selling the expected move short option, that's $1,900 for a 40-point wide spread. If it gets up to 360, you would make over $2,000 on that trade. So the move from 320 to 360 is if you owned 100 shares of stock, the move from 320 to 360 is $4,000. So you're basically risking $1,900 to make half of that. So it would ultimately turn into a 50 delta win in that sense, while risking how many shares? 5 shares.
Yeah.
So diagonal spreads, especially in a product that's ripping and is getting call skew here, you can reduce basis so aggressively here. Like the 360 call is trading for almost $1,200. The at the money January call is trading for $3,000. It's a big divergence in premium. Steven started a coin strangle, maybe Stefan or Stefan, let me know. Started a coin strangle 2 weeks ago at 172.90, rolled the calls down to 240, Now I had to roll the puts up, and I'm in the 240 straddle. Should I roll out in time?
Do we know if it's December or Jan? Or December or November?
I don't, but if it's November, we're definitely rolling out in time. If it's December, no problem staying in December.
Yeah. Agreed.
But yeah, the 240, rolling the 240 to December, just the straddle alone is picking up another $2,100. So depending on your premium received, you could, if it's in November, you could roll it from a 240 straddle into an inverted strangle in December and pick up even more. But I assume it's in December, in which case we don't need to really make an adjustment.
Yeah.
December. But yeah, same story with Tesla. Like you could go inverted up to a 260 strike. That's as far as I would go. Just depending on what you want to do.
Mm-hmm.
Any plays on toast post earnings? Oh God, where's this thing at? No, this is at 37. This makes me sick.
I know.
Remember we had like a diagonal spread on or something when it was at 10?
Yeah, I nuked Katie. I had her buy calls in that into earnings, and it like went down like $1 or something. Now it's tripled in price. Oof.
Makes me sick. Any plans in toast post earnings? I don't know. It's tough. It's tough when you have a huge move like this. That's multiples of the expected move through December.
Mm-hmm.
So if you're fading toast, you can get cheap deltas at the very least. Like a zebra in here is really cheap. Like a 39.37 zebra in December for $4. If you're fading it.
Yeah.
Not really cheap, but cheap relative to shorting stock for sure. Yeah. Disney earnings, we'll come back to that next week. Can you explain the Tesla diagonal scenario once more? It's just, sorry. So yeah, like buying a 320 long call in January, selling a 360 short call at the expected move in December. That's like our traditional setup. Long the option that's further out in time, has a lower implied volatility, has less theta decay because there's twice the amount of time. Selling the at the expected move option in December. That's our cookie cutter setup if we're playing it to the upside. Same thing would be said if we're playing it to the downside. Long the 320, short the 270 or 275. Either way, you are reducing cost basis aggressively because volatility is being pumped into the near-term cycle given the move. And you can make a strong return on capital with these defined risk diagonalized trades. And risk is defined in case you're wrong. If Tesla falls out of bed and drops dramatically, you're going to lose less than if you bought 100 shares of stock for sure. But that's it. 11:59, 12 o'clock, time for lunch. But yeah, thanks for tuning in. Hopefully this segment was helpful. If you've got any further questions, you can reach us on Twitter. I'm at Trader Mikey B. Next to Trader Nikki Bat. Happy birthday, Katie. Happy birthday, Garrett. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, but we'll be back on Monday, same time, same place, 11 a.m. Central. We'll see you then. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Oh yeah. Tasty Nation, good morning.
We are back. It is Friday, November 8th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. We're here to wrap up the week that was, and what a week it was, Ilya.
Oof, what a week. So much.
And it really wasn't just this week, right? It's been the past several weeks. We've had earnings reports. We've had a significant amount of macro data, from jobs data to some inflation figures. We've had a lot of information about the housing market. Who can forget the presidential election? And oh, by the way, there was a FOMC meeting this week.
Yes.
It feels like today is a day where people are catching their breath, because as we turn to the slides, we can just say this perfect storm of events is now over. We had all these different macro and political and earnings headwinds jump into the market, and today we're actually seeing fairly light trading volume on the other side of it. So as we go to the charts here for this Friday session, we see that it's important to first discuss what's on the calendar for next week. Granted, there are some things that are important, Ilya.
Yes.
And I don't want to hype people up too much, because while we care about the U.S. inflation report, the Fed meeting was just this week. So how much influence will it have if there's another inflation report due prior to the next meeting? Maybe not as much as one might have presumed. There's a Powell speech, of course. How much will have changed between what he said yesterday and what he'll be saying next Thursday? Probably not that much by way of the data. So important things, but this also feels like a little bit of a hangover week, where we've now moved past this huge, gigantic wave of information, data, events, and now we're kind of just settling up. Barely 600,000 contracts traded on the S&P 500 today. In the futures market, more or less substantiates the view that people are just tired and they're ready to take a break.
It's an interesting sort of situation, because if you look at equities, it looks that quiet. If you look elsewhere, it's not. It's something akin to a steamroller in other markets. But if you look at equities, indeed, and I think NASDAQ probably tells the story more than anything. We talked yesterday with Tom and Tony and Dylan on last call, and Tom put me on the spot. He was saying, if you had to short something, what would you short? And I said, well, the one thing that sort of is sitting in the spot, and not that I would do it, and I haven't, but NASDAQ, because it's literally at the July high. So if it's going to have some kind of a I'm tired, I'm taking Friday off kind of a reaction, that would be the one. And indeed, if we look at the markets today, it's a little bit soggy. Volumes are low. Everybody's tired. But NASDAQ is the one where the risk reward to the downside, if you wanted to do that, is attractive more so than elsewhere. Because, I mean, S&P is doing fine today. It's limping up a bit. Dow is probably a little bit better off. And the NASDAQ is stuck, essentially. A sell-off this is not, but it's not a sell-off. A sell-off this is not, but it is stuck.
It's stuck on a day where the market's treading water very lightly. But I want to bring attention to perhaps the most important development that I've seen come across my screen today. That is a 14 handle on the VIX. That's a 14 handle on the VIX that we really haven't seen all that often since that explosion in vol at the end of July. I'm drawn to that.
Trouble.
Oh, I'm not asking for trouble. Well, it's asking for people to treat the market like it was back at the start of the year.
Yes.
When you have positive momentum, when stochastics have been in overbought territory, when MACD's been trending higher above its signal line and the VIX has been below 15, the single best strategy you can lay on is an at-the-money call spread in ES. And if you're feeling riskier, you can go out of the money because it's a strong momentum market. So heading into a weekend, right, laying into a new position here, maybe not the prudent thing as we run away from our initial breakout point, but on pullbacks, I look at that 1 week moving average now having sliced through the former all-time high, which should be former resistance turn support now. I think right around 59.30, 59.40, if we were to see any weakness down there, and that is 80 points from here, but if you were to see any weakness down there, first blush, you'd have to take it as a long, given the broader structure of these markets, how they've broken out recently.
I agree. I think at this point, my thought process in equities basically into the end of the year, unless otherwise shown by the price action, because you can see a number of scenarios here, but just looking at the price action, looking at the chart, you'd have to look at this and say, okay, we've had a massive, strong breakout. Obviously, over the past, let's say, 2 days, the momentum after that initial post-election surge is cooling. Of course it's cooling. That makes sense. It was a massive move. We haven't had a follow-on catalyst of that kind of significance. Obviously, there's but the one election. So you would have some room here for things to digest, but you've had a very clean bullish breakout. And so if you were to slump back to that supporting line, unless you closed back through it, you would look for any sign of stalling at that level. Doji candles, hammer candles, anything with a long wick, anything that looks like it's respecting that level. And then even on a 4-hour, 8-hour chart, you see that thing attempt to carve a bottom, that's a buy.
VIX here had a really interesting development this week. Earlier this week, it spent a day where it collapsed by 21% over the span of 24 hours. Now, I'm not going to back myself into the corner that I will never back myself into, which is quoting the VIX in percentage terms or doing any technical analysis on it. But in previous history, when you see a decline by that scale in the VIX, usually once the market goes into a low volume state like it is today, it produces a small pullback that lasts 2 to 3 trading sessions, about 2.5 trading sessions.
Which would be consistent with what we're talking about.
Right. And this is the, I saw a study that was done over the past 10 years earlier today. I can't find it. I should have saved it and left it in one of the bookmark tabs. In any event, right, that kind of comports as well with where we are finding ourselves in terms of this momentum. One of the hallmarks of the bull market this year has been whenever we've been around 2.5 to 3% above our 1 month moving average, the market gets a little frothy in the short term, and it has yielded in this bull run periods of consolidation, if not slight give back. But we really don't clear out the trend of the swing of higher highs and higher lows. And so I would posit here that with the 21-day moving average at 58.61, we are trading now more than 2% above it. We're starting to get into the froth zone where if this is a market like it's been in the first half of the year with a VIX above or below 15, momentum indicators positive. Part of that momentum setup was still the overextension here and the overheating. Does that mean I want to short the market? No, but it means that if I'm going to be long and I'm looking to get long and continue the momentum and I don't have a position in, it means that I should use time on my side, because perhaps the next 2 or 3 days could be a little hairier. But beyond that, it's perhaps still the right volatility environment plus technical setup to substantiate for the longs. That's why I don't think anyone's going to be surprised about this that watched Futures Power Hour yesterday or overtime last night. I see no reason whatsoever right now to make any adjustments to the position that's been working for the past several weeks. Put on immediately after the Fed meeting in September, the long 6,000, short 6,200 call spread here. There's 53 days to expiration and sitting at 60.89. This continues to work. If we get a little bit more push here, I think what I may do is take some off and roll it out, or on something on a shorter term basis, sell a call spread to kind of neutralize any risk. I haven't made a decision yet. I know I'm talking about it. I'm very much a Jesse Livermore type of trader, right? The money's made when you're sitting on your hands doing nothing.
That's right.
And because the money is being made right now, I'm sitting on my hands. I'm not going to overthink it or make unnecessary adjustments to the position. I'm very comfortable with this. I'm as comfortable as I was with being long stocks right now as I was at any point in the first half of the year.
I mean, this sort of echoes my thinking in the dollar. The dollar obviously had a massive run on the election. It had a little bit of a pullback the following day. I used that pullback to buy more dollars. I got more short against the euro. I got more short against the pound. I got more short against the Aussie. All those dollar bets that I took off as the dollar started to pull back about a week before the election, week and a half, I've put a lot of that back on. And today sort of demonstrates where that looks to be taking us. And it's the same sort of logic. The trend is there. There's no reason to fight it. Now it's just looking for pockets in that momentum where you get a little bit of a pullback, put on a little bit more. The stair step continues. And your audio is gone.
Sorry, I had to clear my throat before. The NASDAQ here is turning up near the July high, which was at 21,237 3/4. We breached it yesterday. We breached it today. Often is the case, forget the trader's perspective, right? Because if you're a tasty trader, you're not in the market here at the July high and holding on to your 45 in, 21 out cycle here. You've gone through a few iterations since then. But for other types of investors or market participants, they may be looking at a return to the July high and say, you know what, I've had my money trapped in this for the past 3 or 4 months. I can now get out at break even. I can then diversify elsewhere, if only for a little while. And so some churn up here, again, a very low volume day, 282K. It's tough to read too much into it. I know that we'd like to see more volume, although the last time we asked for that, the monkey paw curled and gave us the price action on October 30th and October 31st, and that came with higher volume. So, you know what? Maybe the low volume melt up is just fine. But if we start to carve up and press through here, you know, the continuous contract, the triple Qs, the average investor in America is not trading NASDAQ futures. They're holding the NASDAQ, they're holding the triple Qs. Again, they're going to bed this weekend after having seen a portfolio that really didn't do anything or traded sideways for the past few months, if not drawing down a little bit. They're now seeing it finally break its highs over the past 4 months. And that's a meaningful psychological development for people. It tells people that they should stay invested, that they should stay long, that they should not get out at these levels. It's an 11.3 IVR. When vol's low and momentum's positive, it is very, very difficult to justify looking to get in front of the market by saying this is going to be the top. I'm going to sell a call spread here. I understand when people are tempted when they go, you know what, vol's low, we've run away. I'm going to buy a shorter dated out of the money put so that if there is a pullback, I can capture that without sacrificing my longer term positions. Completely fair. But this is, you know, we're heading into a weekend, the volatility's down, your NASDAQ's up, your S&P's up. I asked Dylan this yesterday on Overtime, Ilya. I specifically didn't go to you because I knew you and I would have a chance to talk about this today.
Mm-hmm.
What's the biggest risk now for the markets through the end of the year? Because I'm trying to put together my own wall of worry of concerns that we can scale. Yeah. And I'm having difficult putting together that story myself internally.
I don't think it's very difficult at all. You just need to envision what happens next if you back away from exactly what the markets are telling you outside of equities. Because what the markets are telling you is that we are heading into a much more inflationary environment than was expected. This is the story that we've seen play out even before the election, since really the beginning of September, when it was clear that the Fed was going to cut, that it was going to cut by a lot, and that the economy is not weak. That essentially the Fed was pouring gasoline onto a live fire. And you saw what those consequences were. You saw yields surge, break-evens rose, the curve steepened, the dollar rallied. With this election outcome, more cowbell. All of those things get more dynamics, they get more momentum, they get a longer tail. That is not a happy environment. Potentially. So the decision that you have to make, essentially, is, are we at the turn of the year last year, or is this different? If we're at the turn of the year last year, then what we're talking about is the U.S. economy is strengthening, stocks have gone up a lot, and rate cuts are falling away out of the outlook. We start last year with the markets going, the Fed's going to cut 6 times, and the economy is strengthening. And at the time, you and I were looking at this and going, what are they, nuts? What 6 cuts? Where? Why? For what reason do we need 6 cuts in a strengthening economy? And sure enough, those cuts fell away. But because the market reckoned, well, indeed, why do you need all these cuts? The economy is fine. That was not an issue until the economy started to turn later in the year. Mm-hmm. We are not in that environment. At that time, the global economy was strengthening. We had strength building in Europe. We had strength building in China. All of those things are not the case now. Now, the world has bifurcated into there's the US and then there's everywhere else. And this election outcome only makes that contrast more stark. So you have this upswell in borrowing costs just as other economies can ill afford it. And you have to ask yourself, when that squeeze comes and something fails somewhere, at the same time that all of the credit that people accumulated during COVID, all of the corporates that piled up 5-year money while cash cost nothing at the end of the pandemic, that's rolling over next year. It's rolling over the year after. There's a long wall of redemption all through 2025 and into 2026, where people have to roll over their debts at 200 times where they incurred it, 300 times, 400 times. At some point, economic vigor in the U.S. doesn't matter in that environment because people just need cash, because they need to come up with money to cover that role, and because overseas, Europe, Asia, anywhere you look, the credit squeeze is going to be awful, and the stronger dollar is only going to make it worse. So it's not difficult to envision that something is going to snap and money is just going to run to cash. So one thing to look at here is, yes, U.S. markets are doing great. You look at European markets and they're withering. One place where I'm very comfortable being short is Europe. So I'm short FEZ, Eurozone stocks. I laid on a short on UK markets earlier today. That one started to break down. EWU is a good benchmark to see what that looks like. So this is a very positive story for U.S. markets and the dollar right now. It is not difficult to envision that all of this squeeze is going to bring an issue from elsewhere. Yeah. And because portfolios are international, money is just going to have to flow to cover whatever that issue is.
One of the ramifications of this Trump presidency is that it actually may impact where capital goes across the world, in part because of how financing conditions can change, right? I mean, just taking everything at face value, if Trump is going to reduce U.S. Funding obligations for NATO and or force partners within NATO to take on more of footing the bill, if Europe, not that I think it's a great power, but if Europe ever wanted to prove itself a great power, now would be a good time to raise an army. And if they're going to do things that increase their defense posture in Eastern Europe to fill the gap left by a lack of U.S. funding, they're going to have to divert funds from elsewhere. They're going to have to invest less in their infrastructure. They're going to have to do less towards social spending. And maybe something unpopular like expanding or extending the retirement age, which Macron has done in France to, obviously much consternation. That's why you have the yellow vest protests a few years ago. And to me, that means if you're looking for where you're going to see the right flow of funds, right, are we going to be looking at European equities in good standing? Well, if these countries are going to have to divert some of their capital towards, say, military defense postures, then it could hurt their credit conditions, right? I mean, like, this could be something we've seen in the past. The relationship between the governments and the banks, the governments and the private sector becomes this Ouroboros of sorts. When there's a problem in one, it filters into the problem of the other. Mm-hmm. So if the budgets are stressed, then that could mean European equities are stressed, because then the banks are left on their own, where there may be less financing help theoretically down the line. We know how Germany has been a problem. The Bundesbank, they have their Target 2 liabilities out there that they're always thinking about. That leads me to believe that U.S. will outperform European equities.
Sure.
Meaningfully moving forward. And this week we've seen the substantiation of that move, where effectively, because of the trade posture, and if only as a point of reference here, we saw today that Trump would be appointing Robert Lighthizer again as his trade representative. He was the trade representative, the tariff man for the Trump's first administration. Okay. So if we're going back into that kind of posture, that's the exact, well, first off, if you really thought that Trump was going to go with the 20% tariffs across the board, this is probably the sign that he's not going to do that. He's going to do tariffs. I don't know if they're going to be as extreme, because Lighthizer himself, when he was crafting these policies, he was a lot more, I'm not a big tariff man myself, but he wasn't just slap 10 or 20% on everything. They were directed. So maybe the market's not going to fear that as much, but even so, the impulse is to draw capital back to the U.S. these days. It's a dollar-long story right now. Bonds are even overcoming it, where they're rallying because people are just saying, hey, let's lock in these yields. Stocks are going up. If it's a dollar-denominated asset, this week has been very good for it, and it's very consistent with what we saw right after Trump's first election. So I'm going to operate by that playbook for the foreseeable future until something's proven wrong, or until we get some information to lead me to believe that we're not going to be spending it, what's the technical term, another buttload of money while the Federal Reserve is cutting rates. Because if we're spending a buttload of money while the Fed's cutting rates, asset prices are probably going to inflate.
Well, and as we look at sort of what is on the menu, were this to be a Harris administration, you would be looking at spending as the main vehicle for fiscal expansionism. This is not going to be that. This will probably be not so much austerity as it is tax cuts. And so, yeah, you could make the case, obviously, that there's a chorus out there saying, oh, Elon Musk is going to get tapped now to run a commission to run massive austerity and cut away parts of the government, blah, blah, blah. That's pie in the sky. Maybe that gets done. The likelihood that it gets done, it has any kind of meaningful effect, extraordinarily low. Because there is so much built up lobbying and so much constituency in all of this spending that maybe you'll tinker around at the margins for a photo op. But none of the big things, entitlements, defense, none of that is getting touched. Stop it. What's going to happen, though, is tax cuts, because that is popular. There is uniform appetite for that across all the various wings of the GOP. And so that's what's coming. That's inflationary because that's stimulus. That's pouring money on a hot economy by another vector. We'll see what that does to asset prices, but we know what it's probably going to do to yields, and we know what it's probably going to do to the dollar. That's a higher dollar, and that's lower bonds.
We talk about the spending and potential cuts. Right now, the fiscal year 2023 spending was $6.16 trillion. The largest components, as we know, that net interest on the debt is starting to rise, but ex net interest on the debt, Social Security, $1.15 trillion. Medicare, $848 billion, defense, $828.9 billion, veterans funding, $298.6 billion, Medicaid and CHIP, $633.8 billion. So if they want to cut spending significantly to offset, the increase elsewhere, if they're worried about inflation because of the tariffs, they want to cut spending to balance out the deficit. Maybe bonds aren't going to suck wind like they have. But it's been a really interesting week for bonds because I don't think it's surprising that we dumped on Tuesday night. You and I have been going back and forth for almost 6 months about this now. Bonds are bad, or Trump was bad for bonds. We saw that priced in. We had that priced in all through October, right? We were trading at 126, 127 in bonds. You were up in the, near 120 or 120, 115 or so in notes. Like there was substantial improvement. Trump's odds on poly market begin to shoot up. The polls get into the zone where Harris doesn't have substantial enough lead at the national level to think realistically she has a chance at the Electoral College, anything other than a 50-50 race. And so then we get that buy the rumor, sell the news, or in this case, sell the news, sell the rumor, buy the news in bonds, because Thursday and Friday this week have been effectively erasing everything that we've seen. We closed last Friday at 117 and 22 ticks. We're at 117 and 27 ticks. So Ilya, the depletion of vol, this is an IV index, and that's 36.2. We have this long lower wick on our candlestick here for ZB. And the Federal Reserve, perhaps, this is the smartest thing that they've done. The bond market was telling us very clearly since the September meeting, you guys are going too far too fast. The economy is not nearly weak as you guys feared it was. You don't need to do this. And so when the Fed lowered rates, the bond market said, nope, wrong call. Yesterday, while the Fed cut rates again, Powell came out and said, we're beginning to have the discussions about what it looks like to wind down the rate cut cycle, which may seem surprising to some because it just started in the prior meeting. But given how bonds have traded, we're now looking at a market that's saying the last Fed cut is going to come in June. So in just 2 meetings time, we're going to be having discussions that within the first half of next year, the Fed may say, you know what, we can only go to 3.75 or 4. So the fact that Powell acknowledged that yesterday, that the Fed isn't going to be able to cut to the degree that they thought they might, and that the economy is holding up better than expected, it means that they're sober. They have their hands on the steering wheel. And the market cares about that more than anything else. They care that the Fed is sober and sees the risks ahead. The mere acknowledgement that they said bond yields are going up because perhaps the economy is stronger than we anticipated and we may not need to do as much. We'll see what happens moving forward. That could be the seminal signal, along with the turnaround from the Tuesday low, the exhaustion move, that bonds are actually working through a bottom, and that dramatic depletion in volatility. Bond prices are falling throughout October as vol ratchets up. Vol has now plummeted. I think this is an actionable signal.
You got to be real careful here. You got to be real careful picking this bottom.
I haven't yet.
Real careful, because
but I'm thinking about it.
You have to. There are some really interesting. So I've been thinking about this more than anything over the past 24 hours. What would have to happen for the bonds to go up? What do you have to see? And the more you think about it, the more it seems apparent the only thing that you could really justify would be some kind of a turn toward risk aversion. It would be a turn toward risk aversion because the economy hits a wall. It could be a turn toward risk aversion because in the lame duck session, the Biden administration suddenly gets muscular and starts getting some things done. Like, for example, does something big and decisive in Ukraine, does something big and decisive in the Middle East while it's got a window. So risk aversion because something crazy happened. But barring that, there is very little argument that yields shouldn't be higher. Because what you have is a hot economy and the central bank that's telling you, we're taking it meeting by meeting and we're not on a predetermined easing course. That's part one. And part two, and this was possibly the spiciest part of yesterday's presser with Powell, you have institutional stability at the Fed. So if you were worried that the Fed was going to get diluted by doves, by some sort of a shadow FOMC, we've heard that talk, that a new Trump administration would try to create a sort of in the White House shadow FOMC whose job would be to second guess the Fed's every move and then publicly excoriate them about it. That's probably not on the cards. When Powell was asked very pointedly, if you were asked to resign, would you? No. If you were asked to demote yourself or somebody else on the board, would you? No, that's illegal. So from the market's perspective, you have a Fed that's determined to keep the architecture of monetary policies setting intact. There's stability there. And you have a Fed that's telling you we're very attuned to our dual mandate, and if inflation looks like it's running away, we are going to act on it. So it is under anything but an emergency of some kind. It is difficult to imagine bonds doing anything but continuing to fall. And maybe they'll go sideways here for a while and digest in time rather than correct in price. That's very, very possible here. But a meaningful rebound in bonds would tell me something wrong has occurred. And stocks are probably falling and risk is probably getting sold all over.
Well, if there's going to be more conflict in the Middle East, I'll let you know if the Ayatollah messages me back on Twitter. He still hasn't responded to my message from October 25th, so I'll probably.
maybe follow up. He's a busy guy. Yeah, it's all.
Yeah, I'll poke him this weekend because I did see in the news today that Iran, the FBI stopped the IRGC from an assassination attempt on Trump. So I'm not ready to say that the geopolitics of it all is out of the room. Because
no, definitely not.
As like an American, if another country is trying to assassinate any one of our leaders, I consider that an act of war. So
as one might.
So I think that if you were to think about the situation with Israel and Iran right now, there may be an incentive where if Iran really does something again, Israel may feel like they have the runway to just obliterate their nuclear facilities, destroy the oil facilities, right? Completely hamstring Iran's ability to generate the revenues that it needs in order to continue to fund its, tentacular operation across the Middle East, where it has Hamas and the Houthis and Hezbollah continuing to terrorize, innocent civilians, American soldiers, Israelis, right? So
that's right.
The fact that the FBI unveiled that today, that makes me think that we could be looking at a little bit of a geopolitical risk event bump on the horizon now.
And the message from Trump world has been they're going to return to that maximum pressure campaign on Iran. So sanctions are tightening, downwind, any kind of restraint that might have been out there on some of the anti-Iran players in the region, be it Israel, be it Saudi, be it anywhere in the Gulf, that's probably getting unwound.
The one thing here in the bond market, the swings that we have from the October 4th high, this is when the market really started to get riled up, so to speak, about the prospect of Trump winning. This is when he starts to break out on polymarket as well. We could call this the market skating to where the puck's going to be trend. in bonds. And I point that out because if we think about this, part of the decline is, okay, if you get all the tariffs, you're going to have structurally higher inflation. If we eliminate all these taxes, you're going to get higher disposable income spending. So that probably means it's going to be inflationary. If you think about the desire to have some sort of hand on the steering wheel for Fed policy, does a less independent Fed, in theory, make U.S. monetary policy less stable because it loses its independence? And the answer is yes. So then you have to price in a higher return premium. So as you decompose the long end of the curve, you start to go through, okay, we may get more growth out of Trump if there's tax cuts and some of the trade stuff happens, but it's almost guaranteed that you're going to have higher structural inflation on the other side of it, plus the lack of the independence. Okay, we have to push up yields to compensate for this. If Lighthizer in, if Powell is beating his chest there saying, like, you want to fire me? You can't do it. I'm
make my day.
Make my day, right? I take issue with that stance personally, because I think if you want to contextualize that by what the Supreme Court just said about broad presidential immunity for official acts, presidents are not liable for anything if they deem it an official act of the office. So if Trump says it's necessary that we fire Powell for American economic security, I'm sure the Supreme Court would say that's just fine if Powell sued and got it adjudicated all the way up here. But the promising thing is not only is Powell out here publicly saying, I'm not stepping down, I'm not leaving. We did have a report prior to the FOMC meeting yesterday that Powell and Trump did exchange information. And Powell said that Trump said he's going to let Powell stick around until the end of his term in May 26. Which, reminding everyone,
wise,
Trump let Powell into that job in the first place. He fired Yellen, and then he
appointed him,
and he appointed Powell. So Powell is Trump's guy. So the fact that they're working together, institutional continuity, and perhaps
the context is completely different.
That's why I think you can see a bounce, right? If all of a sudden, the tariffs are coming, but not as much as we feared. Powell's going to stick in the job. He's going to retain his independence. Okay, some of what we were worried about that substantiated the premium, if you will, in
a risk premium on sort of U.S. fiscal coherence, you might say.
Yeah, and that probably disappears. So the price action itself,
that's a good point,
is worth. I think we should keep that in the back of our head here for bonds. And if we begin to break those downtrends, right, the October downtrend in ZB here, I mean, that's really starting to get pressured. We can draw it a number of different ways for the sake of making the complete argument. Where we go back to the high that we have here in September, effectively. We can slice and dice this all we want. This is really, my finger is sliding across this mouse pad. Okay. So if we were looking at something like this from the high, you're still thinking that this is a market where it isn't a downtrend. A turn could be coming. I would like to watch the 618 here. I know that's about 1.5 points from where we are right now. But the 618 was really an important line in the sand where, given the fact that technically once you break below it, you're no longer considered in an uptrend. And if you've been avoiding the long side since we broke down through there on the 21st of October, which I haven't because I'm not that smart apparently, you can see here that it's been a really easy thing to stay away from, right? If you haven't been long since below the 618, you know what? You're either having a great time being short or you had a good time avoiding the pain. So getting through the downtrend, getting through the 618, getting back into 119 for the real more conservative folks out there. If I saw 119 in ZB, I would think that we have a lot more opportunity for maybe not a rally, but at least to trade around this as a potential meaningful low that we could base short put spreads on or iron condors around. This could have been the blow off this week.
I think if you extrapolate that thinking, and I think you make a very reasoned argument. If you extrapolate that thinking and say, you know what, the bonds had a bunch of craziness premium built in, and you had higher yields in part because you had this possibility of, you know what, maybe there's going to be an attack on the Fed. Maybe there's going to be dilution of the dollar as both a consequence and a policy onto itself. We know that incoming Vice President J.D. Vance represents a wing of the party that thinks that a weak dollar is a good thing. Strange though that is. But when we look at the likelihood that maybe now that idea is not as scary looking because Powell has taken the stance he has. He's already talked to Trump, so there's stability there for now. And maybe that risk premium comes out a little bit. If that's occurring, then what you're then looking at is perhaps a wave of moderation across the Trump trade universe more broadly. If the market is prepared to say, we've been baking this in for a few months, we've reached the point where it's been baked in for now, let's get more evidence, but in the meantime, let's lighten up on this. Let's divest a little. It's worked great. Let's take some money off the table. Okay, yeah, maybe that gives you a little bit higher bonds. It also gives you a weaker dollar. It also gives you weaker stocks. And it might put in a little bit of a bottom in gold temporarily. So you have to kind of extrapolate that out and then go, if you're not going to go from strength to strength in stocks, well, then maybe you don't go from weakness to weakness in bonds. Maybe you don't go from strength to strength in the dollar. Maybe gold finds a bottom. But you'd have to believe all of those things at the same time.
This is the zone that I'm watching over here, Ilya. For the more conservative traders out there, if we do see a break of the downtrend, we see price back above 119 in ZB, you have a credible case for a break of the downtrend that's been in place since September. And that's been a really nasty downtrend, not just in price, but for personal P&L. Let's talk about these metals and how they're disappointed by China. Immediately after the wake of the election result, we hear that the PBOC is moving forward with new stimulus measures. And so yesterday, out of the gate, we had a fantastic move higher in copper prices, where it was the
export numbers.
Yeah, and then we hit more stimulus.
As soon as those export numbers come,
and the
everybody
data
believes it.
So tell me, is China right now trying to grease the gears of their economy while they can before the trade war resumes?
Nope.
What's the plan? What's going on here?
So yesterday I spent all kinds of time on macro money and writing for the blog, talking about the mirage that is the rebound in China. So you had some very encouraging economic data this week, seemingly, that told you that there was a 4-month high on the pace of economic activity in China. Caixin PMI numbers came out and gave you a 4-month high on the composite index. That basically tells you that the pace of manufacturing and service sector growth together is accelerating and has accelerated. Interestingly, everybody always harps on official Chinese figures are massaged. Yeah, the official PMI numbers look much worse than these private sector estimate ones. So there's reason to believe these, because these are not official Chinese figures. These are from S&P Global. Yes, they're in conjunction with Caixin, a Chinese media company, but it's China, so it goes. But when you really get the big move, Aussie dollar soars, copper soars, you get export numbers this week. 12, almost 13% year-on-year jump in exports. That is the biggest increase since July of 2022. And you might say, finally, demand. China has external demand. This is great until you look under the surface. Those same PMI numbers told you, you know why things are at a 4-month high? Export growth. Interest from foreign markets, notably the U.S. That's where you start to scratch your head and go, wait a second. Aren't we looking at flavors of China hawks in Harris and in Trump? And didn't the U.S. electorate just pick the more assertive, more combative version? Are we not going to get, especially with Lighthizer there, more China-targeted tariffs? How is it that these exports, especially to the U.S., are booming? And you get your answer. They're booming because these tariffs are coming. But they're coming next year. And you have a window now. If you're a U.S. importer, because do not get it confused, it is U.S. importers that pay tariffs on the things they import. You cannot compel a foreign government to pay you a tax. That is a ludicrous thing to say. What you are taxing are the people who import the goods from those foreign markets. And if you're an importer, if you're a U.S. importer, say Walmart, of lots of stuff made in China, and you know the tariffs are coming, you're going to stockpile now. You're going to buy as much as you can and stick it in inventory before things get expensive. So this whole thing is a complete mirage. And if you're China and you know those tariffs are coming, you're not going to do massive fiscal stimulus now. You're going to do it when you need it, when the pain is more acute. So instead, you're going to tinker at the margins, and the PBOC is going to announce some more monetary measures that haven't worked in years and aren't going to work now because that's not the issue that they have. They need demand, not inducement. Inducement has now failed for 3 years, almost 4, and will continue to fail because nobody wants to spend. The latest FDI numbers out of China, falling at close to 30% year on year. Money is literally sprinting out of the country. They don't need monetary inducement. They need demand. And if you're Beijing, you're going to say, well, the pain is going to get worse later. We're not going to shoot our shot now. So for the coming months, what you have in China is every single thing set up to find out over the next several weeks, and we're starting to see it today, that all this positive economic data is smoke and mirrors. And that what it speaks to is much worse economic conditions downwind rather than the alternative, and everybody trying to front run that.
Copper's off by, that's a 2.96% loss today. FXI is down 6.15%. Gold and silver are likewise struggling. Gold yesterday rebounded off of its 50 EMA, 50-day moving average, to get back to the uptrend from the August, September, October swing lows. There it encountered the 1 week and the 1 month moving averages, which have since flipped from trend support into now trend resistance. Momentum is actually really deteriorating here, where we may be looking at the first oversold reading in stochastics going back to late July. And that, of course, late July is when the breakout begins. So there are some breadcrumbs in here that if you were a metals bull right now, if you're long gold like I am, we could be looking at a little bit of a period of pain. So
I remain short.
The biggest identifier for me, though, is the relationship between volatility and price.
Yes.
Because during late July, early August, when the breakout begins, we see that volatility is starting to build up, right? Over the course of the last several weeks, volatility was ebbing and flowing, but it was still rising through this week where we had an IVR high of 87.5. We now have the lowest IVR reading that we've seen since the middle of September. And what were we doing when volatility was coming down into this place? Well, the market had just broken out, and then it chopped around as volatility contracted. If volatility is on a path towards contraction here in the metals market, it would stand to reason that gold is probably going to chop around and trade sideways to lower, at least for the foreseeable future. We obviously had a big reaction the other day because of what happened in the wake of Trump winning and China's announcements and yada, yada, yada. But Ilya, I don't think that the longer term here, right, if I'm thinking long enough time frame, 45, 50, 60 days out, if there's an opportunity to buy the dip, the longer term fundamentals remain well moored. Insofar as the biggest buyer in the market is not going to change what they're doing, regardless of who's in the Oval Office here in the United States. So, yeah, it's not a pretty chart right now. And if I was,
I'm not so sure actually.
Today, I would sell it. You don't think China's going to keep adding gold to their FX reserves?
I don't think that this is the environment where that kind of a thing is going to get more emphasis. I think it's the kind of environment where it's going to get less. Why? And that's let's look at this. China has been saying that they want to build a competitor to SWIFT in order to settle transactions in yuan rather than having to go through dollars. That whole thing has been around since 2018 to 2019. It's been an afterthought and a backwater, and nobody was interested in it in the absolute slightest until Russia invaded Ukraine. Russia got locked out of the dollar-based system. Its only outlet was to go to China and say, hey, let's transact in yuan. Okay, fine. More volumes through China's system. That gave you a compelling sort of argument, it seems like, in Beijing to go, okay, maybe with the scale, we can get other people onto this thing, but we need to get them to believe that their money is convertible. And if it's done in yuan, it's not convertible. So how do we do that? How do we get more counterparties on this thing if it's going to be a real competitor? Well, maybe we accumulate a bunch of gold and we say the trade volumes on this thing are convertible in gold, and gold is easily international in its liquidity. If you were a counterparty on this thing and the trade was backed with gold, maybe you'd feel like, you know what, my money's not going to get locked up in yuan. I can always get it back in gold and then take it offshore that way.
Silver, likewise.
All of that is falling apart, though.
Sorry.
The impetus to all of that is gone.
Perhaps, yeah. Biden administration to allow American military contractors to deploy to Ukraine for the first time since Russia's invasion, making the situation a little bit more interesting on the Eastern Front. Silver here, $31.45 an ounce. We did see a big breakdown 2 days ago. We tried to rally back yesterday, and we kissed that 1 week moving average. That came in yesterday at 32.23.5. The high for yesterday was 32.26.5. We have since reversed. We are reversing here today. So momentum is more negative than it's been in quite some time. This is the lowest reading in stochastics that you've had since the lows in early August. We're now seeing MACD cross below the signal line, which, for what it's worth, I personally don't really care about any particular indicator. I don't use buy or sell signals here necessarily. I care about the character of the indicator, how it was behaving during trending periods. And during silver's bull run, MACD never crossed back below. Once we poke our head through 30.5, MACD never crossed back below its signal line, even when it was turning lower. It held the momentum, right? Mm-hmm. The ebb and flow of a bull trend. This is now telling you that characteristically momentum has evolved. It's more bearish now. It's not maintaining the same stature as it did from mid-September onwards. And then the vol crush. Unlike equities, right? People panic buy gold and silver. You panic buy safe haven assets. So they tend to have, just on the surface level, when vol goes up in metals, it's usually accompanied by a rise in prices. So the decline in volatility is often a harbinger of a decline in prices. In this case, we saw in May, vol peaked on May 20th at 123 IVR. By the time we were looking at IVRs that were down in the 30s, gold had fallen back from a high of around 33.5 down to a low of $29.34. So the vol crush here, coupled with trade concerns abroad, global growth concerns, silver may be underperforming its golden counterpart for the foreseeable future. Although, Ilya, we've really gotten into it, so we need to go through the rest here in FX and currency. Mm-hmm. Let's go over to oil, which is down by 2.97% on a day where Iran apparently was caught trying to assassinate President-elect Trump, where we see that the Biden administration is allowing U.S. military contractors to be deployed into Ukraine. I guess we're doing an escalate by de-escalate type of strategy that's clearly worked so well for Israel.
Bail me out here, oil. I'm still short. Come on.
70.22. How do you perceive these markets proceeding? You have 30 seconds before we move on over to FX.
72 is the axis in CL. I've been selling against it. It held. It's working. I'm going to continue doing what I'm doing. I'm looking for a return into September lows.
The wrong Fibonacci tool. Okay, 50% Fibonacci retracement, well, not a retracement, halfway mark between the highs and lows over the past 52 weeks. We saw that yesterday. That comes in right north of $72. It's about $72.30. Yep. And so did this get filled? That's the great question. Unfortunately, it did not. And quite frankly, I guess I'm fortunate that it did not get filled because I wanted to put on the iron condor yesterday, and seeing that it was not able to get filled, I saved myself from a punch in the face today. I got to be honest. I guess I've been saying for the past 2 weeks, I really haven't had a good read on oil, although the fact that oil really hasn't done anything after around the election, I suppose, confirms priors. I'm not going to try to put back on the iron condor right now. I guess I'm fortunate that there was no liquidity there because that would have been a way to ruin my day slightly. Yesterday, we said that the dollar reversed. Today, the reversal is reversing. Little 40 chest for you. Dollar index is back up on the highs. So much for the swing.
Thank you, pullback. I bought more.
Do we see this as, the yen is up today too. And that's kind of perhaps the most interesting part because my long dollar exposure is via the yen through the long 6J puts. Put a bow on this. What's going on with the greenback here? Is this just now what's expected, right? The Trump trade is money flowing into the U.S.?
Yes. I mean, very simply, yes. And also the Fed came out yesterday and told you they're not locked in. They're not on autopilot. Everybody else is cutting. The U.S. has all the reason to not cut as aggressively. This is yield differential classics.
Yield differentials classic. We haven't seen that in a while. What's next on the calendar for Monday? Monday is Veterans Day. So while U.S. markets are open, we don't release data on Veterans Day. I have the 10th and the 11th updates here for the actual data that's coming out. I didn't leave any countries off this calendar. I made sure the Eurozone was in there and the UK was in there. Look, during the U.S. trading session Monday, there's really nothing. So you can look at Japanese data after U.S. Futures markets open back up on Sunday night, or you can look at Australian dollar after they open back up on Monday evening. But in between, there's not really a bond auction to pay attention to or anything worth really discussing. So the low volume from today, absent a geopolitical catalyst over the weekend, I think there's a strong chance that we continue this low volume environment, at least in equities, for the start of the week. As we do at the end of every one of these shows, a brief bit of education. Head over to tastylive.com, top banner, Learn Beginner Futures, where you can find this great coursework put together by the fine folks on the Tasty Live research team. Today, we're talking about margin calls, as we've been reviewing in recent days. Initial margin refers to the funds needed to establish a position. The maintenance margin is the amount required to keep the position on. And if your account falls below the maintenance level, you will be required to top off your account back to the initial margin level to hold the position. And if you don't, the position gets closed and you get wiped out. And margin called is never fun. Let me tell you that from experience. No. Once and never again. But
that's right.
It was the first year that I was trading out of college.
Mine too.
Better. Learn from our mistakes. Don't get margin called.
Don't get margin called.
Top banner beginner futures for the link here on the bottom of the screen. It will take you there directly. Ilya, I can't believe this week is finally over. It's been a great week, personally, for trading. It's been an environment where a lot of our priors were confirmed that it doesn't really matter who's going to win the Oval. I quite frankly don't think it matters that Trump won. I think the market saw that the risk is gone and that we're going to stay on a course of spending a lot of money. A lot of money with Fed cuts. Good for stocks. So until then, we will stay long. Stocks, good sir. For Ilya Spivak, I've been Chris Vecchio. We will see everyone later today. There's more Tasty Live programming coming up next, of course. It's Dr. Jim Schultz with From Theory to Practice. Enjoy.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at Tasty Live.
let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear 145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do. Man, I am glad that you are here because we couldn't do it without you and all y'all from my Memphis crowd that is watching today. So if you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube if it is real time, if it is indeed Friday, November 8th, right around 2 o'clock Eastern, then I would pop on over to YouTube. I'd pop on over to YouTube so you can join the conversation, you can join the discussion with your brethren that are also watching the show, I should say, and celebrating this unbelievable bull market. So here's what I want to know from you guys. We're right at about 6,000, at least we were, a couple minutes ago. Now we're already well on our way to 6,100. What happens first? 6,500 or 5,500? Which level are we going to touch first? I want to get a feeling. I want to get a barometer, get a little measurement of my audience that watches the show live. I tweeted this out last night on a poll, and I was actually a bit surprised by the result that I got. So let me know in the chat, what do you think we hit first, 5,500 or 6,500? I'm very curious what your thoughts are. And of course, all the questions that you might have for me, drop them in the chat. I'll get to them right around the halfway mark of the show, and then we will ride on forward into the sunset that is the weekend by answering your questions here live on the program. So let's go ahead. Let's pop in. Let's see what's going on in the market. Man, we got some things happening, guys. It's still there. I mean, look at this thing, man. You can't keep it away. Even the S&P is up 29, risk-free instrument, also known as the NASDAQ Futures Mega Tech Index, up 19. Got the boomers now comfortably over 44,000, up 287. Got the Russell 2000 Futures Index up 12 on the day. Got bonds even up. Market so strong. Got bonds up. Got oil down $2. Right? You would have to imagine that this thing is headed to what, 10 or 15 or 18 bucks a barrel, right? With the Trump administration, which, that looks like the low hanging fruit. So that almost essentially preordains that it's going to get back to 100. And so we'll have to wait and see what happens with oil. But today it's down a couple bucks. Got gold down $13. I think my gold bros are kind of struggling out there. So somebody please check on Peter Schiff. Make sure he is doing okay. Got the silver bros and bro sets, my hunt brothers out there, you all are struggling too, with silver down about 50 cents here on the day. You got volatility futures actually unchanged, which is a little bit of a surprise. And then if we go down to the spot volatility, the cash index, you've got the VIX only down 9 cents today. So volatility picking up a little bit because it was down. We were in a 14 handle for maybe only an hour or two, but we were absolutely in a 14 handle because I was looking at it and I'm like, we're in a 14 handle. That's crazy. We were just at like a 24 handle like a week ago. And so, man, let's look at the VIX here really quick. If we go to Let's see here. Yeah, look at that. So you've got obviously the massive gap down, right? This is your election volatility crush right here, right? Boom, there it is. There's your vol crush. Right. Again, regardless, I think something similar would have happened if Harris would have won, honestly. I know that people on the right are like, no, Harris, it would have been, block limit down. It would have been this, it would have been that. I don't know. I don't think so. Just because, there was so much uncertainty. Once you remove the uncertainty and then you can grapple with whatever the policies are going to be or whatever you think they're going to be, things do have a tendency to change and morph and, markets move and things change, even in the political landscape. I think a vol crush, maybe not to this degree, maybe more, maybe less, but some kind of significant vol crush was going to happen, I think, regardless, or even irregardless for the people that like to be a bit creative with the English language. I think this was going to happen anyway. But if you look at today, you can see that. Let me have to zoom in here. Oh, there we go. Oh, beautiful. Look at that. Look at that. That's nice. So if we go into November 8th, you can see that, we were down to 1466 on the VIX at one point. Right now we're at 1508. And so, we're back over the 15 handle. But, man, this is like, have you all been watching this market today? I mean, this thing is like molasses. I mean, this thing just will not move. I mean, we're watching it now, and I mean, it was just yesterday when, we had the FOMC, of course, but there was a little bit of action. There really wasn't too much. I was a bit disappointed in, the market action on the heels of FOMC. But today, man, this thing is just absolutely brutal. You've got ES up 30, but it feels like it's just, it's not doing anything. It's just slowly just kind of matriculating the ball up the field. And but this is a 15 VIX. Right. I mean, this isn't the 19 VIX we had just a few days ago. This isn't the 23 VIX we had just a few days ago. And so, unfortunately, this is what we're going to have to kind of slog through for the next, couple of months at least. Because, again, the low-hanging fruit is what? Santa Claus rally. Like, this is it, right? Low-hanging fruit, end of the year. You've got the holidays. You got Santa coming. You got this. You got that, right? It's got to be bullish. We got to go. We got to push higher. We got to move even stronger to the upside heading into the end of the year. Well, maybe that happens. Maybe it doesn't. But I'll tell you what, the seasonality bros this year got it totally wrong. Like the seasonality bros, like September, October, it's going to be bumpy. September, October, it's going to be rocky, right? And then the first day of September, I believe, was right after the Labor Day weekend, and it was rocky. Like, it was crazy. Like, I think the NASDAQ dropped a couple percent, ES dropped a couple percent, and all the seasonality bros just popped out of the woodworks like, man, I told you, you better get ready because this is it, right? ES 3700, it's happening by, October 10th at the latest. Well, that didn't happen. That didn't materialize. So what if, and again, don't shoot the messenger. We're just having a conversation. What if the Santa Bros are wrong too? What if this year, November, December are a little rocky? What if November, December are a little bit bumpy? I don't know. It'd be kind of interesting because it kind of feels like, it's, the storm has passed. Like, it feels like you got through Helene, you got through Milton, you got through the election, you got through FOMC, and now it's just all systems go. Now it's just, I just want to see nothing but green lights, right? Taking a Pelham 1, 2, 3 down. We've talked about this before, right? I don't know that that's going to be the case. Now, not that I know anything, because I think if anyone knows less than anything or less than nothing, it's me. And so I wouldn't put too much stock in the recent 3 minutes of commentary, but it's still 3 minutes of commentary that might, better your day in some way, shape, or form, nonetheless. So let's go ahead and, all right, so we'll have to see what happens in the coming days and weeks and months. Is the Santa Claus rally going to be true? Is it indeed going to happen? We will have to wait and see. All right, what I want to do today, though, because yesterday we had FOMC, we had a really odd Thursday FOMC. Again, I'm not sure it's ever been done before. Like, I'm not sure there's ever been a non-Wednesday FOMC, but we had it yesterday, and so we got to watch the print live on the show. We got to see the rally. You got to see ES 6000 for maybe the first time in your life, and you were doing it with us here on the From Theory to Practice set. And so that's a very, very that's a red letter day in your life without question. I want to let's go into the few other positions we have in the portfolio that we didn't talk about yesterday, and then that'll kind of clean us up, kind of going into next week. So we talked about Qualcomm yesterday, so I'm not going to talk about that. We talked about AMD and Amazon, so I'm not going to talk about these guys. The only thing I will say is you can see AMD, we're down slightly on the day, but it's really, it's not much of anything. We have a lot of theta coming in on the position, a little over $8.60, and we're very close to the 50% marker, very close to that 50% marker. If everything kind of holds, the line where it is right now, we should hit that level sometime next week. Like you would think that it could happen Monday. It's very possible that it would happen on Monday. But we're not gonna, rush the process. You just got it. It's like, man, it's like, when you're doing the pork shoulder, if it needs 12 hours, it needs 12 hours. Like if you go in there and try to make it 6, it's not going to turn out well. Like if you're going in with some carnitas, right, that need 17 hours, right? I don't think it takes 17 hours to make carnitas, but you guys understand what I'm saying, right? You rush the process and try to do them in 45 minutes like Chipotle does. I mean, they probably do them in 45 seconds, but you try to rush the process, it's not going to work out. And so AMD, we sit tight, we do nothing, and then we go to Amazon. So Amazon, this is another one that we are very close to our call strike here. I'm going to come back to MES and MNQ. I know it looks like I just kind of skipped over those guys, but we talked about these briefly yesterday. I wanted to kind of tie it off with a bow today to continue the discussion, at least wrap up the discussion for the time being. AMZN, Amazon down $1.30 today. So that's kind of nice. So we have now snuck back inside of our short call strike. And so for the way that I typically like to adjust, I don't usually adjust my strikes when they're not tested. I'm not usually that aggressive with balancing deltas and reducing directional risk and kind of, rolling up and rolling down when one of the strikes is not tested. I much prefer something that's a little bit more, kind of laissez-faire, kind of Adam Smith, a little invisible hand for all of my econ junkies that might be watching the show, and just kind of let it work. Like let the market kind of do its thing. Let the marketplace cyclicality, let the mean reverting price that Tom obviously loves and knows and trades every single day, let that work for us, right? Let that go ahead and kind of work to our betterment. So I'm not going to do anything with Amazon. We're going to sit tight on that too. But let's go into MES and MNQ, because believe it or not, guys, and you're almost going to be like, I can't believe this is happening. MES, we are going to adjust. We are actually going to do something, which is unusual for us. We typically just hide behind, the do nothing mandate. But no, we are going to do something with MES, because if you look at this guy, and I mean, I'm looking at some of the early responses here in the chat, and I see lots of 6,500s. I see a couple of 55s, but man, I was shocked last night too. Last night I tweeted out, and I'm like, okay, I am tweeting this to a biased crowd, right? I am tweeting this to a bunch of, Tom Sosnoff underlings, right? Like myself. Like we're all Tom Sosnoff underlings. At the end of the day, that's what we are. We can't run from it. You just have to embrace it and own it. Well, being a Tom Sosnoff underling, you start to look at the market differently. You start to look at the market kind of like, how can this thing stay up? How can this thing go higher? How can this thing do that? How can this thing do that? How can this thing do whatever? And you're kind of always viewing it through a bearish lens, right? So I assumed that the scales would be tipped in favor of 5,500 happening prior to 6,500. Now, of course, this is all just fun and games. We don't really know. Nobody really knows. But I was just curious I want to get a pulse on where you guys are at. Well, it was actually 60-40 in favor of 6,500. So I'm like, man, we got to be close to the top now. Like, we got to be. If it's flipped so many of you guys, like if so many of you guys are just broken, you're broken men, you're broken women, you're just broken underlings at this point, where you're just finally, willing to just flip over your cards and flip to the bullish side, which you may not be doing for your portfolio. I understand Twitter polls are not necessarily, indicative of what's happening in people's actual minds. In fact, here's a fun little fact about me. I actually like to, and this might change the way you feel about me, but it's the truth, and you can't hide from the truth. I actually like, if like a Twitter poll comes down my feed, whether I'm interested in it or not, if a Twitter poll comes down my feed, I routinely, I'm going to say 80% of the time or higher, I will vote, not how I actually feel. I will vote in ways that throw off the results of the poll. Like that's how much Tom Sosnoff has influenced me. That's how much he has impacted me. I am like going out of my way to like change results, to like give people not what I actually feel, but to kind of mess with their thinking on the other side of the poll. So I feel kind of bad about it. But then again, it's the internet. It's the wild, wild west, man. You can kind of do whatever you want. So maybe you guys were doing that to me last night. So maybe you guys are actually 5,500, but you're like, no, we're going to throw this guy off. So maybe I need to hold off in terms of my judgment on you all. But I see a lot of 65s in the chat right now. Hold on. Maybe you guys came out here. Let's take a look. I'm just going to scan it real quick. Couple 65s. I see a 55. Okay, it looks fairly even. I see like maybe 3 65s and 3 55s. So all right, we'll come back to that here in just a minute. But MES. So we are going to do something. We have broken through our call strike on the upside. You can see you've got the stock at 60-30, 60-35, and our call on the upside is 59.70. We still have 42 days to go. We picked up 101 points on the strangle sale, I should say. You could make the case to do nothing here. I wouldn't necessarily have a problem with that. Normally when strikes get tested, that's when you want to begin to think about adjusting, the other side, at least if you haven't done so already. I mean, if you're kind of following, a Tom Sosnoff, Tony Batista, approved adjustment protocol schedule, then you've probably already adjusted. And that's not a bad thing, right? That's absolutely not a bad thing. In fact, it's probably a better thing, which is not how I actually feel, but it is what I'm contractually obligated to say. So it is on the record. I think that is the better way to do it. The situation that I'm in right now, I have not done that. And so what I'm going to do here, though, we've gone through the 59.70 call strike. We're inside the break-even point. You could be a little bit patient, but I'm like, I don't know, man. Let's go ahead. Let's try to keep it a little bit buttoned up today. It's like, man, let's all turn over a new leaf. It's like, we're getting close to the end of the year. It's going to be 2025. Can you guys believe that? It's going to be 2025. Like, it feels like to me, like we just skipped from 2020 to basically the end of 2024. Like 2021, 2022, 2023, they just kind of melted away. They just kind of disappeared. Obviously, 2020 was crazy because pandemic, COVID, whatever, and that kind of shook everybody up. But now all of a sudden, we're right on the doorstep of 2025. Like, I really, really can't believe that. But let's try to be a bit more principled with our approach. Perhaps. I mean, I don't know that it's going to stick. It most likely won't last, but we'll give it a shot. So let's go in here. Let's go. We're going to roll the 5,400 put up a little bit. Now, if you want kind of a, just a quick and dirty way to do this, you can look at deltas and you can trim directional exposure by 20%, 30%, 50%, whatever you want to do. And that will obviously work. The deltas in the futures options, I've talked about this just recently. It was maybe a couple weeks ago. The deltas on the futures options are a little janky when you go to like translate them back to what they look like in your portfolio. And that's just because of the way that deltas on futures options and multipliers and notional values and beta weighting, all those things. It's a fairly, I don't want to call it complicated, but there's a few steps in the process. Whereas when you're just dealing with equity options, SPY, TLT, Tesla. Look at my Tesla, bros. Hold on a second. Tesla. Look at this thing, man. It's almost like Elon's in cahoots with Trump. Look at this thing, man. Tesla up another 30 today. It's almost like homeboy's got the inside track on all the government contracts now and all the, departments of government efficiency. Like, it's almost like my man just hangs out with Trump 25/8. Which, I mean, he can't because he's running like 19 companies. But I think in the little bit of free time that he does have, I think him and Trump are just, they're just kind of buddying up. And so you got Tesla up $30 today. And so I wonder if they're going to make a run at the all-time high is 400, right? Let me see here. Let me look at, let's do a monthly 5-year. Yeah, okay. So we got a little ways to go here. But I don't know, man. I mean, wow. Yeah, so back in 2021, almost 4 years ago to the day, actually, November of 2021, sometime in the November month, you had Tesla at 414. You right now have Tesla at 326. And so, when is it going to get back to 414? I mean, based on this current trajectory, Wednesday, like Thursday morning on the open, maybe at the latest. I mean, that's what it looks like. But man, that's crazy. So all right, let's go in here though. Yes, I'm not even going to go with the delta calculation and kind of the conversion. I'm going to do real simple, real quick, real dirty. I'm just going to roll my put strike up to, let me go back to the MES. I'm going to roll my put strike up to the new expected move. This is a very simple way to do this. It allows you to bring in extrinsic value. It allows you to kind of rebalance the situation. If you don't want to do the calculation, if you're lazy or you just don't feel like doing it or whatever, just take your put and roll it up to the expected move. That will always get you pretty close to where you would be trying to go anyway if you went through the calculation and tried to trim directional exposure by 30% or whatever. You're never going to be that far off. And it's like, I mean, we're not Citadel. Like, we're not Susquehanna. Like, we don't have the resources to be so finely tuned with our mathematical models that we're like trying to shave pennies off the dollar or pesos off the penny. Like, we just can't do that. Like, we can't do that at all. And so we just need to, just go back to the principles and, stick to those principles. And so here we just take our 5,400 put, we buy it back, we scroll up, we go all the way to a 58.75. Man, I feel like we are going to get torched on the downside. So I just want to be on record as saying I have a feeling in the next 41 days, this put right here that you see on the screen, that thing is going to get torched. Like, that thing is going to get absolutely bamboozled at some point. But we're going to do it just to bring in a little bit more credit and improve the points that we've collected. And so let's go ahead and let's make the roll here. And yeah, I like it. Another 37. That's 38 points. So again, MES pit's $5 a point. So you're looking at what, $190 there, almost $190. Let's see if we get filled. No takers at 37.75. That's fine. Let's do 37.25. We'll probably find somebody out there that'll do it for us. All right, beautiful. So we are out at 37.25. So that's MES. All right, let's now go to MNQ really quick because this one's going to be very fast because we're not going to do anything here because we're still inside of our strikes. Like, yes, I mean, obviously the NASDAQ is a rocket ship higher, much like ES and much like, the Russell and much like everything else. But it's not, it's maybe not as impressive as even the S&Ps because you've got ES at, 6,000 now. ES is like a solid 1% now over all-time highs or previous all-time highs, or maybe even more than that, actually. Whereas MNQ is just barely over all-time highs. It's not like a 0.5% over all-time highs or maybe less, which is surprising given the fact that Tesla has performed so well. Like NVIDIA is doing really well. Like all the big tech names are really, really kind of knocking it out of the park. But the NASDAQ index, I mean, don't get me wrong. It's not like it's falling on hard times, but it's not keeping pace with S&P right now. And you can even see that playing out today where you've got, S&P's up over 0.5%, or almost exactly 0.5%, I should say. I got to get used to this 6,000 base. That's crazy. That's crazy, man. So if this thing goes up another 30% next year, right? Which, I mean, that's not going to happen. I'm 49% sure of it. But if it goes up 30% next year, it's going to be trading at 8,000, guys. It's going to be trading at 8,000. That's 8,000 on the S&P 500. That's crazy. That's the craziest thing I've ever seen. Until you turn to the Dow or you turn to the NASDAQ or you turn to any other index of your choosing. But anyway, I digress. I think at this point we're digressing off of digressions. But MES up 0.5%. MNQ barely up. I mean, this thing is up a bid-ask spread differential. It's 26 points. It's nothing, right? It's not, 0.5% would be 100 points, 110 points. And we're not even there yet. So MNQ, we sit tight. We do nothing. And look, we're not even down that much. We're not even taking on too much water on the position. We're down 70 points? That's because of all the vol. That's because of the huge vol crush, from the election, from whatever. You go from a VIX at 22 to a VIX at 15, like you're selling premium. That's going to help you a lot. Now, it may not be able to offset the delta effect like we see here with MNQ. The delta effect to the upside has been so substantial that we're still down on the trade. We're still down a little bit on the position. You can see that right here as your P&L opens, down $100, $130. But still, it's like, man, I feel pretty good about the position we're in, given the volatility crush and just given the fact that we don't really have to move the strikes just yet. So all right, so that is MNQ and MES. We did AMD, we did AMZ, and man, look at the boomers, man. These guys, wow, you can't stop them. You can't stop them. I'm not going to do anything here for the very simple reason of, we're already at almost maximum loss on the trade. We only have another $1 of risk on the position. So there's not much of a reason to do anything. Now, you could say, Jim, roll the untested side up, go ahead and bring in more credit, do those kinds of things. I do not like to do that on iron condors. I barely like to do that on strangles, as you guys can see. But on strangles, it makes a whole lot of sense. On iron condors, I'm not quite sold that it makes a ton of sense. I feel like you're just chasing your tail. I'm not convinced it's going to give you an advantage, in the long term. I much prefer to just sit tight. I'm like, hey, I controlled my risk on entry. Let's let the probabilities play out. I don't have a lot of wiggle room between my short strikes to begin with. The last thing I want to do, personally, is turn this thing into an iron fly. Like, let's turn this thing into something that's going to be very, very difficult to make money on. But I respect the fact that, some of my own brethren on the network might feel differently about that. And they might want to roll on tested sides and kind of, reduce risk that way. And that's what makes a market, man. That's what makes trading so fun. There really is no black and white answer. There really is no yes, no situation. There is no better and worse, outcome. It's usually gimmies and gotchas. And it's usually, all right, what is my risk tolerance? What is my experience level? What is my skill level? What is my account size? How much time do I have to devote to this? Like, all those kinds of things really come into play, and they factor in when you're searching for, kind of your own personal equilibrium point. And so DIA, we sit tight, we do nothing. And those are the 3.5 reasons why. All right, Netflix, we're getting hammered. It's an at the money vertical spread, though. It's not at the money anymore, of course. But you've got Netflix at 790. 790. We have a 770, 760 long put spread. And we're not going to do anything with that because it's a long vertical spread. We took a shot to the downside. It hasn't worked so far, but we have 42 days to go. So I'm not worried about that. Qualcomm, we talked about yesterday, and TLT, we also talked about yesterday. But take a look at TLT, guys. Up another 90 cents today. This thing's coming all the way back. Right? Boom. Look at this thing. 42 days to go. Oh, yeah. I'm not worried about this at all. So we'll come back to that probably next week. Let's talk about Google, though, very quickly. because I don't think I talked about this too much yesterday. This is a pretty interesting situation. Google's actually down today with the NASDAQ positive, which is, I mean, this is a good example of, every single individual stock is not going to follow the index one for one. Like they're usually going to follow it, to a large degree because, the index is made up of these big tech names, your Googles, your Alphabets, your, Apples and Teslas and whatever. But there will be times, whether it be a company specific event or like a CEO stepping down or a change of a CEO or product failure, product launch, whatever, where the individual stocks really kind of buck the trend of the overall index. We actually see that happening right here with the Google and the NASDAQ today, with Google actually down $1.90. Now that helps us because we have a put crab strategy that was a holdover from, I believe, Google earnings. Was it Google earnings or did I just do a random Google trade? I think it was Google earnings a couple weeks ago. Well, right now it's not working. It hasn't worked from the very beginning. A couple of things I want to point out. Number one, there's not much of a reason to keep this option on anymore. The short 160 put that we sold, this was just a couple of days ago, I think, right before the election, I want to say. Yeah, we did on, Halloween. So 10/31, we sold that put. I mean, it's 17 cents now, so there's no reason to keep that on. We're going to take that off right here, right now. But the other thing that I want to point out, with crab trades and, because it's such a complicated trade from the standpoint of, it's not complicated. It's a complex trade. Let's say that. That's a way more euphemistic way to say what I wanted to say. It has a good level of complexity to it because when you look at your actual basis on the trade and you're trying to figure out how much risk do I have left in the trade, it's kind of interesting, which we're going to see here in a minute. But for right now, let me buy back this short put because I don't want to forget to do this. If we buy back the short put, because there's only 17 cents to go, let's buy this thing back and we can be done with it. And then we can revisit whether or not we want to lay something else out. Probably sometime next week. I'm not going to do anything right now. I'm going to sit tight on just the long put and let's just kind of see what happens, because here's what's interesting. So if I go into my my trusty Allison chains here, you can see that this is this is the entire history of the trade. My basis on the position is essentially $2.46. So you can see right now that I'm looking at, let's see here. Am I looking at this right? I got to get used to these crab trades. 246. Yeah, that sounds right. That feels right. Hold on a second. We put it on for, let's see here. I'm going to have to think about this a bit more because after we did that close, the chains are not necessarily, they're probably correct. But the way I'm looking at it, there was a specific thing I was looking for. I don't see it. So maybe I'll come back to that on Monday rather than muddle through it here live on the show, which is never a good scenario or never a good experience for anyone. But the thing I did want to point out that I do feel confident in is, and again, the chains and the crab strategies, that actually highlights the complexity, right? Because you have different expiration cycles. You're constantly moving in and out of options. And so you have to get used to this, man. It's kind of like it's your opening strategy on the chessboard. It's like you got to get used to this. I mean, the first time you play, black after having played white for a while, you're going to get steamrolled because you don't get to move first. You're in defense now. Like you're on your heels from the very beginning. And that's a very different type of deal. It's the same thing here with the crab strategies and the chains. So we'll come back to that. But the thing I do want to point out is that irrespective of whatever your basis might be on the trade, whatever your basis might be on the trade, right now, all we have left is a long put. And right now it's marking for $1.45. We only have another $1.45 of risk left in the trade, period. Period. End of discussion. End of story. So if this thing never comes back, like we're always wanting to be mindful of, how much risk do I have left in the trade? What's my risk at entry, of course, but how much risk do I have left in the trade? If you look at a strategy like a crab and you get to a spot where you only have the long option left, at least for that time being, just look at the mark price of the long option. That's the risk that's remaining in the trade. That's it. You don't have to calculate spread widths. You don't even have to look at the chains. You don't have to do any of that. You just look at the value of the long option. And in this case, it's a long put because it's a put crab. That's your risk remaining. That's it. We have $1.39 of risk left in this trade. So if Google, prints 185, 190, 200, 217, whatever, we lose another $1.30. And so it'll end up being not a great trade, but from the standpoint of risk control and understanding risk along the way, hopefully this is helpful for you guys and trying to kind of figure out, kind of where you're at on the trades. All right, that's Google. Man, let's get to you guys. Man, where are you guys at? Man, I just appreciate you guys. Let's see here. Where are we at? Look at my From Theory to Practice crowd. I appreciate you guys. I see Bradley O'Connor's in the house. I see Proto Man's in the house. Matt Harsh is in the house. Finn West. I see Taco's in the house. Michael Flores. Manny TP. Anka's in the house. David Gallimore. Man, I'm going to try to get to as many of you guys as I can, which means maybe 3, maybe 4 if I speed things up a little bit, but I appreciate you guys. David Gallimore's in the house. Says, Dr. Jim, how does yesterday's Fed cut affect my SGov? Yes, your 1 to 3 month T-bill. Yeah, well, it's going to affect, yes, right. So the way that your BILs and your SGovs, I think they both work the same way. The way that works is you own shares, right? And if you actually pay attention to how those instruments work, you buy at some price. I mean, we could pull it up on the platform, I suppose, but just to make it even a bit more efficient, I think SGov is like $100 and BIL is like 90, so they're pretty close. You buy SGov for $100, let's say. Over the course of 30 days, the price of SGov is going to slowly rise. It's going to go up by like, a couple pennies every day or whatever the number is to equate to an annualized rate of whatever, 30-day T-bills are paying you right now, essentially. The price of the instrument is going to rise for 30 days. And then on that 30th day, I think both SGov and BIL do it the same way. They pay you a dividend. So you essentially have like a monthly dividend coming in from those. It's like clipping coupons, on a traditional bond, or it's just like kind of rolling over the 30-day UST bill that you might buy from treasurydirect.gov or whatever. It pays you a dividend, and then the price falls and resets. And so what's going to happen now that rates have been cut and rates have changed is that pricing dividend dynamic is going to slowly shift, and you may see that show up. It's probably not going to show up right now, but you might see that show up in kind of the rollover, the next time that you get your dividend payment from SGov and BIL. And so if you're tracking, and I think you probably are, David, because you seem to be extremely conscientious when it comes to this stuff. If you're tracking how much you made from T-bills one given month or whatever, you're going to see, now that maybe you better understand the process, or maybe you already understood that part, but you'll see next month, I would imagine, you're going to see the total return is going to drop. It's going to drop by probably about 0.25% because that's what rates were docked by, and so that's kind of how it works. And so David Gallimore, this guy in this commercial, was a real jerk. Reminds me of me at this part of my life. Oh, I don't know who was in the commercial. I hope it wasn't me, because I know they got me on a couple of the promos, but hopefully that was not me. Michael Flores in the house. Hello, Dr. Jim. What's going on there, Michael? I appreciate you, my friend. Thank you so much for being here. Let's see. Anka, happy Friday. What's going on there, Anka? I appreciate you too. Manny TP, good morning, Dr. J. Man, look at you, Manny TP. Good morning. Are you still in Bangkok? Manny TP, I think you're in Bangkok, right? If I'm not mistaken. And so correct me if I'm wrong on that, but yeah, I think that might be right. Scramble everything. There he is, Dr. J and his main team, the Washington Commanders. Nah, man, I'm a Ravens guy. I've said this from day one. Y'all see that game last night? Refs were not even paying attention. 3 face masks on the same play. 3 face masks, not a single one called. It's because that's my Ravens, man. What can I say? I've been a Lamar fan from day one. You check the tapes, right? Been on the Lamar Jackson bandwagon from moment number 1, from the inception. And so, but I appreciate you there, Scramble Everything. And so good luck with your Commanders. So David Gallimore says 6,500. Anka says 6,500, I'm assuming. She said 60,000, but she might be referring to the NASDAQ. There, that's very possible. Christian says 5,500 and Fred says 5,500. So it's balancing out a little bit. If you guys want to know my take, it's got to be 5,500. It's got to be, because again, I'm a Sosnoff underling. I can't even process another 8% to the upside. I can't even compute. It doesn't compute. The math is not mathing, as the young kids like to say. It's I don't know, man. Another 8% to the upside? I can't do it, man. I cannot do it. And by cannot do it, I mean we're going to have to do it. It's coming, and you just can't stop it now. And so let's see. Raul says, good afternoon all. I'm ready for the weekend. Yes, I think we all are. It was a pretty eventful week. And then Raul says 6,500. And then Richard Price says, I'm positioned for 5,500 by January expiration. Man, that would be a power move if this thing drops to 5,500 by January expiration. Hold on a second. Let's go into ES. I'll just click on it actually. What is the probability that we touch 5,500 by expiration? I haven't looked at this. I don't know what the number is. I'm going to say by January, you said January expiration? Yeah, so that's going to be around January 20th or whatever. 2.5 months. I'm going to give it a 21 delta. I think the delta on the 5,500 put and the January expiration cycle for the ES futures is 21. I haven't looked at this. I don't know what the number is. I could be way off. Hopefully I'm not too far off, but that's my guess. So we go to January expiration. That must be this guy right here, Jan 17, 70 days away. Let's find the 5,500 put. And we are at, wow, look at that, 10 delta. I was way off, way off. That's not close. In the world of delta, that is a big miss. It's kind of like all those guys that say, you know, if you're right too late, you're still wrong, which is not right, of course. But there are a lot of people that say that. And so it's kind of similar. Like if you think something's a 21 delta and it's a 10 delta, that's not right. You are way, way, way off when it comes to that. And so, wow, 10 delta. So you only have a 20% chance of that hitting there, Richard. I hope that it hits for you, because that would align with my own personal feelings about the market too. And that would also potentially make Tom Sosnoff in a good mood for like holiday bonuses and stuff. And so, yes, we're all pulling for 5,500. Even 5,250 would be welcome. And so let's see, Manny TP question on Tesla. All right, I have a 275 December 20 covered call with a $15 credit. With Tesla run up, thinking about rolling the call up and way out to June 20, so middle of next year, the 330 call. Would you? Why or why not? It's a great question. It's an excellent question. And it all comes down to this. This is a great question. So let me zoom out a little bit and generalize your question a bit more, so that can apply to not only you, Manny TP, hopefully it will help you, but it can apply to anyone that's in a similar situation with a covered call. Whenever you have a covered call and the short call goes way in the money, the first thing you need to understand, and it's so simple and it's really pretty obvious, but a lot of people don't feel this way. When that happens, you must understand this is a good outcome for you. You must understand this is a positive outcome for you. This is not a bad outcome for you. This is not a negative thing. Don't just look at the short call and say, man, I'm just hemorrhaging cash on this short call. You are not. You're not hemorrhaging anything, because you have the long shares that are part of the package too. And they're arguably the more important part of the package, because they're giving you, clean delta on the way up, at least up to the short call, at expiration. And they're also helping to, eliminate your upside risk. And so the long shares are key. They're critical. So this is a good outcome for you. So it's a high quality problem. That's the first thing we have to make sure that we address. Number two, what do you do now? It all boils down to one simple thing. What do you want to do with this position, and what type of trade/investment was this? This is a question that everybody has to ask. Everybody has to ask themselves when it comes to the cover call specifically, because this is such a unique strategy in that, it can be used in both an active sense and a passive sense. Like there are traders that are in the 45-day window and all these kinds of things, and they're doing cover calls and they're kind of actively trading them. And I think that's fine. But there are a lot of traders that when they trade cover calls, they're a lot more passive with it. It's a lot more longer term. They're kind of selling calls against McDonald's that they bought in 1987, right? They're selling calls against Procter & Gamble that they bought in 1966 or whatever, just to bring in a little bit more premium, just bring in another avenue of profitability, just to sell options for income, right? Obviously things we've all talked about here on this very show. And so all of that, right? What are you? Which road are you on? Which pathway forward through the forest are you wanting to go down? Is it the trade or is it the investment? If it's the trade, then you're done. It's over. You take it off. It's a great trade. Like in the poetic words of Mr. Tom Sosnoff, it's over, Johnny. It's done. Take it off. Great trade. Move on. If, however, it's an investment, now it's a little different. Now it's like, okay, you could absolutely roll out and roll up. You probably do want to start doing that to some degree because you plan on holding this thing for a while. Now, I wouldn't necessarily feel like you have to roll all the way up to the at-the-money strike. You could do that if you want to go way far out in time. But you could also just kind of slowly chip away. And, you've got a 275 call. You got the stock at 330. You could roll out and up to like the 300. And that would get you closer to where the stock is, right? You'll bring in a little bit. You'll have more extrinsic value working for you. You can use the additional time to pay for the roll up, so it still might be a net credit. but you're kind of buying back some intrinsic value that you would otherwise lose by holding the 275 strike right now. And so there's a couple different ways to do it. Personally, I like the more gradual approach because that gives you coverage. It gives you protection all the way down to wherever you set your strike. So right now, if you roll to 330, I know I'm spending a long time on this, but this is such a good question. And I know for a fact that this applies to so many people that are watching. If you roll all the way up to 330 right now, you will be maximizing your extrinsic value because you're going to the at-the-money strike. And, you will position yourself to make more money if Tesla sits here or goes even higher. The problem is, what if this thing cools off a little bit? And again, I don't know what's going to happen, right? I mean, it may go to 400 next week. We really don't know. But if it cools off at all, you'll be much better off with a more gradual approach by rolling it up kind of in pieces from 275 to 300 or 275 to 295 or even 275 to 310, whatever. I mean, you can look at the numbers yourself, but that's how I prefer to do it, just to not totally chase the stock higher, because if it does, if you roll to 330 and it crashes back to 290, then that's not a terrible outcome for you. I mean, you're bullish on the stock, so it's not a great outcome for you, but you'd be better off if you had your strike lower. So that's how I would approach that situation. Hopefully that helps there, Manny TB. Great question. And so I really am only going to get to like 3 questions today. I said that jokingly a couple seconds ago, but we're like done with the show. This is crazy. Like this is it. It's engineering the trade time in about 90 seconds. But Michael Flores says, Erie guard less. Oh, got it. Well played, sir. Nicely done. When I read that, I'm like, that doesn't make any sense. And then I realized when it came out that it makes all the sense. And so nicely done, my friend. Rob M says, Dr. J, how are we feeling about that 14 handle on the VIX? Yeah, it's crazy, man. I can't believe it. Are we back to 14 now? Wow, VIX futures up 11 cents. Cash VIX down 12. So yeah, we're still at 15, but man, it's crazy. Rob says, I can't bring myself to sell premium right now. And are we hitting arms or back and shoulders today? It feels like a back day. You bet your bottom biscuit it's a back day. Today was actually a back and arms day. So I did back and arms this morning. Like my session was 4.5 hours long. Went 6 a.m. to 10 o'clock, and then I was finally done. 5 a.m. to 9 o'clock, whatever it was. It was super early to, man, I was there for a very long time. Like when you go in for a BARMS day, if you go in for a BARMS day, you better be ready, man, because you are going to be there for a while. And so, yes, we did back and we did arms. I've got, let me think. I actually have legs tomorrow. Yeah, I don't have shoulders tomorrow. Shoulders, I think chest and shoulders is Monday. I do a weird split now, it rotates. And I don't know, I kind of like it and I kind of don't. But, normally when people set up a training split, Monday is a specific day, chest day, obviously. Tuesday is a specific day, usually back day, obviously. Wednesday is a specific day, usually leg day, usually skip that day, obviously. It sets up that way, right? And then every week it's the same. Well, I'm trying something new where I'm actually rotating to where my days get jumbled up, purposely. Monday's not always chest day. Sometimes Monday is leg day. And believe it or not, but sometimes I go in on Monday, it's arms. I'm like, this does not feel right at all. Everything about this is not feng shui, but I got to do it. I can't, it's written, but yeah. So if it's back and shoulders for you though, my friend, that's some good stuff. And then Michael Flores says there's no such thing as the Santa Bros. I don't know, man. We'll have to wait and see. Taco Yum, 'tis the season to take profits, man. I don't know. If you've been playing this thing to the upside, I don't know what you're waiting for. If you haven't taken profits and you've been bullish, I don't know what you're waiting for. Doesn't mean you have to take it all off. You can leave some on. They can do whatever you want. But if you're not taking profits here, man, that's crazy. Let's see. Howie X says, now let's shoot. Michael Flores says some pulled pork. Yes, 16 hours. That's where it's at. Scramble Everything says, can you be an overlaying? Not in the Tom Sosnoff world. Most certainly not. Michael Flores, we are all underlings to the great creator. That's correct. And that's small c creator, just to be very, very exact. Bradley O'Connor, Jim, can you explain why I can't close my HE strangle right now? Is the market closed? It could be. Lean hogs. I am not a lean hog guy. And so let's see. Yeah, I don't know. I don't trade lean hogs. And so, H3. I'm not sure. Is that lean hogs? I think it is lean hogs, right? Yeah, lean hogs. I don't know. It probably is closed. I know that the precious metals futures close in the afternoons on Friday. And so lean hogs may do the same thing. And so I'm actually not sure, but that would be my guess. I mean, right now, when you see the grayed out numbers right there, that tells you right there that Scott Sheridan went home. Scott Sheridan went home for the day. So if Scott Sheridan went home for the day in the lean hog pits, then the lean hog pits are closed. And that's the best way to kind of think about that and look at that. But I got to run. I got to get you guys to Jamal. Man, I appreciate you guys. Man, I appreciate you guys so much. If I didn't get to your question, please come back on Monday. Come back on Monday. Try to drop it in early. As you see, I typically move sequentially through the questions, and I spend way too much time on a question, especially if it's a good one. Like if you give me a really juicy question in there, man, I'll be on that question for 17 minutes. And that's just kind of the way that it is. But I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Are you on a quest for trading enlightenment? Driven by an unquenchable need to find the twin flame to your chosen strategy?
Our Where's Spat Live event is the search for trading's ultimate holy grail.
Do you have what it takes to find the elusive bat as we visit 3 cities?
Join 6 Tasty Live speakers
as they present 6 unique strategies
and 6 unique clues using games and probability
to lead to the ultimate prize. Sign up for this free event today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
What's going on, everybody? We're at the end of an exhausting week. Welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler, and my guest today is Josh on Friday. It's been an exhausting week, man. Josh, how you managing through this week? I don't even know what else to do, man. What else is there to do? What else is there to do? The markets are like
awful.
I mean, that's how everybody feels, man. Markets are just incredibly higher throughout the week.
It's crazy, isn't it?
You know what? I thought we could spend some time today, like not only looking at some of the things that we've seen, but also just talking about some of these narratives. There are a lot of different narratives out there, right? Like, for example, we just came out of a very high inflationary period, right?
Right.
we had interest rates a little bit higher. I say a little bit higher, say elevated, because you and I, when we think of interest rates, and we had this discussion the other day, I mean, we've lived through some times where interest rates were a whole lot higher. These were purposely higher. I don't think they were crazy, but nevertheless, obviously they affected the way people lived, what groceries you purchased, gas, etc. Things were a lot more expensive than they were. I mean, much more expensive than they were 4 years ago, right? Everybody had more money in their bank accounts probably than they ever had 4 years ago because it was the pandemic and like you were literally getting checks from the government. Whereas now things have been a lot more expensive with interest rates being high because we had high inflation. You could argue the checks that we were given from the government created the inflation, but that's a story for another time. So we got this high inflationary environment. We're cutting rates, right? We've seen inflation come down a whole lot. Yet what we're hearing, right? The reason, the cause that bonds were down over the last several days, last several weeks, last several weeks that bonds have been down because it was in anticipation of Trump coming into office and raising inflation because there's going to be all these tariffs that are going to cause all the goods that we buy from a lot of our, partners across the globe. It's going to cause those things to go up. And that's why bonds have been dropping. So what credence do you really give to this? Or is it just about the price action and what we're seeing in bonds and all that stuff is right?
I think you defer to price action. I trust price action more than I trust anything else. The policies and how that may affect things. The election just ended, so we got a lot of sorting out to still do. So for right now, I trust the price action. And it's been some insane price action. I'm going to turn my head here because I got another screen. But with what bonds have done, what stocks have done, I don't really know what to make of this, to be honest with you, right now. Like, the price action is what it is, and you trade it as it is. But are you just seeing euphoria? Are you seeing kind of some crazy activity that isn't sustainable? And I don't know. It's been such a long week. It's been such a long week. I'm not going to try heads or tails out of much of anything. Can
we have the platform up, by the way, as we're talking? Are you doing that, or you're not doing that, are you?
The platform?
Ladies and gentlemen, Josh is kind of like pseudo-producing our show while he's on.
The platform is up.
Platform is up. Okay, you see it is up. Cool. I wanted it up because as you're talking, I wanted to bring light to this, right? Like, if you saw this type of chart or anything else, would this scare you, or would you say this is healthy price action and this is a breakout? Which one?
I would say it pisses me off because I was short an iron condor that was way out of the money. And I'm thinking to myself, not a problem. Turns out, problem.
Yeah.
Yeah. So, no, I mean, I do think that this is a little bit of pent up excitement that remains to be seen if it's sustainable. But where were we? I can't really see your screen that well. Where did we close last Friday in SPX?
Last Friday was the first, right? We closed at 57.28, so a solid 272 handles here.
The expected move coming in was 140 points for the week. So you got to take
about double that.
Yeah. So I'm not adding longs at this point. I'm not disappointed I had a handful of them going into this, but let's just take a step back for a second. Forget the political stuff for a second too. Is that the type of activity that, do you even really want to see that in a market index? Because that means that's all possible to the downside.
It is possible to the downside. Look what we just had in August. Look at August. This is August. Of course, it's possible to the downside, right? Look at, August for sure, but September, same year. By the way, same year that we had this and this for all these different fears, and now we have this.
Literally 3 months, almost to the day.
Yeah.
Or actually to the day, I think. So.
Just about. Both of these were at the beginning of the month, right? So beginning of the month has been. There was even a little downturn at the beginning of October that didn't last long, but the beginning and the beginning of months this year have been really there's been a lot of action on both sides.
Yeah. So I mean, I think this is a little bit crazy. I do think, you have to be. I'm probably bullish till the end of the year at this point. I was already, but I think more so now. I'm more just more conviction in that position towards the end of the year. Just because I think people are going to maintain that level of excitement. But as you get closer to inauguration, which really doesn't take place until mid-January, then we'll see what happens. We'll see what happens when they actually, this shift changes, so to speak. And, let's just see how the policies actually start affecting outlooks for the future. But
I feel like as far as vol goes, the year is over. Honestly, if you're asking me straight up, I feel like I just kind of came to that conclusion today. I think as far as vol trades go, there's not going to be a whole lot of those for the rest of the year, or the situations where we see we've seen spies and Qs, IVRs in the 30s to 50s, like at least 3 or 4 times this year. And those were gifts, man. I mean, those were absolute gifts. And I think that's not happening again the rest of this year. I think it's kind of a wrap. I mean, what else really matters the rest of this year? Like, earnings are pretty much done. We just got, I mean, you got a couple of CPIs, but I don't even know how much those matter anymore. And a jobs report, I guess. You got another jobs report, but that's, it's all but done, bro. Like, we're cruising into Thanksgiving here. Although, you're right. By as a private conversation we've had, by your measure, Christmas is already here. Because, dude, the commercials are coming out. I'm seeing them now.
Before Halloween, I saw them.
Yeah, you said that like 2 weeks ago. I was like, I haven't seen them yet.
Yeah. No, the Christmas stuff was out at Starbucks yesterday. But I want to go back to what you just said about volatility and the vol trade, and the economic data. And I don't think any of that stuff matters for the foreseeable future, because that stuff all factored in my opinion, to how the election may have been how it could have affected the election. Those are the words I'm aiming for. I don't think, given what Trump wants to do with interest rates, what he's been very vocal about, barring some crazy read somewhere, I don't think that economic data has the salience that it had. Volatility is probably dead. But if there is one place where I think you actually will continue to find some volatility, it's going to be in like Chinese stocks. Like if you look at like an FXI or a JD or I'm not going to say it, PDD, whatever the name of the company is. I always say
it's Penduo. I'm just kidding. I don't even know what it is. PDD Holdings. That's what we're just going to call it now. But I think it is like Penduo or something like that. I don't know, some weird.
I think
Penduti.
Yeah, I embrace my inner child like that.
Why are these why are these down like this today? I'm not gonna lie, I haven't really read much news on them. I know there's been a lot of fluctuation over the last couple of days in these names.
It's gonna have to do with tariffs and how
is that what it is?
Well, I don't know today specifically, but I do think that that's what you're seeing. You're seeing a reflection of, hey, what are the tariffs actually going to look like? How extreme, what are we, will they become? And so if there's going to be a sector that's going to maintain some volatility, I think that's probably where it's going to be. Otherwise, a 14 handle on the VIX, I mean, come on. That's it.
Look, the VIX gave you plenty of opportunities this year. I mean, look, this was April. I guess it was 21s in April. I forgot about April. Obviously what happened here. I mean, I threw a lot of chips in here. Again, I did it on purpose. And then you had this little blip in September. And then we had this more recently. I mean, you don't get that too often in a year, honestly. Like, you really don't. Between April and, that was 4 months between April and March, in August, where we really didn't do a whole heck of a lot. And then, obviously this, and then this, and then this. I mean, you just don't get that. Gosh, I wonder what next year is going to be like. I wonder if we're going to have those opportunities. I think, put it like this, I think obviously there's going to be different times where vol flares up a little bit, but I just you're not going to see this again, I don't think. You are going to see the sector rotation. I think that's what we were kind of dancing about earlier, and you're seeing it already. So like this week you saw finance and consumer discretionary names really move around a lot. Utilities, et cetera, were left behind. Utility and healthcare were left behind until today. And actually, a lot of those names that's what's mostly moving today, whether it's utilities or healthcare, from what I've seen. So there is a lot of rotation going on right now as people are trying to figure out what's the next thing that's going to lead the market higher.
Yeah, I think you're right about that. I think that, going back to his last administration, you had relatively low volatility throughout. You had, little blips like you mentioned. You'll get those every now and again, but I think you're going to have to look for pockets or sector pockets if you want to get some volatility. Maybe oil. That's bouncing around again with the news out today that the FBI had foiled an assassination attempt. But
that's why oil's moving.
Yeah.
Dude, I'm tired of the narratives of oil. I really am. I don't care. If it's below 70, I'm interested in buying. If it's like 69, 68, I want to buy it. If it's above 75, I don't know. I don't necessarily like to sell oil until it's above
I'm not
80.
a big fan of shorting it either. I don't like it stepping in front of that train, but buying it
If it's above 80, I'd probably sell, like 80, 82, maybe.
Something defined risk, yeah. But
no, I'd sell. I'd use some MCL. MCL has been awesome for me this year. These are fairly cheap, and I mean, trading crude wise, I mean, they're usually under 1,000. Sometimes I think they usually go a little higher depending on margin, depending on what's going on and how volatile oil is. But I mean, this has been a great trading vehicle this year. This has definitely been one of my better trades, trading oil when it gets like somewhere down here below 68 or so, and then if it's above here, I usually sell it out and close it and move on. So
yeah, I jumped in with you last time. I give you credit. You're the one who pointed it out, and I'm like, okay, I'll jump in. Listen. I got plenty of gripes with you. I know you going from time to time.
It sounds like I'm having a deja vu feeling or something. I feel like I had a dream about this one time. Maybe it was a dream because I can't believe you just said it. Yeah, I can't believe you just said it. Really
very
can't.
sleep deprived. Also, it's been a rough week. I haven't slept much, so I can't on Monday.
So I'm kind of like locked into this one trade, man, where I'm long an MES contract. From I'm trying to remember, from 57.49.50, right? And then I've been short SPY call spreads. And so obviously those are kind of in the money. The 585, 595, 590, 600. I'm winning on the trade overall, and I'm not exactly sure what I'm going to do. I mean, maybe I just close the whole thing down and unwind it. That's probably the ultimate. That's probably ultimately what I have to do.
Probably.
Yeah, I don't know if we're going to fade this hard. I mean, we're not going to fade so hard that these are going to be out of the money again. I don't believe. I think that'd be almost.
Well, you're still, so you bring up actually a question that we've gotten a number of times. It's like, when is a trade too far gone? And so if you look at that, like your 585 short call, like that's still within the expected move for December. So it's not out of the realm of possibility. It's 30% probability. If you look at the put delta, that's how I'm coming up with that. But I'm also looking at the IV rank, and like, is it even worth it? Like,
it's not even vol, honestly, at this point. I mean, since it's so far in the money, like,
right.
I mean, you could kind of look at it like that. No, not really. I mean, yeah, it's not even vol at this point. So, yeah, I mean, I guess
for you, though, right? You're profitable on it, and
yeah, no, for sure. I think I either I kind of leave it on for now, or I mean, again, it's a married trade, so I got to take them all off. I can't. That's the thing, when you have this, like, I can't just close out my I can't close out my MES and just keep this on. And I can't, do the other one either. I basically got to close it all at once. So when I do that, that's what's going to happen. I have the same thing with Qs, similar deal. I got an MNQ contract and these upside call spreads, and same thing with diamonds. That was kind of my trade, and it's worked out well, honestly. But I mean, I've come to the realization that I'm just going to have to close it all at once, probably within the next 21 days, I guess, would be the deal. But the way I think the market's going to go is it's just going to continue to drift higher at this point. And we might have some pullbacks, of course, but nothing major. 6,000 and above is where we are.
Yeah. If there's any cloud on the horizon that, cautions me, it's yields. The bond market, I don't know what the bond market is necessarily trying to tell us about interest rates right now, but I do think that, you just said something about just, trading higher, and I tend to agree with you that stocks just look like they're set to go higher. But I am keeping an eye on rates because I think there is something in there. I don't know what to make of it yet. I think I need a weekend of sleep to before I try and do
You
anything.
made fun of me at the top of the show, but everything you said so far makes you exhausted.
I am so tired. I'm so tired. Like, I just remembered, literally before we went on, I just remembered that I had a bet on the football game last night, and I forgot to check. I didn't even know who won.
Oh, actually, that worked out well for me last night. I turned like
I don't want to.
I turned like $190 into like 600 last night on that game because of the flip flops at the end.
Did you? Good for you.
I did, yeah. It works out well, yeah. Well, first of all, I when they were down 20, when Baltimore was down 21-7, I put a bet on that because I'm like, okay, these dudes at home, nah, I don't think it's going down quite like that. And then I actually when I closed that out, which was real nice, I think I took that one turned like 94 into like, I can't even, I'm telling all this, but whatever, it's funny. That turned like $94 into 400, which was nice. And then I took like, I don't know, like $70 and put it the other way when they were down a touchdown, Cincinnati. And so as soon as they scored that touchdown, I closed it out real nice. And then they went for the 2. Did you see the game last night?
I fell asleep.
Oh, it was a great game, actually.
Yeah, looking at the score, yeah, it looks like a great game. Yeah,
Jamar Chase had like 200-something yards, dude. Like receiving, it was crazy.
My parlay was Burrows throwing for 2, got that. Derrick Henry,
he's a lock for a touchdown every game.
For a touchdown. Ravens to win. And this is the second time this has happened to me this year, and it really, really pisses me off. I had Lamar scoring a touchdown.
So close.
So close. Literally on the goal line.
That was a hell of a play, by the way, man. Oh my God. That was like a video game, bro.
The second time I've been screwed by something like that. I'm like, you know what?
You know what? You deserve it. You deserve it because you said Lamar wasn't good 2 years ago. You deserve it. Yeah, that's what you get. That's what you get.
I said he's not that accurate.
You said he isn't good. You said he wasn't good. That's all I heard. And now what? 2 MVPs this dude has. He's the man. Lamar's the man, bro.
Stand by it.
I love him because he's my
football. Hey, speaking of football, if you're in the Kansas City area on November 23rd.
Yeah, what's going on in Kansas City? Is it a tasty show?
For Super Bowls, man. I'll be playing at the Kansas City Convention Center. Come on out, 11 a.m.
Kansas City Convention Center. Is that the KCC? The KCC. Josh is going to be at the KCC on Saturday. What is it? November 23rd or something like that?
November 23rd, yeah.
See, we boys. See, I knew.
Yeah, you wear Bear stuff to the office a lot to support me, and I appreciate that.
Okay. I had a couple of earnings trades on. I'll go through it. Not only like 2 of them worked. So I just had straight up calls in Pinterest. Obviously, that did not go well, but it was like $200 a premium. I'm fine with it. AFRM was another one. Holy cow. That didn't. Oh no, not this one. This one I had. I had some upside. The 60s. That didn't work. But what did work was Upstart. Upstart worked to some degree. This thing really, I thought it would go, but holy cow, it went even more than I thought. I had the 65 and 70 strike. It went way above that. Big time. Yeah. And then Expedia was the other one. It kind of came in flat. I had the 190 strike, it was up there 180s at one point in time, but it didn't fully. I'm down like maybe 16 cents on. I paid 50 cents for those, so kind of rounded out the week for me. Other than that, oh geez,
this week is there Nvidia's?
Probably.
I don't remember.
Nvidia's. I think in 2 weeks maybe.
Yeah,
the 20th or something like that. Yeah.
Here's my question with earnings: you just play them straight up to the upside, because
that's all I've been doing.
Well, that's what you've been doing, but now
half of them have worked.
Yeah.
Yeah, I mean, I think when you have a bullish market and the first couple of earnings come out, work well in the market. That's why I've played pretty much all the. Only one that I didn't play the upside was Google, and that didn't work out well, because I played downside and Google went up. But most of the earnings I played have gone up. I'm probably like a 50% hit rate on some of these earnings that this past time around. Mostly all have been calendar call spreads, and a lot of, I mean, like I said, maybe like 40% have worked, which has been fine. Like I would say I'd cover, I'd have to look to really see how well I did this time around, but feel like, most of them worked out pretty well.
Yeah, I think just given the momentum of the market, if I were going to trade earnings, anybody, I don't care if I don't care what the sector is or any of that. I'm probably playing it just for an upside move because I think that everybody's just going to find a reason to be enthusiastic.
Yeah, no, I totally agree, and I think that's largely what we've seen more recently.
Yeah. So are you doing anything position-wise, like for sectors? Are you looking at stuff like
not even to like try to anticipate like where things are? No, I'm not even. As a matter of fact, it's funny. I just kind of had this epiphany today. I'm thinking about. That's why I was talking about that one. The sort of trade that I have. It's a mini dispersion trade, I guess. But I'm thinking about closing some stuff down and just kind of. I mean, I just feel like fundamentally a lot of things have changed. And I was halfway thinking about closing a lot of stuff down just to sort of reset and recalibrate to get an idea of what's going on. So,
yeah, I hear you. I think I'm going to take some stuff off as we get towards the end of the year.
Yeah,
and I want to just have. I mean, I'm not that particularly heavily invested right now, but I think I still want to build up my cash position as we get into next year because I just sort of want to see. I think there'll be some favorites. Like, I mean, this is it's not a judgment. He's a transactional president, though. And so, I think that you can see some potential areas where that are going to benefit. Like we've seen with the private prisons, what is it, GEO, like stuff like that. There's certainly some anticipation that he's going to use places like that to help advance his agenda. Tesla is clearly people think that I don't know what they think. Like,
well, out of all the things, that's the one I can the prisons. I mean, maybe that happens. I don't know. All these other narratives, I don't know. But Tesla, obviously, that one is just one of those where obviously, Elon's aligned with them, and so people are expecting things. What's crazy? I actually
is that what
stock was like 304, 305 this morning. I was looking at these calls. They were super cheap. I mean, you could have had as many as you wanted at that level, and they were like really cheap.
Remember when we were talking about it at 180?
Yeah.
Should we buy
it? Was that this year?
That was August.
It was in April. Yeah, that was April.
For April.
Well, it was probably 180 August, but I mean, it was. It was 182 there. Yeah, on that time.
So are we going to see? Is that going to be what we're going to see?
I think we were talking about it here too. Like we were talking about would you buy? It was scary at the time. Right?
Yeah, two opportunities, and both times were like we talked a good game, but then when it came time to pull the trigger, maybe not.
Yeah,
but I think it's
a volatile name.
Are we going to see Tesla tanks? Are we going to see like Tesla federal vehicles? Is that
very possible?
I mean, this is a crazy. Of all the things that I've watched move since the election, this one. Like, because it's such percentage-wise, it's not as big of a deal as some of the other ones that we've seen. But because it's an expensive stock to begin with, so I don't know. I do not know.
Yeah. I mean, it's well, if this thing is going to keep going at this point, it's going to be really hard to play it. I mean, for a move, because vol is up in here. This name acts like it acts like gold when it's going up. I mean, it gets bid to the upside, and so it's just going to be hard to sort of make a play on it, honestly, if it keeps going like this. I mean, look at that, 56, 57, 58 vol to the upside. Wow, it's exploding. It might even be higher next week.
Looking for questions in the chat.
There's not many. People are exhausted, man. It's been an exhausting week. They don't have any questions.
No.
They're done. No. Yeah, I feel like this trading year might be done, man. I don't know. I feel like bonds are still interesting to me, but I feel like stocks, equities, I don't feel like it's as interesting. And I feel like I need to unwind my trade. I might end up doing that.
I think
the more I keep talking about it, the more I might do it today.
When we started, you were thinking about it. By 2:15, you're like, I'm out.
I don't know. I don't know.
Yeah.
I don't know how much more juice there is to squeeze out of it.
I don't know. Yeah, I'm with you on that. And I think that this is I don't think you need to overtrade this market. I don't even think you need to, I think you can put on a position and just kind of give it a little time. I mean, I just think we're going to trend higher. I really firmly believe that, which means we're definitely selling off. But
quite possible. Maybe it'll happen on Monday. We'll be on the show. We'll be talking
it's
about
probably going to happen on Monday because now that my SPX trade is completely gone.
Completely
I
gone.
can't
Mine
believe
too.
that. It looks like such a good trade on Monday too.
Yeah, well, vol was high, but yes, the move was even higher, I guess.
Quite a bit higher, actually. Yeah. Oh.
Folks, that's our time. Thanks for watching, and we'll see you on Monday. As always, be smart, trade them small, and trade them often. We'll see you.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Hello, everybody. Well, it is the end of one of the biggest weeks of the year. This has been a week full of lifetime highs, a historic election, a not historic FOMC meeting, and it's over. We've got another green day, a lot of lifetime highs going on. I'm completely short, and I'm actually up for the day, which is a nice contradiction, it seems. Got a lot of charts loaded for you, and I'd love to go through them. So let's bang them out, shall we? And get into the weekend. Here's a spider. Uppity, up, up, up. It has been, Monday was just kind of a nothing. But Tuesday, Wednesday, Thursday, Friday, all blasting higher, as you can see. When's it going to stop? I don't know. It's there's as I say so often, new highs beget new good high, new lifetime highs beget new lifetime highs, and yeah, I suppose we could look to this trend line as an eventual tag for resistance. I'm focused on individual stuff myself, not the very broad market. So yeah, anything goes. It's if you read any of the mainstream media, it's only just beginning. Here's the diamonds, lifetime high also, and once again, nowhere near any kind of meaningful drawn object. Like take Tesla, for example, which we're going to see a little bit later. It's chock full of goodness in terms of drawn objects and good targets for support and resistance. It is a delight. Stuff like this, I just shrug my shoulders at you because lifetime highs, they're a tough read. IWM, same deal. We're blasting higher. We are above this base. And, psychologically, I've got to believe that the zeal behind this election result will dissipate at some point, maybe even as soon as the end of this week. And it'll ebb and flow. But it's certainly not a surprise to anybody anymore. But there's a lot of squeezing going on, especially in certain sectors that benefit the most from this result. As we look at the cubes, they're also at lifetime highs, although not that big of a day here. I mean, the incur right now is up 0.03%. So pretty melancholy compared to, say, the RTY, which is up 0.6%, 20 times more than that. So yeah, the cubes are just kind of hanging out. And you can see why. I mean, like, look at some of the mega caps. Like, here's Google. It's nowhere near lifetime highs. It's near this earnings peak. There's a meaningful amount of resistance here. It's plus, I guess in the background, it's like this may not be a friend of the administration later on. NVIDIA, intraday lifetime highs, but it's just kind of stalled out. I mean, it's actually down more than 1% right now on a day screaming with a lifetime high. So it seems kind of fully valued. I mean, how much more juice can you get out of a $3.6 trillion lemon? And you can see this reflected also in SMH, the semiconductor ETF, which is again near this level, which we peaked at and retreated in mid-October. If we get more strength, the next logical point of resistance is this gap. I don't know if it'll muster enough strength for that or not, though. So as sanguine and delighted as the U.S. is, not so much overseas. Here's EEM, the emerging markets, down 2.5%, just plunging away. They tried to sail on some of that post-election bliss for a couple of days. Didn't last. There's a bump on Wednesday, a bump on Thursday. All of that is gone. We're at levels now, like prior to any of the results, like prior to even voting starting on that day. So all that red U.S. victory overseas, enjoyed it for a couple of days, completely gone now. You can see this reflected in my old buddy Brazil, EWZ, down about 1 2/3% today. Our giant Head and Shoulders still banging out little by little. It's a lovely beast. Now let's get to Tesla, one of my favorite stocks. It is such a chart-friendly stock. What I mean by chart-friendly is that it behaves itself. Like Royal Caribbean, I cannot make heads or tails of that thing. I have burned my hand so many times on that handle of the frying pan. I just don't bother anymore. I've actually made a note on the symbol, don't trade this. Tesla, on the other hand, is nicely behaved. We've got this trio of Fibonacci's that I refer to every single time. Why? Well, because they help. They are vitally important areas of support and resistance. And in this instance, we've got long-term, I've pointed out, with a target of 460 on this bullish pattern. We had gotten, our nasal passages clogged here amongst this trio of fibs. We went blasting high after the election. It hit this fib, and these fibs, they sometimes cluster together tightly. Other times they're spread far apart. This was a spread far apart. He's very lonely. He's all by himself here. So it offered very little in the way of resistance. Then we zipped up to this pair, his other two buddies. Check this out. Let's zoom in nice and tight. What is this level? The red line. My blind eyes can barely make it up. Good heavens. All right, here we go. The high today. Get my white cane out. 328.60. Is that true? Seems hard to believe, doesn't it? Honestly, I can hardly believe my eyes. All right, hope I'm not going crazy here. Yeah, that is astonishing. And way up here, 328.32. It's like almost exactly like 99.99% accurate. And so it hit that, and it's down about $10 or so from there. Yeah, amazing. Just amazing stuff. Absolutely eye-popping. I've gotten a bunch of emails from my readers saying, thank you. Nailed it. So those fibs are so helpful. What else? Burned up 8 minutes talking about this stuff. Let's go on. Palantir's another friend of the administration, Peter Thiel. Lifetime high on this, up literally about 1,000% over the past couple of years. No joke. Private prisons. Still doing well. It sounds grim to say, but this is the cold fact of the matter. These stocks keep accelerating. It's off the highs today, but this is just, even looking at a multi-decade chart, the past 3 days they stick out like name a prison metaphor. And then Geo Group also is up, and here too, blasting the lifetime highs. Now China. We've been waiting for the big bazooka, the stimulus package. It came out, and it's measured in trillions, and nobody cares. Because we look at FXI, down almost 6%. There's your big stimulus, right? Stimulate. Down it goes. So we've got support down here, resistance up here. And I suppose yesterday we got this huge lift in breathless anticipation of how much the communist dictatorship would help out the stock market. And they opened the floodgates of money, and the market has rolled its eyes and walked away. So yeah, down hard on the FX side. And of course, individual stocks, JD down about 7%. YUMC down 3.3%. PDD, my favorite, down 6.4%. Not pretty. Now, let's spend a little time with just some odds and ends here and some chart lessons built within this. Costco. Now, I had mentioned about a week or so ago that the reason I had a put position here and I got out because, I don't know why I got in the first place. Because as I said, historically, this thing always disappoints the pairs. It always pleases the bulls. It looks like it's like a fake out. It looks like it's about to fall every single time. Round the top, Round the top, nope. Round the top, true to form, look at that. Blasting higher. We're trading right at the trend line now. It actually was so strong, this shadow up to the high got outside the confines of this lifetime, and I mean lifetime channel. But look at that. Is that something? But this is why. Not all charts act the same, but they express their personalities through history. And Costco's personality is, yeah, I may look like I'm going to fall, but I never do. So just based on that simple fact, I'm like, Timonite, what are you thinking? You're an idiot. Get out of this thing. And I got out at a tiny loss instead of a horrible one. Here's our old egg producer friend, Calm, lifetime high. One of our longest bullish ideas, just keeps on keeping on. Same with Intuitive Surgical, lifetime high on this one. Up. How much? $13 and change. Uniform maker. These are so funny. Some of these biggest winners. Cintas Corporation, CTAS. Virtually, and there's like not a downtick in sight for the past 15 years. Just 15 years of selling nurses and police uniforms, just up and up and up and up. This has gone, it's astonishing, from $4 to $226. So I guess there's a lot of uniforms out there. FICO, Fair Isaac, also lifetime high, also just an unrepentant climber. This has gone from $12. It's like beyond belief. Because, people talk about NVIDIA and Tesla and so forth. It's like these dull as doorknob companies that just put the NVIDIAs to shame. This is unbelievable. Not just because of the percentage change, but just because how long they've been doing it. So 15-year bull market on this has taken it from $12 to thousands. Jeez. On a little more mild note, you and I have talked about Toast as a long idea. It's been doing well, but it did really well today. It's been kind of climbing slowly. You and I have discussed this base down here, and since it's emerged, it's been just kind of quietly and calmly and slowly working its way up. And then it put on its rocket shoes and it jumped higher today. And Sophie, SOFI, we have not talked about this, but I just wanted to take note that it also has jumped to a multi-year high on SOFI. Still going through some lessons here because there's object lessons all over the place in terms of chart behavior. In-phase energy. This is a situation in which you could call it a fractal, you could call it an analog, but it's simply a situation where you have a miniature version of a pattern that has taken place in the chart already. And you can see what I'm talking about here. So this pink pattern here is this gigantic thing, and then this little brother right down here in blue. And post that, this little guy, we fell, we retraced back to resistance, which is this blob of overhead supply, and then it fell hard again. So this is behaving itself very, very nicely. Another good example, same idea. Archer Daniels Midland, ADM. We have, going back to the whole personality thing, its personality, unlike Costco, is that it actually follows through with its tops here and here and here and here. And this one's this funny little situation too, where you got a little brother down here. So we had this massive head and shoulder, plunge, retrace, But in the act of doing so, it formed another cute little pattern here, almost the same thing. They're like mirror images of one another, and it too is falling down. And I think this is so well formed, it could well ultimately, best case scenario if you're a bear, get all the way down to this major support. Take it a day at a time. Which is Unity software, also peeling away nicely from its own topping pattern that you and I have talked about over and over, with me emphasizing how you don't have to be at the top of a chart to be at the top of a chart. You can be at the bottom of a chart and have a topping pattern, as paradoxical as it may seem. And one last example, Gray Television, GTN, huge area here of distribution, 11 years big, really breaking down away from that. So in closing, now that we're out of time, bonds, what did I say yesterday? Over the course of this week, we looked to this line as support. It hit it to the penny. We climbed, and what did we talk about yesterday? This line being resistance. Well, goodness gracious me, look what it did. Got very close to it, and it's sort of stalling out. So I think that this will resume its drop next week. And remember, although we're past all these fireworks, we've got a CPI and PPI on Tuesday and Wednesday, and that should shake things up. So thank you for sharing this week with me. I hope you've done all right, and I will see you here after the weekend. So see you on Monday. Bye-bye.
If you missed the live show, here's our cherry on top yearly recap.
I bought a Westinghouse TV for my gazebo outside.
Oh, look at you!
Yes, and I put up Roku. I would watch the game. I got my apps
So
all
you're
done.
outside in your pull-up?
Yes.
Can you see it from the hot tub?
Yes,
Wow.
yes.
Are you going to invite Tom over?
No.
Yeah, that's going to... There's a spider on my desk. No, kill it. Oh my god.
Where is it?
It's on my microphone.
I don't see it.
Thank you, Bat, for coming to my aid.
You're welcome.
And Tom, where's your firecracker popsicle?
Yeah, really.
When did you see that?
On every single Zoom call you've ever been on, you're pounding
I didn't want to spoil
firecracker
it.
popsicle. On any Zoom call I've ever been on with you, you've got a firecracker popsicle, rocket pop, and you're not just like licking it, you're literally like biting it off of the thing.
And I don't know who was taking pictures of me.
Anton, if somebody's on a Zoom call and somebody's eating a rocket pop and they're just like biting into it, somebody's gonna notice and somebody's gonna be like, what is going on here?
I'm doing this just for you this one time.
Yeah, you got to put it against your white shirt. There it is.
It's disappearing. You see that? All right. There you go. No, that's all you get.
Oh, but getting back to our soda machine, excuse me, which does work. It's the greatest feature we have because it makes nice ice cubes, and
Got a lot of reports. It's out of syrup by 9:30 in the morning.
I just use it for the ice, and then I get water.
You got
water
ice?
filter.
Don't be showing off. Don't be showing off.
Do you know what kind of ice we have?
None.
Mid ice.
He learned that on TikTok.
I learned that yesterday. That was my whole lecture. I got lectured.
Mids.
I said,
hey, the ice, it ain't bussin'. I'll tell you that much.
I said,
Mickey,
I said we have ghetto ice here, and I got lectured. And I go,
You should get lectured.
We have mid ice.
Yeah, no cap on that.
So does Tom get to take his paw and stick it with the scoop, or do you just go in and grab it? See,
There's a cup right now. Wait.
Hey, it's not a cup, it's a mug.
No, that's right. We have a ceramic mug that chips off on the ice that you can use, but Tom's already used his hand in all the ice.
And that mug,
nobody thought about putting a plastic cup in there or something like that. It's a ceramic cup with chips in it.
It's one of the old mugs from like 12 years ago.
Oh my God, has anybody died here recently? Has anybody died?
The ice is so old; it has like that like old ice smell. You know, like the ice that sits in the refrigerator or the freezer.
Mold.
Like it has like kind of that stale smell to it.
Burn.
Yeah.
Freezer burn.
Yeah, exactly.
Yeah, the ice is freezer burnt. Yeah.
That just means it's colder. A little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
Do you want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not Empirical Ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means, my friend. Time to reminisce about the day. Sadnov, even the S&Ps don't seem like much, up 18, but we're 6,022. We were about 18 handles higher than this today, and we've had a run of 4 days of biblical proportions. NASDAQ down just about $7, but it too has been on a run. The Russell, no breather today, Sadnov, up another $12, about a half a percentage point. The Dow up 225, and they're all off of their highs, mid-range for the day. Volatility, which was in earlier today by about 40 cents, is up a nickel. Bonds are up 23 ticks, Sadnov, back into that 117.26. They were over 118 to 118.11. That's a good point and almost a half rally off of the lows in bonds. Bitcoin, well, it's the big story, Sadnov, because since the election, I think Bitcoin's up around, I know coin's up 40%. Bitcoin's up huge too. And I'm talking about the Bitcoin Cash trading 77,900 on the high. It's 77,100 right now. Oil up oil down $1.80 and change. Gold down $11. Sadnov, what say you? Oh, by the way, Tesla, Elon made a very good play. Tesla up $23 and change to 319, but you can see before the election it was 240 and change.
Then he won't mind buying my car back at a good price.
You would think. Tesla's up 29% since, almost 29. I'd say call it 25% now since the election. That's crazy. Coinbase is up almost 40%. Small caps are up 6%. Banks are almost up 10%. Big moves.
It sounds like you are doing a promo on CNBC right now. Thank you.
No, I should have mentioned that oil is down 2%. All I'm saying is commodities down, market up. What's the gas up?
Yeah, I all I would say is that
all I would say is I'm glad you took my warning and waited till Monday to sell anything in the market.
I got short today.
You just want to be early because you like to be early.
No, I got short right here. Little tiny bit higher. I sold just call spreads in the SPY, nothing big. I mean, I sold a bunch of them, but nothing like crazy, loading not selling 100 futures type thing, just a small little short, some call spreads, gave myself some short delta for next week. You know what happens when I'm on the road,
Sure.
Like I always miss the crashes, that kind of stuff, so even though I'll be trading, I don't want to go back and forth and I don't want to scare the children on the road. So I got a little short today. It turned out to be a good day only because we caught the bonds. I sold a lot of our bonds and notes at the high of the day. So that was a good trade. We got caught in Tesla.
Don't hurt yourself. Don't hurt yourself patting yourself on the back there.
Yeah, well, before I pat myself on the back, I say I got killed in Tesla today. That was my big loser.
But you want to know something? You probably got back half of your Tesla losses in the last hour or so because they creamed volatility in Tesla the last hour. I rolled up puts when the stock was up $30. I rolled up, I think, 4 times in Tesla today. My last roll up was when the stock was up $30. It's up $25, and I rolled up.
No, I didn't get anything back. No.
Oh, I got half mine back. You must have a really crappy position.
Yeah, I do. I'm not gonna sugarcoat it.
I rolled up when Tesla was $5 higher than here. I rolled up $10. I rolled up from 290 to 300 for $3.50. It's $3.48 right now with the stock $5 lower. I was rolling up puts. It's got to tell me that they've crushed volatility a little bit, or maybe they just took it out of the calls.
Maybe my stuff didn't move, but yeah, Coinbase and Tesla were big losers. Everything else was pretty good today. I would say the rest of the day we got a lot of winners on the board, but those are the 2 big losers. And I don't like my position for next week, but it is what it is. Everything else I think we're okay on, positioned okay.
Now, Sadnov, I know it's random, and I know you're going away this weekend, but do you brace for the impending imploding or exploding of the market because you're leaving? I mean, it's uncanny how much it happens.
Well, I really hope the markets are busy next week because there is nothing worse.
Because you want to see the clinic that Nick Batista and his dad Tony Batista are going to put on.
Not even remotely. I won't watch 1 minute of it. But
well, you're not going to watch, Sadnov. You just know the viewers are going to watch and they're going to have a great time.
I'm doing a live trading show. I want action, and I'm doing it midday. And if it's like watching paint dry, it's very hard. Today, I will tell you that I thought today was very tough for fills. Like yesterday in the morning, I thought fills were like flowing. It was great last couple of days. Today, because I think things slowed down, I felt like it was a little harder to squeeze out some trades. And I thought trading was a little bit tougher today, just because I don't think the markets were quite as liquid as they were yesterday.
Yeah, I don't know. Even the S&P's only 884,000, Sadnov. So yeah, that would kind of
doesn't that kind of agrees with my like.
Yeah, I was gonna give you that. Yeah, I was gonna say that kind of goes to your story is what I was gonna say before the middle of my sentence got in the way of the beginning of yours.
What's weird? What's weird is I know that when I was taking off some Apple positions because if I remember correctly, the Apple IVR dropped down below like
13. Sadnov. We think alike, right. Sadnov. You know what? We might not be in the same body, thank the Lord, but we think alike because I took off an Apple position today. IV rank was down to 13. A trade I've had on since June 6th, Sadnov. I finally got to a pink scratch, not a green scratch, but a pink scratch.
Well,
after
I had sold some strangles in Apple when the IV rank was like in the 60s, 50s, and 60s.
You probably did good.
Yeah, I did good. So I waited till today. But
of course you did, Lord. Of course you did.
Here's why I know it was slow. I got filled. It wasn't that big an order. I got filled on partials at like 3 different prices, just closing a strangle. And when that happens, that's like if you can't get fills in Apple, you're not getting fills
at one price with however many contracts you have.
Exactly. It wasn't that many contracts.
Right.
And
but I mean, you know what I'm trying to say. I'm not saying thousands, but you should do 10s and 20s. You should get filled. It's freaking out.
I was getting partials like 2s, 3s, 4s, 6s, that kind of thing. It was crazy.
Right.
And so I was like, all right, this is stupid. And I also I felt like it was a little I felt Coinbase was tougher today. I felt Tesla was a little tougher today. Tesla was really liquid. But outside of that, like Apple and some of the other big name stocks, I thought they traded a little thin today.
And the Chinese stocks continue to go down, right? Baba's down 5.
I didn't do anything in there today. I did not reload in China. I did I did roll down some calls this morning, but I didn't sell any more puts or do anything. Anything that was weak this morning that I sold puts in, like ENPH and Moderna and stuff like that, it just got weaker over the course of the day. There was no bounce back at all.
Yeah. ENPH down $4.44. I believe the low was close to $65 and 65 and a half or so. So it is $1.50 off of its lows, but still, this stock, no bueno.
Yeah, and if you want to see really how ugly China was, say, look at FXI, because for that stock to move, almost 6%, 5 or 6% in a day is really a lot. That's a large cap stock, large cap index.
It's got a 30% implied volatility. I mean, it's not supposed to move that much at all.
No, I know. It's down almost $2. I didn't touch it today. I did look at it a couple of times, and I thought about those 30 puts, but I don't know. Maybe we'll wait till Monday and see, see if there's any follow through to the downside.
Gotcha.
I don't think there's. I think the biggest story today. So the last 3 days, the S&Ps were up 150, 50, and then today they're up 20 more. Let's just say they were up 37 or 38, but they're up 20 right now. So you've got 220 points, which is essentially, it's a perfect 4% move, basically, to the highs today in just the last 3 days. That's the kind of thing you have to be awfully careful about. Now, that's not the only move, but that's just the move of the last couple of days. Sure. You mentioned yesterday, the move in its totality is actually a little bit more than that. Let me just pull it up really fast.
250.
Yeah, it's 250, and it's not as steep as the bond move was when the bonds had that like 9 out of 10 or 11 out of 12 days.
Well, it's only been 5 days, Sadnov. It's hard to get 9 out of 10 or 10 out of 11 when it's only 5 days.
I know. Well, actually, it's been six days in a row. But anyway, my point was that the stock market's a little different than the bond market because stocks are different than bonds, and the streakiness is a little different in commodities than it is in stock indexes. But when you get to 7 and 8 days in a row to the upside, you usually get to a point where,
at least you go sideways.
You go sideways, or you get some kind of, you might get some.
Yeah, of course.
Yeah,
it's natural. Yeah.
Yeah. So anyway. So you know where I'm thinking.
You're thinking it's time. You're like Michael Buffer.
I'm thinking next week it could get interesting. Could get a little interesting. That's all. You got bonds back to 118. So those things are no longer grossly underpriced. They're still cheap relative, but they're not gross anymore. They were gross at 115 and a half, 115.20. They're not gross anymore. They're just still oversold, but they're not gross.
Yeah.
I'm going to be listing out things. I'm going to send you on Sunday night. You're going to get a list of like what's Tom thinking, but you're the only one who's going to get it. So you know what I'm going to be doing, so you can watch. But I don't know until the actual day.
Sadov, now that I'm in charge, since you'll be gone next week, I might set your account to closing only. Just for your own good. I don't want to see you get hurt.
Beth's in charge. Okay. You're just, the only thing you're in charge of is, well, I would say you're in charge of lunch, but you're not really, because then, no, you're not really. So
I gotcha.
And I'm going to rate today's lunch, by the way, as probably the best lunch at Tasty.
Really? What'd you have?
Gigi's Chicken.
Okay, another chicken place is now the best place. Every week you have a new chicken place that's the best place.
It's really good, Tony. It's a life change. It's life changing.
Well, they had to make up for what they did yesterday. What they served yesterday, you don't even get that kind of food in prison, and I know. Okay,
it's life changing. It's life changing today. So you missed it. But I'm all excited.
I think next week while you're gone, because I can't get this pushed through when you're here, I'm going to start a new podcast. Maybe I'll do it in the middle of the day. Maybe I'll bump Dr. Jim or something like that. I'm going to do a show where I'm going to allow people to watch me like fix your trades, like manage your trades that you do. You know what I mean? Like, I think that's what I'm going to do. I'm going to do like fix Tom's trade.
Unfortunately, there in the UK, you're not allowed to post trades. So there is no follow page in the UK. So they don't
I understand. I'm going to be taking the ones that you've done here in the US, Sosnoff. No, I don't need your new trades. There are plenty of old trades that I can work with. I've got years of content.
You should, because then you'll have your first winning week in a long time.
Oh, my friend. I can't wait.
Think of next week as a vacation, okay? You got a big vacation. All right, let's think. So if you participate in the show Sunday night, this Sunday night, it'll be Victor Jones with his team of merry macro monkeys, Vecchio and Ilya Spivak, Chris Vecchio, and Pete Molmat will be there to save the day, along with Victor. So that'll be your Sunday night show. And next week, Tony and Nikki Bat will be doing the show all week with a bunch of special guests coming in and out of the show.
Gonna be good. Can't wait.
Yeah. Yep. I can't wait either. I'm gonna try to log in. I'm gonna try to join the show every once in a while.
No. Listen, if you want to log in to learn something, but don't log in to join the show. We have plenty of content. We don't need you. We're okay. You go enjoy yourself. You go enjoy your haggis or whatever that you're gonna eat in a special place. you go be bougie somewhere else. We'll do the grunt work here. We'll keep everything going.
I'm going to be on a train like one of those days, and I'm just going to log in, and I'm going to be so excited to be part of the show. Don't you worry.
Listen, you only call in if your backpack gets stolen or you leave your beret someplace, because that's usually what you do. One of the two things happens.
If I leave my beret somewhere, I'm in trouble. I got no backups. I got nothing.
Are you bringing some treats to the UK?
Whatever we can fit in the suitcase. I don't know how much stuff we have. A bunch of giveaways there, but we'll see what we got. And that restaurant that Vanetta talked about this morning as being the third best casual eating spot in the world.
Yeah, that's what I was alluding to. Yep.
Oh, it's 2 blocks from my hotel.
I know. Yeah, that's why I know you're going to be there. I know you'll do something for the gram.
Oh yeah. Well, I don't need to. Brittany will. She's a grammer.
This is true. You don't. Yeah. She will take care of you with the gram,
she'll
for
take
sure.
All right. So I'm going home this weekend with probably my biggest short delta position in the last couple of months. This is what I do when I'm away.
I'm gonna have to revise my play then. If this is as short as you've been, that's not good. That's not good. It can't happen when you're all set up for it. That's bad for me.
This is as short as I've been in the last couple of months today. My theta numbers are down a little bit, so it's not really that much risk on. It's more just directional risk. I don't usually do this, but I have for this next coming week because I think it's time to get a little pullback maybe. And that's kind of it. Theta numbers down a little bit, extrinsics down a little bit, delta's up a little bit, meaning I'm shorter than usual. And we made about 100 trades today, so I'm ready. I'm all locked and loaded.
You were definitely active today. It was in spurts. Yeah. It seemed like it. I was the same way. I took off my Apple trade. I did an interesting roll down. People got a little bit confused by it. In Baidu, can I show it to you just to visualize it so people know?
Yeah, sure. What did you do?
Okay, great. In Baidu, I had the 90 put, 95 call on in Baidu, and when you take a look at this, trade, let's go back here to change this to. No, I'll just change to open interest. Well, I should really change to open interest. I should put it in percentage of the money. Okay, perfect. So I had the 90, 95 on, and I wanted to buy the guts and sell the wings. So since I already was going to probably stay with something short like the 95 call, I just bought the 90 put that I was short and sold out another put, say like the 85 put.
Okay.
By doing that debit spread, that makes me short the 85-95, which essentially is buying the guts and selling the wings and only having to do one side. And I got a lot of emails about it because I posted on the follow page.
You just bought it. It looked like you just bought a put spread.
It looked like I just bought a put spread, but I said my position that I'm left with is a shorter strangle, the 85-95, but a lot of people couldn't get it. So I'm glad we had a minute here just to show that you don't always have to buy all four legs, especially if you're going to keep one of those legs there already. That's all I was trying to say.
Yeah, most of the time I do all four legs just to keep it like symmetrical.
But you're not. You're more like near a straddle or something like that, right?
Yeah, Yeah. My only issue with Baidu is that it's not. They only have $5 wide strikes, and like Baba has, I think, $2.50 wide strikes, but Baidu only has $5 wide strikes.
Yeah, in December. That is correct.
December,
I was showing you November or one of the weekly months. I clicked on the wrong one, but I'm in December with $5 wide strikes.
Yes, they have $5 wide strikes, and so it's a little bit thin. There's not as much to do in there as you would like.
Mm-hmm.
I think you wait until
you wait in 7 days. Sadnov, you'll get next at the expiration, you'll get new strikes that Monday.
I actually like China here, but I'm not really long it. I'm waiting. I think they're going to maybe have one or two more down days where they kind of step on a little bit before China, steps up and does something. So I kind of think they're interesting here for sure, volatility wise, but I'm not really in it. The best play might be FXE. I'm sorry, FXI, but I don't know yet. I'm going to wait and see.
Yeah, FXI is a tough one for me. I like the individual stocks in China.
I agree. It's tough.
Well, you just said it was the best play. Now you can't agree with me, okay? This is the time when you don't agree with me. And by the way, I sent you the proof. I sent you the proof about Martha Stewart. I don't see my $20.
That's right. I meant to send it to you.
Did you mean to send that? You forgot. Like that you forgot about.
I meant to send it to you.
I sent you an email proving it, and I ridiculed you on the show.
I mean, since you've been so good about paying me lately, I will pay you. I'll do it right on air.
You would have. I had watched the show, and by the way, people, if you weren't tuned in earlier today, if you want to watch a great show, watch Martha on Netflix. It's a great documentary. It's a lot of fun. You'll see a lot of similarities, not only in her gait, but in her attitude and persona. Sosnoff is definitely a younger, although not be it by much, Martha Stewart, 100%.
All right, check your Venmo. You got paid. Stop your crying.
Yeah, I did. Man, oh man, not an easy pull for you, right? Those little arms going into that deep pocket. Not easy for you. It's okay. Let me see. Well, last time you paid me, you underpaid me. Did you underpay me again?
I should have, but I didn't.
No, you didn't. You didn't. There you go. You did pay me. All right, beautiful.
All right, what's your call for next week? Let's go before we run out of time.
Sadnov, I've been calling it for 3 days. I think next week you get your soft week in the market. Next week we will be under 6,000 for sure. I mean, where doesn't matter, but we're going to be under. He said with a lot of confidence, knowing it's a 50-50 shot.
Okay.
What about you? Please don't agree with me. Get on your own corner, okay? I've been saying Monday since Wednesday.
I thought we would head down today or yesterday a little bit, but next week I'm not sure about Monday, but by Tuesday or Wednesday, it could get a little ugly for a day or two.
Okie dokie.
The bloom will come off the rose, and it will be a little ugly.
Okay.
I don't think we're crashing.
I mean, there's nothing to indicate that. Volatility's 1555. I mean,
yeah, I know.
It's in no man's land. That's the average. I mean, no big deal one way or the other there. It's not low. It's not high.
Yep. I just think we've seen good two-sided action in gold, in crude oil, in volatility, in bonds, and we haven't seen any two-sided action in the stock market. So I think we're due for some two-sided action in the stock market. It's going to play catch up a little bit.
Sosnoff, as a gift to you, a parting gift for you going to Scotland, one of the best courses there is the Trump International course. I actually got you a bucket of balls there. I know you don't have time for a full 18 or even 9, but I did get you a bucket of balls on me, especially since you paid me now. It's under your name. It's just waiting there for you. Let me know how it is, okay?
Yeah, we're going to have dinner there, so I'll let you know right beforehand.
I bet you will. Sadno, we got less than a minute here before the market closes. I want you to have a safe trip, my friend. Say hello to my new UK friends there. I know I'm very popular in the UK. Say hello to Angeline for me. And everybody else on the team. Sadno, do me one thing, please. Don't be yourself. Don't embarrass me. Peace.
I'm going to embarrass you from bell to bell.